Sir, very happy morning to all. Sir, we are going to start the workout batch for the DT. What is the agenda of the discussion is very simple. We will be doing lot of questions. Lot of questions in the sense means we will be nearly discussing about 550 pages. More than 400 questions we will be discussing. Sir, if you are studying first time of DT, it is very difficult to cope up with this batch. You should be a repeater, or at least you should know studied once the provision, only then you will be able to cope up the discussion. But whatever topics we are discussing, I will give a quick recap of that topic. Then I will be solving the questions and I will moving into the discussion. The first thing, the first chapter is the basic concepts. That means in tax, how to find out the residential status, how to find out the tax liability, that and all called as basics concepts. That's what we are going to talk about in chapter number 1. This chapter, generally, everyone will avoid this chapter because, sir, this is basics, how to find out the residential status and all. But from this chapter itself, you will be getting a 10 mark from 50 mark. Computation of residential status is a sure shot 6 mark question for exam. And also computation of total income is a mandatory 4 mark area for exam. That is not optional, that is mandatory. So my dear lovable students, I will just revise the contents of the residential status for 10-15 minutes and will be start doing this many questions from this chapter. Nearly we are having 27 questions from the basic itself to solve. Fine. Sir, basic concepts. First, we should understand the residential status. What the residential status is all about, how to determine the residential status, why we are talking about the residential status. First of all, what direct tax or income tax is doing or saying that, first, from whom tax has to be collected, how much tax has to be collected, that all depends upon residential status. So, for the purpose of residential status, my dear lovable students, an assessee should be classified into 2 categories, individual or HUF, or other than individual or HUF. So assessee may be individual or HUF or other than individual or HUF. If an assessee is an individual or HUF, that assessee will be termed as either resident or deemed resident or non-resident. That means if the assessee is an individual or HUF, 3 classification are there. We will give the label that you are a resident, you are a deemed resident, you are a non-resident. If you are a resident, we will be further digging into resident and ordinarily resident, resident but not ordinarily resident. So resident again classified into 2 categories, resident and ordinarily resident, resident but not ordinarily resident. So assessee should be classified into 2 categories. Number 1, resident, deemed resident, non-resident. Sir, resident should be again classified into 2 categories, resident and ordinarily resident, resident but not. Whereas if the assessee is other than individual HUF, like partnership firm, AOP, local authority, company, he will be further classified into either resident and non-resident. That's it. Resident and non-resident. Sir, how I will determine whether an assessee is a resident or non-resident? Sir, an individual or HUF will be treated as resident in India for the relevant previous year if they satisfy any one of the basic condition. That means basic condition is there. So what we are going to do, assessee should be classified into how many category? 2 category. Number 1, individual or HUF. Number 2, other than individual or HUF. If an assessee is individual or HUF, we will be having 3 tag. Will be classified into resident, deemed resident, non-resident. If the assessee is resident, then we will further dig into resident but not ordinarily resident, resident and ordinarily resident. Are you all really with me? So This deemed resident means, my dear lovable students, government itself saying that this guy will be treated as resident. This guy will be treated as, that's what deemed. He's not a resident, but he will be treated as resident. So, whether an assessee is a resident or non-resident is based upon conditions. Is based upon that conditions can be classified into two categories: basic condition and additional condition. Basic condition and, my dear lovable students, we are having two basic condition called as basic condition number 1 and basic condition number 2. Basic condition number 1 and basic condition number 2. If an assessee is satisfying either basic condition number 1 or basic condition number 2, he will be treated as resident. If an assessee is not satisfying none of the basic conditions, yes, sir. So, as we said, two conditions are there. One is basic condition and additional condition. How many basic condition? Two basic condition. Sir, if an assessee is satisfying any of the one basic condition, he will be treated as resident. If none of the basic condition has been satisfied, he will be treated as non-resident. Right, sir? So this is what basic condition number 1, my dear lovable students. He should be in India for at least 182 days or more. So what we are checking is, sir, very simple, sir. If you take in tax, all the financial year is from 365 days, which is 1/4/2024 to 31/3/2025. So in a year, total 365 days are there. Are you all really with me? If you take the calculator, 365 divided by 2, you just take it. What is the figure you are getting? That's why this number has been mentioned in the act, 182 days, half of it. That means I'm asking you a very simple question. He must be in India for 182 days or more. If you are in India for at least how many days or more? 182 days or more. That means you are in India either for half or more than half in the immediately preceding previous year. That means you are having very good attachment with India. You are having very good attachment with India. If you are having very good attachment with India, you are having part and parcel of India. You will be saying that you have satisfied the first basic condition. If you satisfy the first basic condition, you will be treated as resident of India. Are you all really with me? So that is the first basic condition. What is the first basic condition? He must be in India for at least 182 days or more. So at least half of the financial year you should be in India, or more than half of the financial year you should be in India. If that is the case, you will be treated as resident. Point number 1. Second basic condition. Okay, fine. Sir, I am an Indian person only, sir. All the years, last 20 years, I was in India only. But because of certain reasons, I went out of India. Because of that reason, you are going to say me a non-resident? What government is saying that? No. Sometimes, in particular financial year 24-25, you may not be in India for 182 days or more. You may be in India for less than 182 days. Because of that, we will not only decide based upon the current financial year, we will be checking based upon the immediately preceding previous year. That's what the condition number 2, second basic condition. He must be in India for how many days or more? 60 days or more during the relevant previous year. At least you should be in India for 60 days or more. My dear lovable students, out of 365 days, you should be in India for 60 days or more during the relevant previous year. Plus, it is and. It is what? And. How many days or more? 365 days or more during the 4 immediately preceding previous year. If you take the last 4 immediately preceding previous year, you should be in India for at least 365 days or more. That means, sir, if you are in India, your participation in India is more than 182 days or more. During the relevant previous year, you have satisfied the first basic condition. Sir, if you are satisfying the first basic condition, I will never check the second basic condition at all, because second basic condition is a condition which will be applicable to a person who has not satisfied the first basic condition. You are not able to be in India for at least how many days or more? 182 days or more. So I am going to check a lower limit, my dear lovable students. Are you in India for at least 60 days or more. If you are in India for at least 60 days or more during the 11 previous year, plus 365 days or more in the immediately preceding 4 previous years, then you will be treated as resident. You will be treated as. So, my dear lovable students, if any of the both the above conditions are not satisfied, that means I was in India for not 182 days or more, or rather I was not in India for at least how many days or more? 60 days or more. That means you don't have any, sir, sentimental attachment with India. You would have came to India. You would have stayed in India for 3 or 4 days. You would have went back out of India. Because of that reason, I cannot say that you are a resident in India. Are you all really with me? Because in 365 days, you are not in India for at least how many days? 60 days. That means you don't have a physical presence in India. Then how I can say that you are a resident in India, my dear lovable students? So, in any of both the above conditions are not satisfied, individual will be treated as non-resident. Are you really with me? Sir, this is what the what condition? Basic condition. So I can consolidate like this, man. Sir, assessee can be classified into 2 categories. Number 1, individual and HGF, other than individual HGF. Sir, if an assessee is an individual, whether he is a resident or non-resident is based upon how he is satisfying the basic condition. There are 2 basic conditions are there. Basic condition number 1 and basic condition number 2. Basic condition number 1 is saying that you should be in India for at least 182 days or more. If you are not able to satisfy the first basic condition, we will check the second basic condition, which is nothing but, my dear lovable students, you should be in India for at least 60 days or more during the 11 previous year and 365 days or more in the immediately preceding 4 previous years. Are you all really with me? Sir, this is exception to the second basic condition, my dear lovable students. Look, sir, there are 2 conditions are there. Basic condition number 1 and basic condition number 2. Basic condition number 1 is 182 days or more. Sir, basic condition number 2 is 60 days or more in the relevant previous year, plus, my dear lovable students, 365 days or more in the 4 immediately preceding previous year. This second basic condition will not be applicable to certain people. If you are calculating the residential status, determining the residential status, this second basic condition will not be applicable for certain category of people. That means to the people which I am going to say, for those people, if they are in India for 182 days or more, then only they will be treated as resident. Otherwise, they will be treated as non-resident. That's it. So, Indian citizen leaves India. I am an Indian citizen. Sir, we all are Indian citizen. We have born, we have brought up in India. We are having our election rights in India. We all are Indian citizen. I am leaving outside India. I am leaving outside India. I am not coming to India. Sir, are you all studying your CA course? Will you become chartered accountant? After you become chartered accountant, you are going outside India for job. For what? Job. You are going to Dubai. If that is the case, my dear lovable students, what Income Tax Act is saying that for the purpose of employment outside India, for your employment purpose outside India, you are leaving out India. If that is the case, I will be checking that in 2024 and 25, have you stayed in India how many days or more? 182 days or more. If you stayed in India 182 days or more, then you are leaving outside India, you will be treated as a resident. Otherwise, you will be treated as a non-resident. That means, sir, are you going outside India after 6 months or the first 6 months is the question. If you gone in the first 6 months, you will be treated as a non-resident. If you stayed in India for the first 6 months and you are going outside India for the purpose of what? Employment. My dear lovable students, sir, you will be treated as non-resident if you gone in the first 6 months, right? That means if you are an Indian citizen, if you lives outside India for employment purpose in India, if you want to be a resident, you have to satisfy only basic condition number 1 to become a resident. Am I right? My dear lovable students, sir, I am again an Indian citizen. I am going to live outside India as a crew member of Indian ship. As a crew member of Indian ship. That means I am going to be a member in an Indian ship. That Indian ship from India is going outside India. That means that ship is going from India to Australia. So I am like an air hostess, not air hostess, ship hostess. Are you all really with me? I am going as a what member? Crew member. My dear lovable students, have you stayed in India? Have you stayed for 182 days or more? Then only you will be treated as a resident. Otherwise, you will be treated as. That means you have to satisfy only basic condition number 1 to become a what? Resident. Are you all really with me? So, 2 exceptions I said. Sir, third exception. I am a dash citizen, Indian citizen. Or what origin? Indian origin. Sir, come on visit to India. I am coming to India. My dear lovable students, we talked about the people who are going outside India. Now I am going to talk about to the people who are coming to India. Coming to India. That means on start of the year, I would have came to India. So till now, I was outside India. So now I am coming to India. Whether I will be treated as resident or non-resident is the question. My dear lovable students, I will be checking as total income. What income? Because you are what citizen? Indian citizen. Or you are what origin? So already you are having some connection with India. Already you are having some connection with India. So from India, have you have any income? Yes. Is your total income other than income from foreign country? Leave the foreign country income. Count only the Indian income, which is less than how much lakh? 15 lakh during the relevant previous year. That means you will be call it as chota wala. You will be call it as chota wala. Sir, you are a dash citizen, Indian citizen. Or you are a what origin? Indian origin. You are coming to what? India. You are coming to India. So what the Income Tax Act is looking, okay, this guy is an Indian citizen, this guy is person of Indian origin, till now this guy was outside India. Are you all really with me? Because, sir, you only become chartered accountant, you only went outside India. In the year in which you went outside India, this provision will be applicable. Are you all really with me? But after 3 or 4 or 5 years, you will be come back to India. At that time, sir, for that year, I have to determine whether you are a resident or non-resident, because you are a citizen, Indian citizen. Yes, the same Indian citizen. Or you may be a person of what origin? Indian origin. You will be coming to India for the purpose of visit, because your family is staying in India. You just want to see them. You just want to say a hi, like that. Hello, sir. At that time, what the government is looking at, whether you are a chota wala or you are a bada wala. If you are a chota wala, that means if your total income is less than 15 lakhs, my dear lovable students, what government is saying that, you are a very small person only. Sir, after we treat you as a resident also, we will not get much tax in India. Because anyway, up to 15 lakhs, sir, if you see the tax slab rate, 2.5 lakhs, 5 lakh, 10 lakh, sir, 12.5 lakh, 15 lakh, up to 15 lakh, we don't have any much tax benefit. Are you all really with me? Because beyond 15 lakh only we are going to pay tax, charge tax at the rate of 30%. You will be falling only at the rate of 20%. You are a small person. You are a bacha. We don't want to treat you as a resident. So, have to satisfy only basic condition number 1 to become a what? Resident. My dear lovable students, if you are coming and staying in India for how many days or more? 182 days or more, then you itself, sir, kept your neck on the train. We can't do anything. You have satisfied basic condition number 1. For you, second basic condition will not be. Sir, I came to India for a visit of 60 days, sir. 60 days means second basic condition. You should be in India for at least 60 days or more. Sir, every year I used to come for 100 days in India, sir. Last 4 years, I came to 100 days in India, sir. So 100 into 4 comes to 400 days. Are you all really with me? Which is more than 365 days. Immediately, what government is saying that, Udra, you will not be treated as a resident. For you, the first basic condition will only be applicable. Second basic condition will not be applicable. The next person has the total income other than income from foreign, that is more than during the relevant previous year. Very good. Congratulations. This guy is not a chota wala. This guy is a bada wala. What government is saying that, I don't want to leave you because you are having an income more than 15 lakhs in India. Government want to say that for you, second basic condition will not be applicable. That means only first basic condition will be applicable. Am I right? If only first basic condition is applicable, his visit period in India should be more than 182 days. Then only he will be treated as a resident in India. Once he is treated as a resident in India, only we can collect tax from India. Are you all really with me? So government is having a fear that whether his stay period in India, visiting period in India may be less than 182 days or not? Because of less 882 days, will he fall under the category of what resident? Non-resident. This government don't want to happen. So government said that you have to satisfy basic condition number 1. You have to satisfy basic condition number. That means if you are in India for more than 182 days, we can't do anything. Because you was in India, your attachment with India is more. You will be treated as a resident. Or, sir, for you the second basic condition will not be applicable. Because second basic condition is 60 days. If 60 days means for 2 months visa, visiting visa only people will come to India, then everyone will be treated as what? Resident only. Government is saying that for you second basic condition will not be applicable. If I simply say second basic condition is not applicable, for all the other people only first basic condition is there. How many days? 182 days. If I say 182 days, for you I am having a fear that 182 days condition will not be applicable. So, I am bringing a new condition called as, sir, altered second condition or special condition. So, for this guy alone, Badawala alone, I am going to appoint a special condition. What is that special condition? Stay in India for at least how many days? That means in the place of 60 days, I am going to say how many days? 120 days in the relevant what year? Previous year. And for 365 days or more during the 4 immediately preceding the previous years, my dear lovable students, that means instead of 60 days, we have altered to 120 days. Are you all really with me? If you are in India for 120 days during the relevant previous year, and 365 days in the 4 immediately preceding previous year, you will be treated as resident. That means you don't be in India for 182 days to be a resident. And for you, 60 days condition will not be applicable. For you, sir, altered second basic condition will be applicable, which is 120 days during the relevant previous year plus 365 days in the immediately preceding previous 4 previous years. So what is the story we are talking about? We are finding out the residential status of an individual. Residential status of an individual is classified into 2 categories. He may be a resident or he may be a non-resident. Don't study the provision. Understand the logic. My dear lovable students, whether an individual is a resident or non-resident is based upon basic conditions. We are having 2 basic conditions. If you are satisfying any one of the basic condition, you will be treated as resident. If you are satisfying none of the basic condition, you will be treated as non-resident. What are the basic condition? Basic condition number 1. You should be in India for at least 182 days or more during the relevant previous year. If you are in India for more than 182 days, then itself you have satisfied the first basic condition. That means you are having attachment with India. You will be treated as resident. That's it, game over. Sir, during this relevant previous year, I don't have much attachment with India because I was outside India. Sir, then second basic condition will be applicable. Sir, are you in India for at least 60 days or more during the relevant previous year? Yes. And I will be seeing your history in the 4 immediately preceding previous year. Are you in India for more than 365 days? Yes. If that is the case, my dear lovable students, you are having attachment, sir, in the current year and also in the historically in the 4 immediately preceding previous year. Then also you have satisfied one of the basic condition. You will be treated as resident. But government is saying that second basic condition will not be applicable to 4 people. There are 4 exceptions are there. 2 people are going outside India. 2 people are coming into India, right? Sir, I am an Indian citizen. I am leaving India for the purpose of employment outside India. You just place you in that situation. Are you a chartered accountant? Yes, sir. Now you have cleared your CA. You just want to go out for, sir, Gulf countries for job. So you are leaving India for the employment purpose. When you are leaving, are you leaving after staying 6 months in India or you are leaving in April, May, start of the financial year itself? If you are in India for 182 days or more, then if you are leaving, already you stayed for more than 182 days, then for that particular year, you will be treated as resident. Sir, within first 1 or 2 months itself, I have left India. That means within the first 6 months itself, I left outside India for the purpose of employment. That what government is saying that then for you second basic condition will not be Applicable, because if second basic condition apply, you will quickly satisfy the 60 days condition. And since you are an Indian citizen for last 4 years, not only 365 days, 365 into 4, you was fully in India. Are you understanding the logic? What government is saying that now you are going outside India. For what purpose? For the purpose of employment. That means your family is in India. That means once you earn salary outside India, you will be sending that salary to India only, to your parents, to your wives, sir, to your people, connected people who know in India. That means you will be sending foreign currency to India. That means the foreign reserves of India will increase. Are you all really with me? So we don't want to put you in the residential status of being a what? Resident. We just want to give you a tag of non-resident. Happily you fly outside India. Get the foreign currency to India. Because for you, if second basic condition applicable, you will easily fall. You will easily fall under the status of the what? Resident. We don't want to trap you, my dear lovable students. Point clear? Sir, I'm not going outside India for the purpose of employment. I'm going as a crew member in a ship. That means now I'm going to Australia, and once the ship comes back, I will also come. Hello, sir? I will also come back. Then what Income Tax Act is saying that for you also, second basic condition will not be applicable. Have you stayed in India for more than 182 days before you left India? If yes is the answer, my dear lovable students, you will be treated as resident. Then we are helpless. For you, second basic condition will not be applicable. Third person, sir, the same people who are coming back or any other people who are coming back after so many years for the purpose of visit, we will be checking that since you are an Indian resident or you are a person of Indian origin, we will be checking the status of your Indian income. If your Indian income is less than 15 lakh or more than 15 lakh, if Indian income is less than 15 lakh, you are a chota wala. For you, second basic condition will not be applicable. Only first basic condition will be applicable. If you are a bada wala, we love to say that second basic condition will not be applicable. Only first basic condition will be applicable. But by mark, you may not satisfy the first basic condition. Because of that, we will lose the opportunity to tax you. So for you, sir, we have introduced a special second basic condition. Instead of 60 days, we are replacing with double 60 into 2, 120 days. If you are in India for at least 120 days and 365 days in the 4 immediately preceding previous years, you will be treated as, are you all really with me? Sir, if he is satisfied both basic condition number 1 and the second, sir, condition, he will be treated as resident and ordinarily resident. Sir, I am a person. I satisfy one of the basic condition. How many additional conditions are there? Sir, how many additional conditions? We have not come to the additional condition, right? We are talking only about the exception to the basic condition. Are you all really with me? Sir, if a guy is satisfying one basic condition, any one of the basic condition, and my dear lovable students, how we are having basic condition, the same way we will be having the what condition, man? Additional condition. What condition? If you satisfy both the additional condition, you will be treated as resident and ordinarily resident. Resident and ordinarily resident. I will tell you, man, this we are entering into the what condition? Additional condition. Look, this is the picture you should be having. 6 mark, mandatory 6 mark. Without this, you won't have a question paper in DT. Without this, you won't have a question paper in DT, right? My dear lovable students, we are talking about what status? Residential status. Residential status of what or what? Individual or HF. First, we are talking about the residential status of individual. That residential status of individual, that guy may be a dash or dash, a resident or non-resident. Whether that guy is resident or non-resident is based upon basic condition. Are you all really with me? How many basic condition? 2 basic condition. Basic condition number 1, basic condition number 2. Easy. If any of the one basic condition is satisfying, he will be treated as resident in India. Right, sir? My dear lovable students, so conditions classified into 2 category, basic condition, additional condition. Basic condition again classified into 2 category, basic condition number 1, basic condition number 2. Again additional condition again classified into 2 category, additional condition number 1, additional condition number 2. Basic condition number 1, Basic condition number 1. He should be in India for at least 182 days or more during the 11 previous year. Can I proceed? Basic condition number 2. He should be in India for at least 60 days or more and 365 days or more in the 4 immediately preceding previous year. This second basic condition will not be applicable to how many people? 4 people. That is called as exception. We are having 4 exception to the second basic condition. Sir, exception number 1, assessee. Are you all really with me? Who's the assessee? Indian citizen. That's it. What is the action? What they are doing? Sir, leaving outside India. They are going outside India. For purpose. For what purpose? Employment. You know, man? Employment. For the purpose of employment. Then, second, what condition? Basic condition. Will not be applicable. What will be the applicability? First basic condition. That's it. Game over. Are you all really with me? Sir, this is the first guy. Second guy, sir, Indian citizen. What is doing? Leaving outside India. For what purpose? Member of crew. Member of crew. Right, sir? Second, in a ship. In a ship. Sir, in second basic condition will not be applicable. Sir, only first basic condition will be applicable. Sir, third guy, sir, either Indian citizen or person of Indian origin. Sir, what action he is doing? He is visiting India. Is what, man? Visiting India. Am I right? Sir, for what purpose? No purpose has been mentioned. Are you really with me? Sir, why he is visiting India? Sir, he is an Indian citizen or person of Indian origin. He want to see the people because his family will be in India. Or he just want to, sir, visit his homeland. That for that purpose only he is coming. Sir, second basic condition will not be applicable. Before I write that second basic condition will not be applicable, you should be a watwala, chotawala. Your Indian income should be less than 15 lakhs. Chotawala means Indian income less than. If that is the case, only first basic condition will be applicable. Second basic condition will not be applicable. Am I right, John? The fourth one, man, either Indian citizen or person of Indian origin. But I am a Badawala, I am visiting India. My dear lovable students, there is no specific purpose has been mentioned. For me, the second basic condition will not be applicable. Either the first basic condition or altered second basic condition, or rather you can say that special condition will be applicable. If I satisfy any of that, I will be treated as resident. Clarity? Sir, okay, sir. Sir, I have satisfied either basic condition number 1 or basic condition number 2 as the, or for 4 people there is no second basic condition. They will be having only first basic condition, or they will be having altered second basic condition. Then I will be treated as what, man? Resident. So whether I am resident or not is based upon the what condition? Basic condition. Basic condition. Am I right? My dear lovable students, now, sir, if none of the basic condition has been satisfied, or for me second basic condition is not applicable, only first basic condition is applicable, I have not satisfied the first basic condition, I will be treated as non-resident. I just want to ask you one thing. Sir, your friend may be, sir, the person who are sitting next to you, may be your friend or your enemy. Hello, sir. Sir, always he is talking bad about you. Always he is talking against you. Always he or she is irritating you. You tell me, are you interested to know much about him? No, sir. Gamman chumma pesamarra, vaaya mooditirra. Sir, that guy may be a friend or he may be an enemy. If he is an enemy, you are not interested to know much about him. You are not interested to know much about him. Are you all really with me? But if that guy is a friend, I just want to know whether that guy is a verum frienda, best frienda. Verum frienda, best frienda. Are you all really with me? Verum frienda? Sir, if he is verum friend, he will just come to class. He will just come to class and you will say that, hi da, how are you da? Have you completed all the assignments da? Bye da, I'm leaving da. But if he is best friend na, he will come to class and even he will come to your home also. In phone also he will be talking, hi da, saptiya da, eppdi irukada. Sir, So whether that guy is a what or what? Frienda, enemy, based upon the basic conditions. Whether that friend have came to your home and staying in home more than 182 days or more, half of the time that guy is in your home only. Fully eating food from your home only. More than 182 days. That guy will be treated as. This year, he's undergoing some examination. So, because of that, he's little busy. So, this year, he came to my home only for 60 days. Immediately, you will say, enemy, kill him. You have to see the Varlar. Your tough times, how much he helped. In the last 4 immediately preceding previous years, he was in your home for 365 days or more. That guy should be treated as resident. Leave the exceptions. Now, you just want to check whether that guy is a best friend or verum friend. Hey, you tell me, in order to be a best friend, attachment with him will be more or less. That's what additional condition. There are 2 additional conditions are there. Additional condition number 1, additional condition number 2. Additional condition number 1, resident in India. He should be in any 2 previous year out of 10 previous years preceding the 11 previous years. Look man, whether that guy is a verum frienda, best frienda, based upon the varlar, based upon the, you would have gone lot of struggles in your life. In your struggles, my dear lovable students, how that friend has, sir, whether that friend was with you or what was the approach he was having. So what the Income Tax Act is saying that for which previous year you are finding out the residential status for previous year 24-25. Am I right? My dear lovable students, for this previous year, determine whether that guy is a resident or non-resident. Once you got the answer as resident, you should classify as resident and ordinarily resident, resident but not ordinarily resident. Am I right? Sir, for that determination, don't check the previous year. Don't check the. Come to the, sir, immediately preceding previous years. Go back. Go back for the last 10 years. Go back for the. In last how many years? 10 years, my dear lovable students, at least 2 years you should be a resident. That means you take any of the last 10 years, go back and see. Last 10 years, see back. Last how many years? 10 years. He should be a resident for at least what? That means in any of the last 2 years, at least 182 days he should be in India. Yes, sir. Sir, last 10 years, he is fully resident. Sir, we all are like that only. We never went to any other place other than our home. If it is any other place, it is Jambulingam Street, ANM classes only. We have not gone to any other street. That means there are certain people, they will be traveling. They will be going for foreign trip and all. For us, there is no foreign nothing. So you have to see the last 10 immediately preceding previous years. If it is last 10 immediately preceding previous years, my dear lovable students, at least 2 years, that guy should be a resident. That means 2 years, he has satisfied one of the basic condition is what the discussion. That means out of the last 10 years, any 2 years, 182 days or more he was in India, or 60 days or more he was in India, plus 365 days or more, in the 4 immediately preceding previous years, he was in India. That means out of last 10 years, any 2 years he is having some attachment with India. Are you understanding? Sir, that shows he is having, sir, some relationship with India in the past. That's what resident in India. In any 2 previous years, out of 10 preceding previous years, sir, the 11 previous year. Or stay in India for how many days or more? 730 days or more. How many days or more? During the 7 preceding previous years, during the 11 previous year. That means, sir, I look back 10 years back, sir. 10 years back, at that time, he was a good boy. Now, what Income Tax Act is saying that go and check the last how many years? 7 years. In that 7 years, actually if you take the calculator, 7 into 365 days means totally how many days will come? 2555 days will come. Out of 2555 days, at least he should be in India for how many days? So 730 divided by 2555 means at least 28.57% of the days he should be in India. This is what the logic of the government. Are you all really with me? If that is the case, he is having some attachment with India. If he is having some attachment with India, my dear lovable students, he will be treated as resident and ordinarily resident. He is my friend and best friend, because not only now, in my past also, from my school days also, he was with me only. For the last 10 years, 2 years, he was a resident, at least 2. He can be 10 out of 10. He can be 3 out of 10, 4 out of 10, 5 out of 10, 6 out of 10, 7 out of 10, 8, 9, 10. At least 2 years, he should be a resident, my dear lovable students. And number two, sir, in the last how many years? 7 years, at least 730 days or more, he should be in India. If he is satisfying both the additional condition, that's what the note, at least one basic condition to be satisfied, to be treated as resident. In order to be a resident, out of the 2 basic condition, at least one basic condition should be satisfied. Once you fall under the category of resident, you will be further bifurcated into resident and ordinary resident. Resident but not ordinary resident. Am I right? My dear lovable students, both additional condition to be satisfied, to be treated as resident and ordinarily resident. Right? Sir, I have satisfied one of the basic condition. I have satisfied, but I have satisfied none of the additional condition, or I have satisfied one of the additional condition, then I will be treated as resident but not ordinarily resident. Income Tax Act is saying that these 4 people will always treat it as resident but not ordinarily resident. These 4 people will always treat it as resident but not ordinary. If such individual has been non-resident in India for in any 9 out of the 10 preceding previous years, look, this is positive explanation. That is, out of 10 immediately preceding previous year, at least 2 years you should be a resident. That means 8 years are non-resident. No problem. Now, sir, out of the 10 immediately preceding previous years, sir, 9 year I am a non-resident. 9 year I am a, that means only 1 year I am a resident, which does not satisfy this condition. Sir, the negative version of 2 by 10 is 9 by 10. Sir, at least 2 by 10 you should be a resident. That means you can 8 by 10 to be a non-resident. The ulta version, sir, I am non-resident for 9 by 10. Then I am resident only for 1 by 10, which is less than 2 by 10. That means basically I have not satisfied the first additional condition. If I am not satisfied the first additional condition, I have not satisfied one of the additional condition. If I have not satisfied one of the additional conditions, then I will be treated as a resident but not ordinarily resident. Friend but not best friend. Friend pa. Pata hi bye sollipom pa. I will never share my ex details and all. But if he is a friend and best friend, I will be saying even the school stories also. Are you all really with me? Come on. Number 2. My dear lovable students, if such individual is being in India for how many days or less? 729 days or less. Yes, man. Sir, in the last 7 immediately preceding previous years, at least 730 days or more you should be in India. Sir, I am in India for 729 days or less. That means I am having less attachment with India. That means I have not satisfied the second additional condition. Then I will be treated as resident but not ordinarily resident. Pakka? Third one, man. Sir, Indian citizen or person of what origin? Having total income of less than how much lakh? 15 lakh. Being in India for how many days or more? But, sir, it's less than or more than? More than. Sir, 120 days or more, but less than how many days? 182 days. That means, sir, Indian citizen or person of Indian origin is coming to India. Coming to India for the purpose of visit. But he is not a what wala, chota wala. He is a bada wala. Sir, bada wala, either the first basic condition should be satisfied or altered second basic condition should be satisfied. Sir, actually, government, second basic condition will not be applicable. Pa. For you, first basic condition will be applicable. But government is having a fear. If I keep only first basic condition, then my dear lovable students, he may not fall in the first basic condition and he may categorize as a what resident? What is the problem? I will tell you. Once he is categorized as any person treated as what resident, his income will not be taxable in India. His income will not be. Sir, an Australian person who are earning in Australia, will he be liable to pay tax in India? No. That's why government is having this much poratam to treat him as a resident. So somehow government want to treat that guy as a resident. That's why government, sir, come up with a new rule called as, for you second basic condition will not be applicable, but don't think that for you first basic condition alone will be applicable. First basic condition or altered second basic condition will be applicable. So because of altered second basic condition, he may call or treat it as a what? Resident. If that is the case, if that is because of the altered second basic condition, if he is becoming a resident, government is having, sir, a hesitation to say, you are resident and ordinarily resident. Correct? Because my dear lovable students, actually he is a non-resident man. Actually, for him, second basic condition will not be applicable. Only first basic condition will be applicable. If that is the case, he should have given a tag of non-resident. But government is seeing that income. Income is more than 15 lakh. He is not a chota wala. He is a bada wala. Once he categorized him as a non-resident, we will not get any income. So we just want to treat that guy as a resident. Clarity. So government is feeling a inner guilt. You are a resident, but you will be treated as a resident, but not ordinarily resident. Is some favor to you. But that person is satisfying the first basic condition and he is becoming a resident. Then he will be treated as a resident and ordinary resident. Hey, are you all really with me? Look at the wording. Indian citizen or person of Indian origin having total income, that means Indian income of more than 15 lakh. Been in India for how many days or more? So he was in India for 120 days or more, but less than 182 days. That means he become a resident through the altered second basic condition, not through the first basic condition. That is why he is treating it as a resident, but not ordinarily resident. Are you all really with me? Next one. Sir, if you are a deemed resident, my dear lovable students, under 6 subsection 1A, then also you will be treated as resident, but not ordinarily resident. Sir, actually this guy is not a resident. He is not a non-resident. But Indian government is saying that you will be treated as deemed resident. So this is resident, but not ordinarily resident. 1, 2, 3, 4. 4 people will be treated as resident, but not ordinary. I have not satisfied second basic condition. Hello, sir. There are additional conditions are there. I have not satisfied the first additional condition. I will be treated as resident, but not ordinary resident. I have not satisfied the second additional condition. Resident, but not ordinary resident. Sir, I become a resident by satisfying the altered second basic conditions. Resident, but not ordinary. Sir, I am a deemed resident. Resident, but not ordinary resident. Are you all really with me? Yes, my dear lovable students, this is what I have given it as summary for you. Look here, summary. Sir, this is the basic condition. What is basic condition, man? More than 182 days or more in the relevant previous year. More than 182 days or more in the relevant. Then all this condition is applicable to all individual other than 3, 4, 5. 3, 4, 5 are special category and 6 are deemed resident. Are you all with me? Sir, this is covered under section 6 subsection 1. 6 subsection. Sir, Indian citizen leaving India in the relevant previous year for employment or as a member of what? Crew of what ship? Indian ship. Sir, for them also first basic condition will be applicable. Am I right? Indian citizen or person of Indian origin residing outside India. They are visiting India during the relevant previous year and having total income, excluding income from foreign source, is less than how much lakh? Sir, for them also first basic condition will be applicable. Sir, Indian citizen or person of, resident outside India, visiting India during the relevant previous year and having total income more than how much lakh? For them also, first basic condition will be applicable. Am I right? Sir, deemed resident, that means nothing. I am a what citizen? Indian citizen whose total income, excluding income from foreign source, is more than 15 lakh. That means I am a badawala. I am a who is not liable to tax in any other country. My dear lovable students, I am an Indian citizen. I was situating outside India, but I am having Indian income more than 15 lakhs. I am having Indian income more than, sir, I am having two options. Sir, look. This is more than 15 lakhs. More than 15 lakhs means for me second basic condition will not be applicable. Only first basic condition will be applicable. Sir, or altered second basic condition will be applicable. Right? What is altered second basic condition? At least 120 days I should be in India. Sir, I am not even 120 days are in India. Then I will be treated as what resident? Non-resident. Am I right? And government is asking question, from where you are coming? Sir, I am coming from Australia. Since you are permanently situated in Australia, are you paying any tax in Australia for the Indian income you are earning in India? No, sir. In Australia, it's tax-free country, sir. That means what government is feeling that, oh, avlo kashtapadriya. You are having income from India. Am I right? More than 15 lakh. Since you have not satisfied the first basic condition, since you have not satisfied the altered second basic condition, you will be treated as a non-resident. Since you are treating it as a non-resident, sir, you are not paying any tax in India. And even for this income, you are not paying tax in Australia. So you have not paid tax in either of the country. No problem. We will arrange the things. We will treat you as deemed resident. What resident? So for you, section 6 subsection 1A will be applicable. For you, the first basic condition will not be applicable. Sir, there is no condition at all. One guy, sir, is not satisfying first basic condition, second basic condition, he is a non-resident. But government, by seeing their income, is saying that, come on, pa, you will be treated as a deemed resident. Come on. Sir, more than 60 days in the relevant previous year, plus more than 365 days in the 4 immediately preceding previous year. This is nothing but, sir, this is first basic condition. This is second basic condition. Am I right, sir? My dear lovable students, sir, for normal people, second basic condition will be applicable. Yes. But for the people who are going outside India for the purpose of employment or member of crew, second basic condition will not be applicable. Sir, if any person who are going to come to India, who's a what wala? Chota wala, second basic condition will not be applicable. Who are going to visit India, who's a bada wala, second basic condition will not be applicable. Altered second basic condition will be applicable. What is that altered? More than 120 days in the relevant previous year, plus more than 365 days in the 4 immediately preceding previous years. Right? Sir, in order to be deemed resident, there is no condition at all. Put it on, dustbin. Sir, we are having additional condition. That additional conditions are covered under 6.6. Are you all really with me? What is additional condition? Sir, out of 7 immediately preceding previous years, you should be in India for more than 730 days. Am I right, sir? This is a condition for all the 3 people. Who are the 3 people? Basic, all individuals and HUF, Indian citizen who are leaving India in the relevant previous year for employment or member of crew of Indian ship, Indian citizen or person of Indian origin residing outside India, visiting India during the relevant previous year and having total income and foreign sources is less than how much lakh? 15 lakh. If both first and 2 are satisfied. There are 2 additional conditions are there. Sir, I have satisfied additional condition number 1 and additional condition number. Then they will be treated as resident and ordinary resident. Otherwise, resident but not ordinarily resident. If 1 or 2 are satisfied or neither 1 or 2 are satisfied, they will be treated as resident but not. Sir, 1 basic condition, 2 additional condition. What is the status? Resident but not ordinarily resident. 1 basic condition, repeating, 1 basic condition, both additional condition. Resident and ordinary resident. 1 basic condition, 1 additional condition. Resident but not ordinarily resident. None of the basic condition. Non-resident. Both the basic condition, both the additional condition. Resident and ordinarily resident. Right? Sir, here man, sir, I am coming to India, my dear lovable students, but I am a what wala? Bada wala. then 6 additional condition will be applicable. By default, that guy will be treated as a resident. And if individual become resident due to fulfillment of the modified second condition above, that means no need to go and check the additional condition. Am I right? This guy, man, sir, by default, this guy is a resident. Sir, that we understood from this because there are 4 people. Sir, government is saying that these 2 people will be treated as resident, but not. Then why are you going and checking the additional conditions? Are you all really with me? You know, man, these are the provisions of the what status? Residential status. These are the provisions of the. Look, I'll be doing one question for you. A very good question. Illustration number 2 from the ICAI study material. Sir, brightly, an Australian cricketer player visits India for 100 days in every financial year. Sir, for the purpose of IPL and a lot of cricket players are coming to India. Sir, whether they will be treated as resident or non-resident. Sir, Brickley is an Australian bowler. Sir, those who love cricket know about him. To Sachin and all, sir, he used to bowl in older times. This has been his practice for last 10 financial years. Look, my dear lovable students, now I am going to talk about the Brickley. For what financial year is for in our exam? Financial year 24-25. Sir, this guy, Brightly, is not Indian citizen. He's an Australian citizen. Am I right? Let me ask you a question. In this 24-25, whether he was in India for more than 182 days? No, he was not in India for more than 182 days. Because he used to come to India for IPL only for how many days? 100 days. That means for this guy, second basic condition we need to check. But there are 4 exceptions to second basic condition are there. First, is this guy an Indian citizen? No. Is he leaving India? No. Hello, sir. For the purpose of employment outside India? No. Indian citizen leaving India as a crew member? No. Then is he an Indian citizen or person of Indian origin? No. Coming to India as Chotawala? No. If he is Indian citizen or person of Indian origin, coming to India as Badawala? No. He has not satisfied in 4 exception. That means for him the second basic condition will be. That means whether he is in India for 60 days or more? Yes. And I have to check the 4 immediately preceding previous years. Last 10 years, every year he came for 100 days for playing IPL. That means, my dear lovable students, 100 into 4 comes to 400 days he was in India for in the last 4 immediately preceding previous years. Am I right? My dear lovable students, if this is the case, he has satisfied the second basic condition. He will be treated as resident. Now I have to go and check whether he is going to satisfy the additional condition or not. Before I check the additional condition, I should check that whether this guy is a deemed resident. No. Whether this guy is a, sir, Indian resident or person of Indian origin who is a Badawala, who become a resident because of the second altered basic condition. No. Because if that is the case, no need to check the additional condition at all. Because they will be labeled as resident, but not ordinarily resident. Understanding? In this case, my dear lovable students, I have to go and check the second additional condition. There are 2 additional conditions are there. Additional condition number 1, additional condition number 2. What is additional condition number 1? Out of last 10 years, he should be resident for 2 years. Am I right? 2 by 10 condition should be satisfied. Simple. Sir, in the last year also he was in India for 60 days. Sir, before that 4 years, 400 days he was in India. So that means, sir, in the last year he satisfied the second basic condition. Before that year also he satisfied the second basic condition. Am I right? Are you able to appreciate? That means he is a resident for at least 2 years out of 10 years. Come on. Look at the last, how many years? 7 years. My dear lovable students, 100 into 7 comes to 700 days only. Oh my God. You should be in India for at least 730 days. Nigali, you have not satisfied the second additional condition. Sir, if you are satisfying one of the basic condition and one of the additional condition, you will be treated as resident, but not ordinarily resident. This is this residential status. Come on, man. Find out the residential status for the assessment year. Sir, our financial is 24-25. Yeah, we'll make it as 25-26. Are you really with me? Sir, determination of residential status for, sir, brightly for assessment year 25-26. Period of stay during 24-25. In our previous year, how many days he stayed? 100 days. My dear lovable students, in the last 4 immediately preceding previous years, he has stayed for how many days? 400 days. Because 100 comes to 400 days. Am I right? Mr. Brightly has been in India for a period of more than 60 days during the relevant previous year. That is in 24-25. And for a period of more than 365 days during the 4 immediately preceding previous years. Am I right? Therefore, since he satisfied one of the basic condition under 6.1, he is a resident for assessment year 25-26. Can I proceed? Sir, computation of period of stay during the 7 immediately preceding previous year. Every year he was in India for 100 days. So 100 into 7 comes to 700 days. My dear lovable students, since his period of stay in during the past 7 years is less than 730 days, he is not ordinarily resident during the assessment year 25-26 because he has satisfied one of the basic condition and he has satisfied one of the additional condition. For such a people, we will give a tag that resident. Therefore, Brightly is resident but not ordinarily resident during the previous year 24-25, relevant to the assessment year 25-26. Am I right, sir? What they are saying in case number 2. Would your answer change if the above facts relating to Srinath, an Indian citizen, who resides in Australia, that means Srinath has been settled outside India. Now he is coming to visit for the purpose of IPL, for commentary or playing cricket or something. Javagal Srinath, they are talking about. And represent the Australian cricket team. Okay, right. That means he's a what citizen? Indian citizen. He would have become a coach of Australia. Now he is staying in what? Australia. For the purpose of playing cricket in India, he is coming to India. Sir, my dear lovable students, here you have to check the 4 exception to the additional basic condition. Number 1, Indian citizen leaving outside India. This is not leaving. Indian citizen leaving outside India. This is not leaving. So it will not fall under the leaving category. Now you have to check the Indian citizen who are visiting India. Yes, purpose has not been mentioned. So I have to check that whether this guy is Indian income is more than 15 lakh or less than 15 lakh. There are only 2 situations are there. If this Indian income is more than 15 lakh, this guy is a badawala. If Indian income is less than 15 lakh, this guy is a chota wala. If this guy is a what wala? Chota wala, my dear lovable students, second basic condition will not be applicable. Only first basic condition will be applicable. If only first basic condition is applicable, my dear lovable students, he should be in India for at least, but he is in India for only 100 days. Hello, sir. So, if he is a what wala, chota wala, my dear lovable students, he will not satisfy the 182 days condition. So, he will be treated as a non-resident. Okay, assume he is a what wala? Bada wala. For him, second basic condition will not be applicable. Altered second basic condition will be applicable, which is 120 days during the relevant previous year. But he was in India for only, so he is not in India even for 120 days also. That's why question did not mention whether he is a badawala or chotawala. Because whether he is badawala or chotawala, he will not satisfy the second condition. Are you all really with me? So, my dear lovable students, if that is the case, he will be treated as non-resident. Look at the case number 2. If the above facts relating to Mr. Srinath, a what citizen, who residing in West Indies, Australia, whatever it may be, come on visit to what? India. He would be treated as dash in India, non-resident in India. For the previous year, 24-25, irrespective of its what income? Total income. Excluding some from foreign source. Since he stay in India in the current financial year, in any case less than 120 days. Because anyway for him 60 days concept will not be applicable. Second basic condition will not be applicable. Sir, for him, he may be a badawala. If he is badawala, altered second basic condition will be applicable. If he is altered what man? Second basic condition, 120 days is the limit. Am I right, sir? So for him, my dear lovable students, 120 days. Anyway, he is less than 120 days because he is in India for only. So he will be treated as non-resident. Come on, man. Case number 3. What would be your answer if Srinath has visited India for how many days? Instead of 100 days every year, including the previous year 24-25 is the question. Then I will go and check whether Srinath is a chotawala or badawala. If he is a chotawala, still no problem. He will be treated as what only? Non-resident only. But if he is a badawala, he will be treated as resident, but not ordinarily resident. Since in this case, Ms. Srinath total income, excluding income from foreign source, exceed 15 lakhs, is a badawala. He would be treated as resident, but not ordinarily resident. That is not based upon the additional condition, because he is not becoming a resident, not because of the first basic condition. He is becoming a resident because of the altered second basic condition. Clarity. In India for previous year 24-25, since stay in India is 120 days in previous year 24-25 and 480 days, because sir, in the current previous year, it should be more than 120 days. And in the 4 immediately preceding previous years, it should be more than in the immediately 4 preceding previous years. If his total income does not exceed how much lakh? 15 lakh. He would be treated as non-resident. Yes, sir. Sir, if he's a chotawala, for him only first basic condition will be applicable. Then he is in India for only 120 days. He is not in India for 182 days or more. Then he is even not satisfying the first basic condition. So he will be treated as a does not exceed 15 lakh. He would be treated as non-resident in India for the previous year 24-25, since his stay in India is less than 182 days in the previous year 24-25. Easy. Sir, we are applying this. For this, you will be getting 6 marks. Don't worry at all. I will make you 1000% comfortable in the basics. You know one thing, that's it. We are done with the what status. These are the maximum rules of residential status, and I'm going to do 25 questions from that area. That will give you a bare level clarity. Please don't by heart the provisions. Please apply the provision. At least first time you will not understand. Second time you will understand. Third time you will understand. You will get a bare level clarity. There is always a purpose for the act. Please understand the purpose. ICAI illustration number 3. Mr. B, a Canadian citizen. What citizen? Comes to India for the first time during the previous year 2021. That means, my dear lovable students, he will not be covered in any of the 4 exception, right? During the financial year 2021, 21-22, 22-23, 23-24 and 24-25, this is our 24-25 is our financial year. He was in India for 55 days, 60 days, 90 days, 150 days and 70 days respectively. This 70 days is more than 60 days. So during the relevant previous year, he was in India for 60 days or more. Then I have to check that whether he is in India for 365 days or more. Basically 55 days plus 60 days plus 90 days plus 150 days. 55 plus 60 plus 90 plus 150. 3? Oh my God, 355 days is less than 365 days. That means he does not satisfy the second basic condition. Are you all really with me? He neither satisfied the first basic condition, he not satisfied the second basic condition. This guy should be treated as determine his residential status, man. Thus, he does not satisfy the basic condition under 6 subsection 1. This guy will be treated as a non-resident. Easy. We are done with the residential status determination of individual. What, man? Individual. We are having the same for what? HUF. Same for what? HUF. Very simple. HUF means what? Hindu undivided family. For an HUF, man, you have to check the control and management. Control and... Sir, whether the control and management is wholly or partly in India or wholly outside India. If the control, HUF is situated in India, but the control and management is situated outside India. If that is the case, HUF is a non-resident. Sir, HUF is situated in India. It's, sir, control, sir, and management is what? In India. Where? Either wholly in India or partly in India. Then HUF is a resident. HUF is a resident. I want to know HUF is a resident and ordinarily resident, or resident but not ordinary resident, that based upon kurta. HUF will be having one head called as karta. Whether that karta is a resident and ordinarily resident or resident but not ordinarily resident. If that karta is a resident and yes means HUF is also resident and ordinarily resident. If karta is a resident but not ordinarily resident, then HUF is also resident but not ordinary. So for HUF, resident or non-resident based upon the control and management. If 100% of the control and management is situated outside India, then my dear lovable students, it will be treated as, right? My dear lovable students, if control and management either wholly or partly in India, then my dear lovable students, the HUF will be treated as resident. Don't stop with resident. We have to further bifurcate into resident and ordinarily resident. Resident but not ordinarily resident. If it is resident and ordinarily resident, then my dear lovable students, you have to go and check the status of the Karta. If Karta is resident and ordinary resident, HUF is also resident and ordinary resident. If Karta is resident but not ordinary resident, HUF is also resident. Look at this illustration. The business of HUF is transacted from Australia and all the policy decisions are taken there. That means HUF is a non-resident because 100% of the decision making, control and management are from outside India. Then don't see the kurta at all. Mr. E, the Karta of the HUF, who was born in where? Kolkata, visits India during the previous year 24-25 after 15 years. Let it come, man. He come, man. No problem. HUF is a non-resident. Right? But this guy, who was born in Kolkata means this guy is Indian citizen or person of Indian origin. He is visiting India now. He come to India on 1/4/2024 and leaves on Australia for 1/12/2024. Sir, they don't give what is the income status of the Karta, whether that guy is the Chota Wala or Bada Wala. There are only two options. That HUF may be Chota Wala. That Karta may be Chota Wala or that Karta may be Bada Wala. If that Karta is a Chota Wala, sir, for him, second basic condition will not be applicable. First basic condition, 180 days or more condition will be applicable. Right? He was in India from April. That means April, May, June, July, August, September, October, November, December. December 1st, sir, on 1/12 he left. Hello, sir. So on 1/12 only he left. On 1/12 he was in India. Am I right? Sir, April, how many days? 30, May, 31, June, 30, July, 31, August, 31, September, 30, October, 31, November, 30. Take your calculator. 30 plus 31 plus 30 plus 31 plus 31 plus 30 plus 31 plus 30 plus 1. 245 days only. This is, sir, more than 182 days. So the Karta has satisfied first basic condition. Am I right? I have to go and check the two additional condition. Out of 10 immediately preceding previous years, he should be a resident for at least, sir, after 15 years, now only he is coming for the first time. That means for last 10 years, he was a what resident? Non-resident. That's it, game over. He is a resident. Look, therefore, Karta is a resident. However, since he has come to India after 15 years, he does not satisfy the condition for being a what resident. Therefore, residential status of Karta is resident but not ordinarily resident. Now, with regard to residential status of HUF, it is assumed that control and management is in Australia. Sir, that means control and management is wholly outside India. Therefore, HUF is a non-resident. Two people's residential status comes to an end. Number one, individual. Number two, HUF. For individual, you have to see like this. Resident, non-resident. Non-resident, no further discussion. He may be a resident. If the answer is resident, resident and ordinarily resident, resident but not ordinarily resident. And there is a miscellaneous category of deemed resident also. Right. Again for HUF, HUF may be a resident, ordinarily resident. That depends upon the what and what. Control and management. My dear lovable students, if the HUF is a resident, you have to further bifurcate into resident, ordinal resident, resident but not ordinal resident. If that guy is resident and ordinarily resident, HUF is also resident and ordinary resident. If that guy is resident but not ordinarily resident, that guy will be treated as, HUF will be treated as. Now coming to the residential status of firm, AOP, BOI. Firm, AOP, the beauty is only bifurcation of resident, non-resident, no further classification. That further classification is there only for, my dear lovable students, resident. A firm, AOP, BOI would be what in India? if the control and management is situated either wholly or partly in India. Easy. Sir, partnership firm is situated in India. From where you are controlling? Wholly from India, resident. Partly from India, resident. That's it, game over. Sir, next one what? Non-resident. If the control and management of the affairs is situated wholly outside India, they would become a non-resident. Partnership firm, AOP, BOI is situated in India, whereas it's 100% of the control is situated outside India. If that is the case, my dear lovable students, it will be treated as, right, sir? Come on to the determination of residential status of what? Company. For company, you have to check the POEM, that is place of effective management. Place of effective. Nothing. Is a company an Indian company? Yes, always they will be treated as resident. No, sir. Then you have to check whether the POEM of the company is situated in India. If yes, they will be treated as resident. No, sir. Then they will be treated as non-resident. So how we are checking control and management for AOP, BOI and partnership firm? The same way, I have to check the POEM for the company. Is a company Indian company, resident Indian company? Then always they are resident. If they are foreign company, then you have to check the place of effective management. If the POEM is situated in India, they will be treated as a resident company. POEM is not situated in India, they will be treated as non-resident. Are you all really with me? Sir, even for local authority and AJP also same rule only. In the sense means, if the control and management is situated wholly or partly in India, then they will be treated as resident. If control and management is situated wholly, they will be treated as non-resident. Are you all really with me? This is the recall of the entire residential status. Are you all really with me? Based on this, lot of questions are there, my dear lovable students. We'll be start doing one by one. What from your side required is just revise the entire content. I will be going through all the question in the workbook. This you will be feeling so much comfortable. Revise this part very well. Look, sir, residence and scope of total income. If you see MTP November 2021, this question has been asked. Again, I am saying from residential status, 6 mark is mandatory. 6 mark is what? Determine a residential status and compute the what income? Total income chargeable to tax. Will the residential status change if she returned to India again on this date instead of this? This is MTP April 2021 question. So we will be applying this into, sir, a very level understanding. And when I am doing this question, when for the purpose of doing computation of total income, even they are referring, for example, if you look here, even they are referring gift amount. Gift is as per 56 subsection 2 class 10. That is what? IFOS. So that's why before I start this batch, you should have a reasonable knowledge about the salary, house property, PGBP, capital gain, IFOS, clubbing, set off and carry forward. For every chapter, I will give a background, but that is not sufficient if you are studying for the first time. This will never serve the people who are studying for first time. This is a batch for repeaters, which we will be focusing on doing a lot of question. So you just revise the residential status and come back. We will be doing a lot of questions from the workbook. Are you comfortable? Sir, I'm with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very happy morning to all. So this is our lecture number 2 of the workout batch of the DT. In that lecture number 1, we have started with the basics. Residential status. My dear lovable students, in the last class, we understood that we have to find out the residential status of the assessee. For that purpose, assessee classified into 2 categories. Number 1, individual or HUF, other than individual or HUF. If an assessee is individual or HUF, we will classify the assessee into 2 categories. Number 1, individual and HUF. Why like this? Because for HUF, the residential status, that is resident or non-resident, depends upon the HUF. Whereas resident and ordinarily resident, resident but not ordinarily resident, based upon the residential status of the Karta. Are you all really with me? So this individual may be either resident or non-resident. If the individual is a resident, further we have to bifurcate it into a resident but not ordinarily resident, or resident and ordinarily resident. Are you all really with me? Whereas an assessee is a non-resident, we won't further dig and find out what is the residential status further. With regard to HUF, first we have to find out that whether the HUF is a resident or non-resident. And once the assessee is a resident, we have to classify that residential status into resident and ordinarily resident, resident but not ordinarily resident. Whereas for HUF, my dear lovable students, that is other than individual and HUF, we are having, sir, only two category, either resident and non-resident. It is all decision we are making based upon conditions. That conditions can be classified into two category. Number one, basic condition and additional condition. Basic condition again classified into two category. Basic condition number one, basic condition number two. Additional condition again classified into two category. Additional condition number one, additional condition number two. Sir, what basic condition, whether it is one or two, is saying that you have to determine the residential status based upon the current previous year. Based upon the, whereas additional condition is not based upon the current previous year. Additional condition is based upon the immediately preceding previous year. This is the basic difference between the basic condition and the additional condition, because basic condition number one is saying that assessee should be in India for at least 182 days or more. That means out of 365 days, if an assessee is in India for at least 182 days or more, then he will be treated as resident. But every people cannot stay in India for 182 days or more, because it's more than half an year. Are you all really with me? So what act is saying that during the previous year, if you are able to be in India for 60 days or more, plus, sir, 365 days or more in the 4 immediately preceding previous year, then you will be treated as resident. But this second condition will not be applicable to 4 people. There are 4 exceptions are there for this second condition. Exception number 1, sir, Indian resident, Indian citizen who are leaving India. Are you all really with me? Indian citizen who are leaving India for the purpose of employment outside India, or Indian citizen who are leaving India for the purpose of employment as a crew member of crew. And the third exception is, sir, either you may be Indian citizen or person of Indian origin who are coming to India for the purpose of visit, and that guy is a chotawala. The same person who are coming to India for the purpose of visit, and that guy is a badawala, then this condition, second condition, will not be applicable. Either first basic condition will be applicable, or altered second basic condition will be applicable for the badawala people. Are you all really with me? Sir, if you satisfy any of the basic condition, any of the one basic condition, then you have to go and check the additional condition. There are 2 additional conditions are there. Additional condition number 1 and additional condition number 2. Additional condition number 1 is not based upon the current previous year. Out of the last 10 immediately preceding previous year, at least in 2 previous years, you should be a resident. And out of the last 7 years, you should be in India for at least 730 days or more. If you are satisfying both the additional condition, then you are having more attachment with India. If that is the case, my dear lovable students, then you will be treated as resident and ordinarily resident, because you are resident and you are ordinarily resident. You are friend and best friend. Otherwise, you will be treated as friend but not best friend. That means if I am satisfying one of the basic condition, 2 additional condition, resident and ordinarily resident. One of the basic condition, one of the additional condition, resident but not ordinarily resident. One of the basic condition, none of the additional condition, resident but not ordinarily resident. Sir, I am not even satisfying one of the basic conditions, sir. Then I will be treated as non-resident is what the discussion. My dear lovable students, for other than individual and HUF, resident or non-resident is based upon the control and management. If the control and management, if it is 100% or partly in India, then it will be treated as resident. If the 100% of the control and management is situated outside India, then it will be treated as non-resident. This is what the discussion yesterday we have made. Sir, we will be having a doubt that why Income Tax Act is asking us to find out the residential status. Sir, based upon who you are, my dear lovable students, then the taxability will be determined. Based upon who you are, then your taxability will be determined. That's what called as scope of total income. That is called as scope of total. Sir, what is the scope of CA Inter? For example, in Inter, we have to study heads of income, like income from salary, income from house property, PGBP, capital gain, IFOS, and clubbing set of carry forward, determination of the residential status, filing return of income. All these things is the scope of the subject direct tax. That means we are not supposed to study the assessment procedure. We are not supposed to study the notices, what the department is supposed to be issued, types of assessment, like self-assessment, income escaping assessment, post-search assessment. Lot of things are there in direct tax because we are studying only till 139 of the Income Tax Act. Still we are having 500 sections are there in the act that we will be learning at CA final level. My dear lovable students, what is the scope of total income? That means to what extent I am liable to pay tax in India. That depends upon who you are. You tell me, sir, if you are resident and ordinarily resident, resident and ordinarily resident means you are friend and you are best friend. Then the rule is very simple. Global income is taxable in India. Then the rule is very simple. Global income is taxable in India. Because you tell me, if a person is a friend and best friend, will you say only, sir, important thing or everything? Everything. That means everything will be taxable. What are the everything? Number one, sir, income received or deemed to be received in India. Income received or deemed to be received in India. That means from where the income has been received, India. Sir, we know that Income Tax Act is a crack act, in the sense means they will be saying that even though certain income not received in India, we will assume that income has been received in India. Are you all really with me? So that's what the logic is. Income received or deemed to be received in India. So income has been received in India or deemed to be received in India. It will be taxable in the hands of resident and ordinarily resident. Next one, income accruing or arising. Income is accruing or arising. That means we know there are two concepts are there in accounts. One is called as cash concept and other is called as accrual concept. Cash concept in the sense means I received the income. Sir, accrual concept in the sense means I put an FD but I have not received the interest, but I am yet to receive the interest. Are you all really with me? But what Income Tax Act is saying that even though you have not received the income, even though the income is only accrued, still you are liable to pay tax in India. Because based upon your received concept, we can't, sir, collect the tax. If that is the case, every time you will say that I have not received, I have not received, I have not received. Am I right, sir? So what Income Tax Act is saying that income accrued or arising, income accrued or arising or deemed to accrue or arising. So the concept number one is a received concept. What is received concept? Income received or deemed to be received in India. Concept number two is income accruing or arising, deemed to accrue or arise in India. Then also it will be taxable in the hands of resident and ordinary resident, because the thumb rule is very simple. If you are resident and ordinary resident, global income is taxable in India. That means whether you earn income from India or whether you earn income from outside India, you are liable to pay tax in India. That's it, game over. That income from India can be of two concepts. Income received in India or deemed to be received in India. Income accrue or arisen from India or deemed to accrue or arisen from India. Are you all really with me? Sir, next one, sir. Sir, income derived from business controlled or profession set up in India. That means, my dear lovable students, I am particularly talking about profits and gains of business or profession. I am particularly talking about PGBP. Sir, that PGBP, that's what? That it may be a business or it may be a profession. Sir, that business is controlled. From where you are controlling? From India. Sir, or profession is set up in what? India. even though if it accrues where? Outside India. Sir, income is accruing outside India. Because till now I was talking about the income which has been received in India. That means which is inside India. Or my dear lovable students, I talked about income accrued or arisen in India. Now I am going outside India. Why are you going outside India? Because I am a resident and ordinarily resident. Global income is taxable in India. That means whatever income you have earned outside India will also be taxable in India. What income, sir? PGBP income, sir. What PGBP income, sir? That business should be controlled from India and that profession should be set up from India, then that income will be taxable in India. Are you all really with me? That's what it will be taxable in India. And next one, man, sir, income accruing or arising and received or deemed to be received. That means what concept and what concept? Cash concept and accrual concept. Both what? Outside India. Still it will be taxable in India. Because my dear lovable students, sir, if you are resident and ordinarily resident, global income is taxable in India. Whether the income is received in India, taxable. Income is accrued in India, taxable. PGBP accrued outside India, taxable. Sir, any other income accrued or received outside India, it will be taxable. So take it one thing. If the assessee is resident and ordinarily resident, global income is taxable, right? Coming to the resident, but not ordinarily resident. He is my friend, but he is not my best friend. Then I will not say everything to him, but I will say something. Hi da, bye da, how are you da? All these I will ask to him, but I will not ask, I will not say everything to him. That means global income is not taxable, but Indian income is taxable. Sir, if you are getting any income from India, then it will be taxable, my dear lovable students. Sir, if the income is accruing or arising or deemed to accrue or arise, then it will be what, man? Taxable. Are you all really with me? Sir, and if you are getting income from outside India, that income is by way of PGBP. That income is by way of what? PGBP. But that business is controlled in India and the profession is set up from India, then it will be taxable even though you are resident. So you can classify the scope like this, man. So the income should be classified into two categories: within India, outside India. How you have to think? Within India, outside. Sir, what is the act we are learning? Income Tax Act. Income Tax Act in the sense means if you are getting any income from India, it should be taxable in India. Are you all really with me? Sir, whether you are resident and ordinarily resident, or whether you are resident but not ordinarily resident, or let it be you be a what resident also, non-resident also. If you receive any income from India, pay that's what taxable. Easy. Sir, you have not received the income, but the income is accrued or income is arisen from where? India. Taxable. That means one line summary of the entire discussion is, if the income is received in India, taxable in all people hand. If the income is accrued or arisen in India, it is taxable in all hands, irrespective of the what status? Residential status. Whereas now I am going to talk about the income accrued or arisen outside India. That income should be classified into two categories: PGBP income, other than PGBP income. Sir, whatever may be the income, if the assessee is resident and ordinarily resident, it is taxable. Clarity. Whereas, sir, with regard to resident but not ordinarily resident, sir, if the business is controlled from India, if the profession is set up in India, it will be taxable. Whereas that amount will not be taxable in the hands of what resident? Non-resident, because that guy is not having much attachment with India. He is situating outside India and is conducting business or profession outside India. Only mistake what he is doing is controlling the business from India, or he has set up the profession from India. Because of that, Income Tax Act is saying that we will not ask income tax in the hands of the what resident? Non-resident. Clarity. And next one, man. Sir, income accruing or arising or received or deemed to be received outside India. For example, I will give you an example. There is a house property. You are having a house property in London. You are having a house property in, from that house property, you are getting rental income. My dear lovable students, if you are resident and ordinarily resident, sir, global income is taxable. So from outside India, you are getting income. Whether that income is PGBP income or other than PGBP income, it will be. That's why it is taxable. Are you all really with me? Whereas if you are resident but not ordinarily resident, sir, you are getting income from India or outside India? Outside India. If it is from India, legally, you are liable to pay tax in India. You are liable to pay. Because if an income is received from India, if you don't collect for that income, for what income, then you will collect income tax. Logic clear? That's what Income Tax Act is asking. If the income is received from India or income is accrued or arisen in India, whoever it may be, it is taxable in India. But outside income has been classified into two categories: PGBP income, other than PGBP income. Whether it is PGBP income, other than PGBP income, it will be taxable in the hands of the resident and ordinarily resident. Whereas if it is, sir, resident but not ordinary resident, PGBP income will be taxable. Other than PGBP income will not be taxable. Hello. Whereas if you are a, that means you are situating. Sir, whatever PGBP income derived outside India will not be taxable. Whatever, sir, other than PGBP income derived outside India will not be taxable. Are you all really with me? From this area, surely we will be getting a question. I will be doing some question, my dear lovable students. Those who are following my workout batch, these questions are available in my compiler. The compiler is freely available in the Telegram. If you want hard copy, you can order it in our www.ANM Virtuals also if you want. Otherwise, you can go through the PDF itself. That itself is more than enough. In addition to this, I'll be solving the workbook question. Come on. From the following particulars of income furnished by Mr. Anirudh pertaining to the year ended 31/3/2025, compute the total income for assessment year 25-26 if he is a resident and ordinarily resident, resident but not ordinarily resident, and non-resident, right? First, look at the income, because this is what tax? Income tax. Income, then look at the person. Income, then look at the person. Income is classified into two categories: income in India, income outside India. If you are a person, if an income is derived from India, it will be taxable over in all the people hands. Outside India, income should be classified into two categories: PGBP, other than PGBP, right? Every income will be taxable in the hands of the resident and ordinarily resident. Whereas PGBP income will be taxable in the hands of the resident but not ordinarily resident. Other than PGBP will not be taxable. And in case of non-resident, income accrued or risen outside India will not be taxable in India. Rule clear? STCG. What is STCG? Short-term capital gain. When STCG arises, if you transfer a capital asset, if you transfer a on sale of share in Indian company received in Germany. My dear lovable students, sir, you have to just think one thing. Is the capital asset situated in India? Sir, the capital asset is sale of share in Indian company. That means the capital asset is situated in India. If the capital asset is situated in India, income has been accrued or risen in India. That means the source is from India. The source is from India. If the source is from India, whoever may be the person, sir, whether the person is number 1 or number 2 or number 3, it will be taxable in India. For this 15,000, everyone is liable to pay tax in India. Pakka? Sir, dividend from what company? Australian company. Sir, dividend will be taxable under IFOS. But that dividend is received from a share of an Australian company. That means capital asset is not situated in India. That means this is not an Indian income. This is a foreign income. This is a, sir, received in Australia. Even that income is accrued outside India, received outside India. Sir, this 10,000 will be taxable if you are resident and ordinarily resident, right? But for the other two people, only two foreign incomes are there. PGBP, other than PGBP. Other than PGBP will not be taxable in the hands of the resident, but not ordinarily resident. Other than, sir, for non-resident, income accrued or risen outside India will not be taxable in India. So you have to put a dash. Are you all really with me? Rent from property in London. London. So the capital asset, property is situated outside India. Yes, sir. Sir, deposited a bank in London. That means you have received the amount in London. You have received the amount in London. Later on remitted to India through approved banking channel. In exam, you have to check the first receipt. You have to check the first where you are getting the money. First the money has been received in London. Later you have transferred to India. Are you all really with me? That means the income has been accrued or arisen outside India. Point number one. Income has been received outside India. Then it's not an Indian income. It's a foreign income. Foreign income should be classified into two categories. PGBP income other than PGBP income. Whatever it may be. Whatever it may be. Any income received by resident and ordinarily resident will be taxable in India. How much? 75,000. So in the resident and ordinarily resident column, we have to write like that. You should not think, because this is rent. For rent, as per section 24A, standard deduction of 30% has to be reduced as per the chapter income from. So 52,500 should only write. We already discussed. Hello, sir. Come on, Das. Sir, whereas for the other two people, this is a foreign income. My dear lovable students, this foreign income is PGBP income or other than PGBP income? Other than PGBP income will not be taxable in neither in the hands of resident but not ordinarily resident or non-resident. Can I? Dividend from RP Limited. What company? Indian company. Indian company means company as situated in India. That's it. Income has been accrued or risen in India. Income is an Indian income. Whoever it may be. Sir, the 6,000 will be taxable. 6,000, 6,000, 6,000 will be the answer. Easy. Agricultural income from land situated in Gujarat. As we all know that Gujarat, Rajasthan and all are situated in India only. My dear lovable students, since the agriculture land is situated in India, the income is an agriculture income. We have studied section 1010 gratuity, 1010A pension, 1010A leave salary, 1010B retrenchment compensation. Like that, so many exemptions are there in the chapter salary. The same type of exemption is what there in IFOS 10.1. Agriculture income is exempted. Agriculture income is. That means this 25,000 is an exempt income. 25,000 is a. That's why dash, dash, dash. That means the total income, if you are resident and ordinarily resident, is 83,500. Always this will be the highest number because global income is taxable in India. Sir, as compared to resident and ordinarily resident, this guy will be having little less. That is what, man? 21,000. And this guy also in this question, it is 21,000. But it may be less also. Sir, are you understanding why we have learned the residential status? This will be asking a separate question for 5 mark in exam. These all are connected topic. In workbook, we'll be solving in one question itself determination of the residential status and finding out the scope of total income. It's a 10 mark area. Oh my God. Out of 50 mark, 10 mark means something big. Illustration. Book back number 3. Mr. Ramesh and Mr. Suresh are brothers. They earned the following income during the financial year 24-25. Mr. Ramesh settled in Canada in 1996. That means that guy is a non-resident. Because from that time onwards, he went outside India. Sir, he is not visited for at least 182 days during the 11 previous year, or 60 days during the 11 previous year, or 365 days in the 4 immediately preceding previous years. Right? And Mr. Suresh settled in what? Delhi. That means Suresh is a resident. Sir, he is in Delhi only. More than 182 days. Current year 60 days. Last 4 year 300 and more than 65 days. Last 10 year he was in Delhi only. 10 by 10 he is a resident. Sir, fully he is in what? India only. That means more than 730 days in last 7 years he was in India. So that guy is a resident. Global income is taxable in India. Compute the total income for the assessment year 25-26 is the question. So Ramesh and Suresh. Ramesh is a non-resident. Am I right, sir? Whereas Suresh is a resident. You have to resident and ordinarily resident. You have to tell me what will be the taxability status. Just think. Income should be classified into 2 categories. Indian income, foreign income. Indian income, whoever it may be, it is taxable in India. Foreign income should be classified into 2 categories. PGBP other than PGBP. PGBP will be taxable only in the hands of resident. Anyway, it will be taxable in the hands of resident and ordinary resident and resident but not ordinarily resident. Whereas other than PGBP will be taxable only in the hands of resident and ordinarily resident. It will not be taxable either in the hands of resident but not ordinary resident and non-resident. The rules clear? Come on. Sir, interest on Canada development bond. That means asset is situated outside India. 50% of the interest received in India. If income is received in India, it's an Indian income. That means this 35,000 will be, sir, this guy is a non-resident man. Sir, 35,000 into 50% comes to 17,500 should be taxable in the hands of Ramesh. Yes, sir. Sir, entire 40,000 will be taxable in the hands of Suresh. Look at here, man. 17,500 and 40,000. Are you all really with me? You have to apply. You be with me. Apply. Go wrong. Then understand. Dividend from British company received in London. So British company means asset is situated outside India. That means income accrued outside India. Even receipt is also outside India. Purely a foreign income. Foreign income should be classified into two categories. PGBP other than PGP. For a non-resident other than PGP, taxable, not taxable. That means this 28,000 will not be taxable in India. But this guy, sir, global income is taxable. That 20,000 is taxable, dash and 20,000. Pakka? Come to the third one. Profit from business in where? Nagpur. So Nagpur, is Nagpur situated in India? That's it, game over. Why are we reading further? Because income accrued or arisen in India, income received in India will be taxable in India in all the people hand. So 1 lakh and 1,40,000 will be taxable. Easy, sir. Sir, short-term capital gain, fine. SCCG has been arisen from sale of share of what company? Indian company. Sir, share of Indian company, capital asset is situated in India. That means income has been accrued or arisen in India. Then why are you reading more? Sir, whoever it may be, it will be taxable in India. 6090 will be taxable. Are you all really with me? Income from business in Chennai. Is Chennai situated in India? The income has been accrued or arisen from India. This 8070 will be taxable irrespective of the residential status of the assessee. Right, sir? Fees for technical service rendered in India. You provide service in India. That means income has been accrued or arisen from India. It will be taxable. This guy does not have income. So only 1 lakh will be taxable. Are you all really with me? Interest on savings bank deposit. You have put deposit in a bank. SB account. Sir, in UCO Bank Delhi. Delhi is in India. That means this 7,000 and 12,000 will be taxable. But don't forget to claim 80 TTA under Chapter 6A deduction. Because they don't want the gross total income. They want the total income. Are you all really with me? Income from salary, income from house property, PGBP, capital gain and IFOS. If you add all the 5 heads of income, you will be getting gross total income. From the gross total income, if you reduce the Chapter 6A deduction, you will be getting the total income. So under 80 TTA, interest on SB account, either the interest received or 10,000, whichever is lower, can we claim it as deduction? So this 7,000 and here 10,000, can we claim it as deduction? First, it has to be included, man. 7,000 and 12,000 and 80 TTA, 7,000 and 10,000 can we claim it as deduction. Are you all really with me? Agricultural income from a land situated in Andhra Pradesh. Is Andhra Pradesh is situated in India? Yes, sir. Sir, any income received from agriculture land situated in India will be treated as agriculture income. It will be fully exempted. So dash should be the taxable income. Can I proceed? Rent received. You should be very careful, I know. In respect of house property at Bhopal. Is Bhopal situated in India? Yes, sir. So my dear lovable students, sir, since the income has been accrued or arisen in India, the income will be taxable in all people hand. But you have to claim 30% standard deduction. Am I right? So 1 lakh into 30%, 30,000. 1 lakh minus 30 comes to 70,000, and here 60,000 into 70% will be 42,000. If you add everything, you will be getting gross total income. Sir, life insurance premium paid as per section 80C. If you pay life insurance premium 80C, hello sir, you are entitled to claim deduction. Sir, for this 30,000, you can claim Chapter 6A deduction. Look at here, man, 80C, life insurance premium. Then the total income will be this much. This is an expected area for examination. Sir, that means we have studied, my dear lovable students, the residential status. The next step is the scope of what income? Total income. Are you all really with me? Sir, with this, we will be trying to apply certain questions in our workbook. Finding out the what status? Residential status. Okay, sir? And also, we will try to find out the scope of total income. This is a 10-mark area. Be with me. Enjoy, my dear lovable students. I will not read the full question and I will not solve the full question. I will be doing a part of the question and I will leave the balance because still we have to discuss further more things to do the full question. Question number 1. Sir, Mr. Thomas, a citizen of Japan, comes to India for the first time during the previous year 2021. So in previous year 2021 only first time he came to India. During the financial year 2021, 21-22, 22-23, 23-24, 24-25. He was in India for 50 days, 65 days, 95 days, 150 days, 75 days respectively. Please help me, my dear lovable students. When and all he came to India. First of all, what is the jadagam of this guy? This guy is a Dash citizen, Japanese citizen. Are you all really with me? That means this guy is not an Indian citizen. Because if this guy is an Indian citizen or person of what origin? Indian origin. If he is visiting India, then he will fall in the exception. Second basic condition will not be applicable. Clarity? Okay. Sir, when he came for first time? 2021. So he was in India for 2021, then 21-22, then 22-23, then 23-24 and 24-25. 24-25 is our financial year. Look, they themselves given the dates. Please say me. Sir, for 2021 it is 50 days and 21-22 65 days and 22-23 95 days and 23-24 150 days. 150 days. Am I right? And in my financial year 24-25 75 days. Is this 75 more than 60 days? And you have to add this for 50 plus 65 plus 95 plus 150 comes to 360 days. Am I right? Sir, in my financial year 24-25, he was not in India for more than 182 days. That means first basic condition has not been. Since he is not left India, he is not left India, he is not an Indian citizen. He is not an Indian citizen. He has not fallen in the exception. That means for him, second basic condition is applicable. Am I right? Sir, what second basic condition is saying that during the relevant previous year, you should be in India for how many days? 60 days or more. 60 days or more. Don't stop with that. Plus, you should be in India for more than 365 days in the 4 immediately preceding previous years. That means even second basic condition also has not been satisfied. Since none of the basic condition has not been, this guy will be termed as non-resident. Are you all really with me? If he is a what resident? Non-resident. The scope of taxability as per section 5 is the income received or deemed to be received in India will be taxable in India. Income accrued or arisen in India will be taxable in India. That means any income accrued or arisen outside India will not be taxable in India in the hands of non-resident. Are you able to read together computation of residential status and the scope of total income? My dear lovable students, how we have to write the answer, what they want. Determine his residential status for assessment year 25-26. That is our year. Examine the tax implication in the hands of Mr. Thomas for assessment year 25-26 of the following transaction. These 3 transactions will come at the appropriate time. Sir, this discussion we have not made. Don't worry at all. These are scope of what income? Total income. Still furthermore, I have to discuss. Actually, yesterday I've done the residential status. In this slot, I'm further doing. Then tomorrow I'll be adding the other areas. With that, the basics will come to an end. Come on, man. This is how you have to write the answer. Under section 6, subsection 1. Because section 6 is what talking about the residential status. Sir, this is number 1, 2, 3, 4, 5 and 6. 6. Section 6 is determining the, I will say that you are a resident or non-resident. If you are resident, I will further dig into resident and ordinarily resident but not. So 6.1, an individual, yes, individual is said to be a resident in India in any previous year if he satisfies any one of the following condition. Because whether he is a resident or non-resident is based upon the basic condition. How many basic condition? So this is basic condition number 1 and basic condition number 2. He has been in India during the previous year for a total period of how many days or more? 182 days or more. If you are in India for 182 days or more during a relevant previous year, you will be treated as resident. Or, it's not and, it's or. He has been in India during the 4 immediately preceding previous year for a total period of how many days or more? 365 days or more, and has been in India for at least 60 days in the previous year. In tax, previous year means current year. Are you all really with me? Are you able to understand the two conditions? My dear lovable students, if an individual satisfy any one of the basic condition mentioned above, he will be treated as resident. If both the above conditions are not satisfied, the individual is a non-resident. This is what the rule. During the previous year, 24-25, our previous year, Mr. Thomas was in India for how many days? And during the 4 years preceding the previous year, 24-25, he was in India for how many days? 360 days, which is less than the statutory limit of 365 days. That means he does not have much connection with India. Total stay of Mr. Thomas during the previous year in India was less than 182 days. And during the 4 years preceding this year was only 360 days. Therefore, due to non-fulfillment of any of the two conditions for a resident, he would be treated as non-resident for the assessment year 25-26. Those 3 things we have not read, that we will be dealing at the appropriate time. Are you able to appreciate? My dear lovable students, I'm moving into the second question, man. This is an MTP April 2021 question. Sir, Miss Sunita, an American national. American national means not Indian resident. The nationality is American. Born and brought up in American. Got married to Mr. Vikas of India in New York. Fantastic. So, Sunita is from America. Are you all really with me? Whereas Vikas is from India, but they got married in New York on 3rd February 2024. On 3rd February, they got married and came to India for the first time on 14/2/2024. That means in financial year 23-24, Vikas said that we will visit my own country, which is what? India. Because Sunita is from America and Vikas is from India, they got married in New York. Hello, sir. They would have gone for some business purpose or something. They saw, they liked each other. They said that New York Nagaram, like that some song they would have made. Now they are coming to what? India. That to God's own country. Come on. She left for New York on 11/8/2024. In our financial year 24-25, sir, Miss Sunita have left from India. That means from last year February onwards, she was in India. Let it be there. Sir, in April, she was fully in India. In May, she was fully in India. In June, she was fully in India. In July, my birthday, she was fully in India. Only on August 11th, she left. My dear lovable students, so April, May, June, July, August. April, how many days? There is no amendment. It is 30 days. May, 31 days. June, 30 days. July, 31. August, when she left, including the left of leaving should be included. That means 11th only she left. Don't take 10th. You have to take even 11. Then only they will become resident. Government want the date of entry and also date of exit. Because government want everyone to be resident and ordinarily resident. Then only global income is taxable. Are you all really with me? So it is how many days? 11 days. So my dear lovable students, 30 plus 31 plus 30 plus 31 plus 11. How many days? 133 days. So she was in India for 133 days during our previous year. Anyway, it is less than 182 days. Let it be there. But in our previous year, she was in India for more than 60 days. That's not enough, man. She should be in India for more than 365 days in the 4 immediately preceding previous year. Even this condition has also will not be satisfied. Because last February only she came. That to February 14th. Are you all really with me? Yes, sir. Because, sir, Sunita is from America and Vikas is from India. They got married in New York. So they came to India on a special day, February 14th. So on February 14th, remaining number of days she was in India. And March 31st day she was in India. Before that, she don't know what India itself. She never saw even India in the world map also. Destiny take her to India. She was in India for less than 365 days in the 4 immediately preceding previous year. That means she neither satisfied the first basic condition nor satisfied the second basic condition. That guy will be treated as non-resident. Right? Let it be that she received a gift and all they are talking about. That means scope of total income will be coming to a scope of total income at the appropriate time. Determine a residential status and compute the total income chargeable to tax for the assessment year 25-26 is the question. According to you, what is she? Determination of residential status and computation of total income of Miss Sunita. If she returned to India on, sir, when she returned? 11/8/2024 is the first case. Yes, sir. She left. Sir, when she returned? Sir, she returned to India again on 22. That means first she came in the last financial year. What is the financial year? 23-24. On February 14th. February she was there. March she was in India. April, May, June, July, August. August 11 she left. Where? That I don't know. With whom? I don't know. Sir, she again come to India on 20th of February. That means in India, my dear lovable students, on February 20 to 28 days are there in February. So 20, 21, 22, 23, 24, 25, 26, 27, 28. How many days? Plus March fully, 31 days. So 40 days. My dear lovable students, sir, she was in India for 133 days. Plus 40 comes to 173 days. Even still this is less than, still the residential status of her will be what resident? So this is case number 1. Sir, under section 6 subsection 1, an individual is said to be resident in India in any previous year if he satisfy any one of the following condition. You are having basic condition number 1 and basic condition number 2. Paka? He has been in India during the previous year for a total period of 182 days or more, or he has been in India during the 4 immediately preceding the previous year for a total period of 365 days or more, and has been in India for at least 60 days in the previous years. If an individual satisfy any one of the basic condition mentioned above, he will be treated as a, if both the above conditions are not satisfied, the individual is a. Therefore, the residential status of Miss Sunita, an American national, for assessment year 25-26 to be determined on the basis of her stay in India during the previous year relevant to assessment year 25-26. That is, previous year is 24 and in the preceding 4 years. Her stay in India during the previous year 24-25 and in the preceding 4 years are as under. Sir, our previous year is 24-25. Yeah. Sir, from 1st April onwards, she is in India only. Sir, she left India on 11th of August, including 11th we have to include. We also calculated 133 days. Am I right? And she again came back to India because she went somewhere outside India. She felt that India is the only country where happily I can live. So she again came back and she stayed in India from 20th of February till 31st of March. Even the date of entry should be included. And on 31st of March, she is in India only. So again she added her stay for another how many days? 40 days. So she was in India totally 173 days. Gali, basic condition number 1 has not been. But basic condition number 2 has been satisfied for 60 days criteria. Now I have to check in the immediately 4 preceding previous years. Am I right? Sir, in 2021, she don't know there is a country called as India itself. In 21-22, she don't know there is a country called as India itself. in 22-23, she don't know there is a country called as India itself. Then only she found out her fortune in New York. Then he and she visited to a country, a beautiful country called as what? India. That is in 23-24. That one a special date from February 14th. That date should be included. Till 31st of March, only 47 days she was in India, which is less than 365 days. That means even though 60 days apart, the second condition has been satisfied, sir, 365 days criteria has not been satisfied in the second basic condition. Hence, she should be declared as the total stay of Miss Sunita during the previous year in India was less than 182 days. And during the 4-year preceding this year was 47 days. Therefore, due to non-fulfillment of any of the two conditions for a resident, she would be treated as non-resident for the assessment year 25-26. And certain income has been given. Don't worry at all. That income will come later. Come on. Will the residential status change? Somehow government want to make Sunita as a resident. That's why they are altering the question. If she had returned to India again on 21, that is January 20th, instead of 20th of February, my dear lovable students, then 133 days computation will not change. Am I right? Then from 20th of January to 31st of Jan, how many days in Jan? Including 20. 12 days. Am I right? Febu, how many days? 28 days. Is this leap year and all? 25, 26 is leap year? No, sir. Sir, 24, 25. Sorry, 24, 25 is leap year? No, sir. Sir, March, how many days? 31 days. So 133 plus 12 plus 28 plus 31 comes to 204 days. That means which is more than she satisfied the first basic condition. More than half of the year, Sunita have spent her stay in our country, India only. She will be treated as resident. Now I have to further classify whether she is a resident and ordinarily resident. Resident but not ordinarily resident. Last 10 years she does not have any connection with India. So at least 2 years she is not a resident. Sir, even last year also she is not a resident, sir. Yes, sir. Sir, out of last 7 years, at least 730 days or more she should be in India. She is not in India. She was in India only for last year. That too she came on February. So February and March only she was in India. She will not be able to satisfy any of the additional condition. So she will be treated as resident but not ordinarily resident. If that is the case, any income. Now she is in India for more than 6 months. Am I right? So she may feel that, why am simply sitting? Let me earn some income in India. Pay the tax in India. Hello, sir. She may have any income outside India. That income should be classified into 2 categories. PGBP other than PGBP. Am I right? She may be, sir, controlling a business from India. Sometimes the business may be happening in New York, Nagaram. Are you all really with me? Sir, she may control that business from India. Since she is a resident, but not ordinarily resident, PGBP income will be taxable in India. Am I right? That is called a scope of total income. Now, I am moving into the second part. This IFOS part I will come. Determination of residential status of Miss Sunita if she returned to India on 21/2025. Yes, the answer would change. If she returned to India again on 21 instead of 22, in such case, her stay in India during the previous year, 24-25 would be, sir, from 1st of April to 11th of August, it is 133 days only. There is no change. From 20th of January till 31st of March, total 71 days. Total it will come to 204 days. How much days we got? 204 days, which is more than. That means she has satisfied. So since she satisfied the condition of stay in India for more than 182 days during the previous year 24-25, she would become dash in India. She would be a resident but not ordinarily resident in India for assessment year 25-26 since her stay in India in the preceding 7 years is less than 730 days because it is only just how many days? 47 days. Are you able to fall into the provision? This 10 mark should be in our pocket. This will boost our, my dear lovable students, the marks in the DT. Hello, sir. I'm moving to the determination of residential status question again. Determine the residential status and total income of Mr. Raghu for assessment year 25-26 from the information given below. Mr. Raghu aged how many years? That doesn't matter. Age doesn't matter. Age is matter only for determination of tax. Age is not matter for your residential status. A dash citizen. That is matter. You have not fallen for exception. Is employed with a multinational company in Gurugram. Where this Gurugram is there? India. Right, sir. Sir, are you able to read this name properly? Yes, sir. Then the place is in India. Mr. Raghu hold a senior level position as researcher in the company since 2012. That means Mr. Raghu is a jnani. He is a researcher. Okay. To share his knowledge and finding in research, the company gave him an opportunity to travel to other group company outside India while continue to be based at the Gurugram office. That means full time he will not be in Gurugram office. That's what they are trying to say. He will be flying to various places. So for that purpose, he will go out of India. The details of his travel outside India for the financial year 24-25 are as under. What he has done. To USA, he left on 25th of August to 10th of November. So August, September, October, November, this many days he was not in India. He went outside India. UK he went on 20th of November. That means 10th November he come back to India. Again he fly back on 20th till 23rd of December. Then 23rd of December he again come back to 10th of January he went to Germany to 24th of March. That means majority of the time he was outside India. I have to calculate the number of days. And from total 365 days, how many number of days he was outside India? And I will be getting the balance number of days he was in India. If that is more than 182 days, he is a resident. Or if the number of days he was in India during the relevant previous year is 60 days and 365 days in the 4 immediately preceding previous year, he will be treated as resident. Then I will further dig that whether he is a resident and ordinarily resident. Resident, this guy is an dash citizen, American citizen, is employed in multinational company in Gurugram. This guy is an American citizen. Sir, Raghu is holding a senior level post from when? Sir, researcher. Look at here. Raghu holds a senior level position as researcher in company since 2012. So from 2012 onwards, he was in what only? India only. That means he will be able to appreciate or understand the additional 2 conditions. Since he satisfied additional 2 conditions, once he become a resident, he will become a resident, and during the last 4 preceding previous year, previous to 24-25, he was present in India for 380 days. How many days he should be in India? 365 days. They themselves calculated to remove our difficulty, and they are saying that he was in India for 380 days. During the last 7 previous year, preceding the previous year 24-25, he was present in India for only how many days? 700 days. Nigali, because at least you should be in India for 730 days. You was not able to satisfy the second additional condition. Hence, you will be treated as resident, but not ordinary resident. But I have to calculate this residentialship status. During the previous year, he earned the following income. Let it earn. That is computation of total income. That will be coming at the appropriate time. So I want the dates computation. Sir, USA, my dear lovable students, he went out on what date? 25th August. That means on 25th August, he was in India only. Because the entry date and exit date should be included. So August from 26th onwards, he was outside India. So August, then September, then October. When he came back, November. Sir, November 10th he came back. That means 9 days he was outside India. My dear lovable students, October, how many days? 31 days. Entire 31 days he was outside India. September, entire 30 days he was outside India. August 25th only he left. So 25th he was in India. So 26, 27, 28, 29, 30, 31. How many days? 6 days he was outside India. So 6 plus 30 plus 31 plus 9. 76 days. So because of the USA visit, 76 days he was outside India. Am I right? Then coming to UK, man, sir, next one UK. When he left? 20th November. So 20th November he was in India only. So November and December, only 2 months are there. So November and December. Sir, December, when he came back, 23rd. So 23rd he was in India. So 22 days he was outside India. Am I right? November 20th he was in India. Sir, November, how many days are there total? 30. So 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. How many days? So 10 days he was outside India. So 10 plus 22 comes to 32 days. Then one more visit he went for what? Germany. My dear lovable students, Germany he went on 10th of Jan. So 10th of Jan he was in India only. So from 11th onwards, sir, Jan, Feb, March. Sir, full February 28 days he was outside India only. March 24th he came back. So 23 days he was outside India. Jan, leave the date of leaving, 10th Jan. From 11th Jan to 31st Jan. How many days? 21 days. Sir, is the number right? So 21 plus 28 plus 23 comes to 70. That means 176 plus 32 plus 72 days comes to 180 days. So he was out of India for 180 days. Am I right? Total in a year, how many days are there? Out of 365 days, if 180 days, if he is situated outside India, then for how many days he was in India? 180. This 185 is more than 182 days. He has satisfied the first basic condition. Since he has satisfied the first basic condition, he will be treated as a resident. Whereas question specifically saying that he has not satisfied the additional condition because he was only 700 days in the last immediately 7 previous year. Since he satisfied, sir, he has not satisfied the additional condition, his residential status will be a resident but not ordinarily resident. Can we go and check the answer? Come on, man. Sir, determination of residential status. Mr. Raghu would be a resident in India in previous year 24-25 if he satisfy any one of the following condition. Under section 6.1, an individual is said to be resident in India in any previous year if he satisfy any one of the following condition. He has been in India during the previous year for a total period of how many days or more? 182 days or more. This is basic condition number 1. He has been in India during the 4 years immediately preceding the previous year for a total period of 365 days or more and has been in India for at least 60 days in the previous year. If an individual satisfy any one of the basic condition, he will be treated as a, if both the above condition are not satisfied, individual will be a, during our previous year 24-25, Raghu stayed in India for 179 days. Our previous year. 365 minus 186 days. That is, look man, we got 78, 34, 74 days. 78, 34, and 76. Is there any mismatch in days? Yes, sir. Entry and exit has been not included. Right? They are saying that during the previous year 24-25, Raghu stayed in India for only how many days? 179 days. If he stayed only for 179 days, he has not satisfied the first basic condition. Am I right? Then he has to satisfy the second basic condition. What is second basic condition? He should be in India for 60 days during the 11 previous year and 365 days during the 4 immediately preceding previous years. Am I right? Okay, fine. What has happened? Total number of days in a year is 365 days. Our calculation and their calculation differ. Yes, sir. Sir, first they are saying that they went to where? USA. Sir, USA, my dear lovable students, as per our calculation, we are getting 76 days. But they are getting 78 days. Sir, what is the number of days difference? 2 days. Because of what that 2 days coming? Entry and exit. When he left 25th August. So what we have noted is on 25th August he is in India. Hello, sir. Sir, we counted only from 26th. Enapa? When he left? When he left? 25th of August. Yes, sir. When he came back? 10th of November. So 25th of August, he left outside India. Hello, sir. 10th of November, he came. Look at the heading. Look at the heading. What is the heading given? What this period of stay means, from 25th onwards, he was in USA. Till 10th of November, he was in USA. Heading gone. 6 mark gone. John, you are gone. Good understanding, sir. I have to read the question very carefully, sir. That means from 25th of August till 10th of November, he was outside India only. Clarity, sir? Sir, here general rule will not be applicable, sir. General rule will be applicable if they give the traveling date, but they have not given the traveling date. They have given the period of stay. Period of stay means straight away number of days outside India has been given. Don't apply your, sir, mole and all. So, sir, 25th should be outside India and 10th November should be outside India. That means extra 2 days should be included. That's how they got 78 days. Clarity? So, 78 days. Accepting? The next one. Tell me. The next one, we got for UK how many days? 32 days. Since it is period of stay, 20th November and 23rd December should be included. That means 2 days should, sir, we have to include. If we include 2 days, 32 plus 2 will be 34 days. Sir, the answer is plus 34 days. Sir, for us, sir, Germany, 10th January to 24th March, we got the answer as 72 days. We have to add how many days? So 72 plus 2 comes to 74 days. That means calculator, 78 plus 34 plus 74 comes to, so 186 days he was outside India. So out of 365 days, if 186 days if he is outside India, how many days he was stayed in India? Game changed. Are you all really with me? Because of just one heading, if you don't properly see, because that is the mistake every student will do. He will simply apply. Even you are also accepting that at that time. Now, when this question comes, I will be very, very careful. That means I have not satisfied the first basic condition. Then my criteria is I have to satisfy the second one. My dear lovable students, I am in India for more than 60 days during the relevant previous year. Yes, sir. And I should be in India for at least 365 days in the 4 immediately preceding previous year. They are saying that the assessee is in India. Look, man, during the last 4 immediately preceding previous year, he was in India for 380 days, which is more than 300. So even though he has not satisfied the first basic condition, he has satisfied the, because of that he become a resident. But he has not satisfied the additional condition, then he will be treated as resident. That is, and 380 days, which is more than 365 days during the 4 immediately preceding previous year. He satisfied the second basic condition for being a resident. Hence, he is a resident in India for assessment year 25-26. Accepting. A person would be a not ordinarily resident in India in any previous year if such person inter alia, out of 10 immediately preceding previous years, 9 years he is a non-resident, and out of 7 immediately preceding previous year he is staying in India for 729 days or less. Is this positive version or negative version? Negative version, because they are talking about a person will be treated as non-resident, not ordinarily resident in India. Are you all really with me? So as per this case, for the previous year 24-25, Mr. Raghu would be a resident, but not ordinarily resident, since he stayed for less than 729 days during the 7 immediately preceding previous year to the previous year 24-25. Are you able to appreciate? This total income discussion, I will come at the appropriate time, man. This is a beautiful question, man. It's an I love you question from ICAI. Question number 4. Yesterday we have done the provision. Today we are linking. That's what the workbook doing. And once we solve this 550 pages, nothing more will come as question paper, because all these are RTP, MTP, past examination question. And I will highlight where you will go wrong also. Like the period of stay. if you revise it properly, if you be with me for the remaining number of days, exemption in tax is mandatory in nature. Are you all really with me? Sheila, a chartered accountant, is presently working in a firm in India. She's working in India. She's a chartered accountant. She has received an offer for the post of CFO from a company at New York. I don't know, everyone is going to New York. Let it be there. She also want to go back to what? New York. It's not go back, want to go to New York. As per the offer letter, she could join the company at any time between 1st September and 31st of October. This is the joining window. That means she can join at any time between 1st September to 31st of October. September, October. 2 months company have said, anytime you can come and join our company. She approached you for your advice on the following issues to mitigate her tax liability in India. She's saying that I'm going out of India. I don't want to pay tax in India. What I should do? Date by which she should leave India to join the company. My dear lovable students, is she an Indian citizen? Yes, sir. Is she leaving India? Yes, sir. Is she leaving India for the purpose of employment outside India? She fall under 4 exception. That means second basic condition will not be applicable. That means she has to just ensure that she is not in India for a period of 182 days. By keeping that in mind, she can book the ticket. She can go out of India. Then she will be treated as non-resident. Once she become a what resident? Non-resident. For a non-resident, any income accrued or arisen outside India will not be taxable in India. That means any salary she is received in New York, no need to pay any tax in India. Are you able to connect the question? Beautiful question. Direct credit of part of her salary to her what account? Bank account in Delhi. Maintained jointly with her mother to meet the requirement of her family. Look, the word of the question, direct. Direct means first time credit. First time credit, the income has been, sir, received in India. Sheila, don't do that. Please get the entire salary in the New York bank account. Then income is accrued or arisen outside India. Then income has been received outside India. Then you send to whoever you want in India. Then it will not be taxable in India. Period for which she could stay in India when she comes on leave. That means now she is going outside India. And she is asking that how much days I can stay in India. You can stay in India which will not exceed 182 days. If you want to come back during our relevant previous year, my dear lovable students, then the aggregate amount of already stayed period plus the number of stays you will be, sir, staying, visit should not exceed 182 days. Then you will be gali. Next year, Sheila, no problem, Sheila. You come and stay up to 59 days. 60th day, get out of my country. Come on, beautiful question. Sheila, beautiful, come on. The following category of individual will be treated as resident in India only if the period of their stay in India during the relevant previous year is 182 days or more. Sir, Indian citizen who leave India in any previous year inter alia for the purpose of employment outside India, or Indian citizen or person of Indian origin engaged outside India inter alia in an employment who come on a visit to India in any previous year. These are the exception. For these two people, my dear lovable students, second basic condition will not be applicable. Only first basic condition will be applicable. Am I right? Case number 1, beautiful answering. Enjoy, enjoy. Since Sheila is leaving India for the purpose of employment outside India, she will be treated as resident only if period of her stay during the previous year amounting to how many days or more. So if Sheila is in India for 182 days or more, then only she will be considered as a resident in India. Accepting. Therefore, Sheila should leave India on or before 28th of September. Because April, May, June, July, August, September. On or before 28th of September, Sheila, you should get out of India. If you are staying more than 28th of September, it will cross 182 days. In which case, her stay in India during the previous year would be less than 180 days. And she would become non-resident for the purpose of taxability in India. So don't stay more than 28th of September. So you have to book your ticket on or before 28th of. In such a case, if that is the criteria, only the income which accrues or arisen in India, or which is deemed to accrue or arisen in India, or received or deemed to be received in India, shall be taxable. If that is the case, Sheila, you will be treated as a non-resident. Even if you are a non-resident, income received in India will be taxable in India. Income accrued or arisen in India will be taxable in India. So till now they were talking about section 6 of the Income Tax Act. Now in point number 3, they came to section 5 of the Income Tax Act, which is nothing but scope of what income? Total income. Clarity? The income earned by her in New York would not be chargeable to tax in India for assessment year 25-26 because her tag is a what resident? Non-resident. If she leaves India on or before 28th of September. So my dear Sheila, it's better to leave on or before 28th of September. Can I come to case number 2? So if any part of Sheila's salary is credited directly to her what account? Bank account in Delhi, then that part of salary would be considered as income received in India during the previous year under section 5 and would be chargeable to tax under the income tax even if she is a non-resident. What a clarity in the provisions what we are reading. Because even though you are a non-resident, any income has been received in India or income has been accrued or arisen in India will be taxable. Because this is Indian Income Tax Act. Indian income will be taxable irrespective of your what status? Residential status. Therefore, Sheila should receive her entire salary in the New York bank account and then remit the required amount to her bank account in Delhi, in which case the salary earned by her in New York would not be subject to tax in India. Logic clear? Third one, man. If in case Sheila visits after taking up employment where? Outside India, she would be covered in the second exception provided above. Yes, because she is a what citizen? Indian citizen. Then my dear lovable students, she is visiting India. Then second basic condition will not be applicable. Only first basic condition is applicable. And she will be treated as resident only if the period of her stay during the relevant previous year amounting to how many days or more. Therefore, when Sheila comes India on leave, she should stay in India for a period of less than 182 days. So that means this year, Sheila, you don't come at all. Because already you stayed up to 182 days. If you come even one day also, you will become a resident. Right, sir? Since this is the first year you are leaving India to outside India, all the last 10 years you was in India only. That means, sir, it will be 10 by 10 and more than 730 days you was in India only. Then you will be treated as a resident and ordinarily resident. Whatever salary you are earning in New York, also you are liable to pay tax in India. Sheila, don't come to India at all for this year. Next year, my dear, you can come. But stay for less than 182 days. Not 59 days, 182 days. Because she's an Indian citizen. She's staying outside India. She's visiting India. Then she will fall in 4 exception. Since she's fall in 4 exception, second basic condition will not be applicable. Only first basic condition will be applicable. Understanding? So therefore, when Sheila comes India on leave, she should stay in India for less than 182 days during the relevant previous year, so that her status remains as non-resident for the relevant previous year. Moreover, she could not visit India again during the current previous year. For current previous year, don't come to India at all. Are you all really with me? Question number 5 is the last question for the day. We'll be doing. Mr. Sushant furnished the following particulars of his income for the year ended 31/3/2025. Compute his gross total income for the assessment year 25-26 if he is a resident and ordinarily resident, a resident but not ordinarily resident, non-resident. Can we do? Income earned from business in Dubai. That means Dubai business, foreign income, PGBP income. That will be taxable in the hands of resident and ordinary resident only. Sir, resident but not ordinary resident also. If the PGBP business is controlled from India and profession is set up in India, which is controlled from Delhi. Controlled from, that's it. Sir, 80,000 is the amount given. Out of 80,000, 65,000 is received in India. You tell me, sir, column 1, column 2, column 3. I want the answer. Column 1, 80,000. Column 2, 80,000 or 65,000? 80,000. Because that is business income. That business has been controlled from India, fully taxable in India. Third column, 65,000, because even though you are a non-resident, on receipt basis, it will be taxable. So the answer should be 80, 80, 65. Next column, don't see. Come on. Pension for service rendered in India. That's it, John, you are gone. Because income has been accrued or arisen in India. Service is rendered in India, but received in Dubai. Put it on dustbin. Sir, they are saying computed. Because this pension may be, sir, commuter pension or uncommuter pension. They have computed everything and they are saying 24,000. What is the taxability? 24,000, 24,000, 24,000. Since the income is accrued or arisen in India, it will be taxable in the hands of every people. So it should be, wait man, sir, 24,000, 24,000, 24,000. Are you all really with me? Dividend from an oil company, Dubai based company. That means address of this company is Kurkusandu, Dubai. Yes, sir. Received in Dubai. That means income accrued or arisen outside India and income is received outside India. That means it's pakka foreign income. Person number 1, Savda, 15,000 will be taxable. For the other two people, this is other than PGBP income. Will not be taxable in India. Answer, 15,000 dash. Are you all ready with me? 15,000 dash. I'm continuing. Rent from property in Dubai. Now you will be very, sir, happy. Rent. IFHP. 30% standard deduction. This is the use of doing workbook. Yes, sir. Deposited bank in Dubai. That means first receipt is in Dubai. And later on remitted to India through approved what channel? Banking channel. That will not be considered. Always first receipt will be considered. Further receipt, second receipt, alternative receipt will not be considered. That means, sir, the property is situated outside India. That means income has been accrued outside India. Income has been received outside India. It's other than PGBP income. First person, Savda, but 30% can be claimed as deduction. Only 49,000 will be taxable. For the other two people, it will not be taxable. So the answer should be 49,000 dash. Right, sir? You 49,000 dash. Sorry, man. Come on. Dividend from Sunset Limited, Indian company. That's a game over. That means company is an Indian company. That means income has been accrued or arisen in India. How much rupees, man? 78,000. Yara fully taxable. 78,000, 78,000, 78,000, 78. Can I proceed? Interest on money borrowed by Mr. Dinesh. Yar man non-resident. That means interest on money borrowed by Dinesh non-resident for the purpose of investment of shares in ABC Limited. What company? Indian. Have you got any income from Indian company? No, sir. Sir, interest on money borrowed. This is with regard to Mr. He is the assessee. He is getting interest on money borrowed. Who borrowed? Dinesh. He is a what resident? That means the person who are paying the interest is a non-resident. To whom he is paying? Sushant. He may be, sir, person number 1, person number 2, person number 3. If he is person number 1, then my dear lovable students, this 55,000 will be taxable. Global income is taxable. Whereas number 2, the interest has been paid by Dinesh. He is a what resident? Non-resident. What he is doing for the purpose of investment in shares of ABC Limited. He invested somewhere. That means that is not a PGBP income. That is other than PGBP income. Other than PGBP income will not be taxable in the hands of person number 2 and person number. So answer should be 55,000 dash and what? Dash. 55,000 dash dash. Comfortable? Agriculture income from land in Bhutan. Is Bhutan in India? No, sir. So the agriculture land is situated. Since agriculture land is situated outside India, it is not an agriculture income at all. So 10 subsection 1 will not be applicable. That means this 25,000 will be taxable in person number 1. Whereas for person number 2 and person number 3, it is other than PGBP. Other than PGP income will not be taxable. But this is what in India? Nigali. Because sir, receipt concept will be applicable. Whoever it may be, man, that 25, 25, 25 will be taxable. If you add, you will get the gross total income of the every assessee. Are you able to place the first chapter from this chapter 10 mark? That is a very big mark. Very, very big mark for your examination. What you are supposed to do is revise the residential status. Revise the question, what we have done. Sir, in the next lecture, I'll be adding some more theory part. Then I will be doing the question. You will be feeling so much comfortable. That is a way in which we have to study the basics of the tax. Sir, I'm comfortable, sir. From your heart, anybody is there? Where is a grand clap? Sir, very, very, very happy morning to all. So we are doing the workout batch of CA Inter DT. This batch will run for 40 to 50 hours. In this batch, we'll be solving the workbook of the DT plus the case scenarios and the relevant MCQs of the ICAI. That means if you are able to spend 40 to 50 hours with me and revising that workbook, your DT will automatically taken care, my dear lovable students. The topic now we are discussing is the residential status and the scope of total income. So this residential status and scope of total income will surely come for 6 mark in examination. And in MCQ, it may ask for 2 mark. So 6 to 8 mark is the area residential status and scope of total income. In that we have already studied 2 slots. That is residential status will be determined based on the assessee. Assessee can be classified into 2 categories. The assessee may be individual or HUF, other than individual or HUF. If an assessee is individual or HUF, that assessee should be classified into again 2 categories. Number 1, individual, and number 2, HUF. Because the rules for residential status of the individual is different and rules for residential status of the HUF is different. For individual, that individual may be a resident or non-resident. If it is non-resident, there is no further digging. But if the assessee is a resident, you have to again classify it into 3 categories. Number 1, resident and ordinarily resident. Resident but not ordinarily resident, or deemed resident. Or deemed resident. My dear lovable students, an HUF may be a resident or non-resident based upon control and management. Sir, once they become resident, because of control being partly in India or because of control being fully in India, its residential status will be further classified into 2 categories. Resident and ordinarily resident. Resident but not ordinarily resident based upon the residential status of Karta. If the Karta is resident and ordinarily resident, even HUF is also a resident and ordinarily resident. If Karta is not resident and ordinarily resident, that means Karta is resident but not ordinarily resident. Even HUF is also resident but not ordinarily resident. Are you all really with me? Sir, other than individual and HUF, we can classify into 2 categories. Number 1, sir, company and other than company. Sir, for company, it's very simple. You have to check whether, sir, the company is an Indian company or other than Indian company. If the company is an Indian company, always resident. That's it, game over. If the company is other than Indian company, you have to check, is the poem in India or is the poem outside India? If the poem is in India, my dear lovable students, then the company is a resident. And if the poem is outside India, company is a non-resident. My dear lovable students, with regard to the other than company, it's again based upon the CM, that is control and management. If control and management partly or wholly in India, that assessee will be treated as resident. and control and management wholly outside India, that party will be treated as non-resident. This is what the residential status we have discussed till now. Sir, why sir this much poratam in direct tax? Because this is section 6 of the direct tax. Section 6 will lead to section 5 of the direct tax. Section 5 is scope of total income. Scope of total income. Show it. Scope of total income. Are you able to see section 5? That's why it is scope of total income. That means, sir, an assessee may be a resident and ordinarily resident. An assessee may be resident but not ordinarily resident. An assessee may be a non-resident. What are the income to be taxable in India? This is what the scope, the Income Tax Act should explain. What are the scope? So Income Tax Act is saying that any income received in India or any income deemed to be received in India should be taxable, irrespective of the residential status of the assessee. Number 2, any income accrued or arisen in India or deemed to be accrued or arisen in India, taxable. This is called as source concept. That means the source of income is in India. The origin concept, the origin of income is in India. Any income is from India. My dear lovable students, you pay tax in India. Whether that income received in India or accrued in India. Are you all with me? Any income has been accrued or arisen in India or any income has been received in India, that will be taxable in India. Are you all with me? That means any income has been accrued or arisen in India or any income has been received in India, that will be taxable in India. Are you all with me? Now, sir, there is no confusion with regard to the Indian income, but there is confusion with regard to the foreign income. That foreign income has been classified into two categories, PGBP income and other than PGBP income. PGBP income and other than PGBP income. Anyway, for this guy, everything will be taxable because that guy is resident and ordinarily resident. Global income will be taxable. Global income will be taxable. Are you all really with me? But this guy, that guy is also having some attachment with what? India, because he has satisfied the basic condition, but he failed to satisfy only the additional condition. So what this guy is saying that, sir, whether this PGBP is, sir, business is controlled from India or the profession is set up from India, if that is the case, that income will be taxable in India. Otherwise, that income will not be taxable in India. Hello, sir? And other than PGBP income will not be taxable in India. Whereas for what resident? Non-resident. Whether PGBP or other than PGBP, sir, will not be taxable in India. So these are the general rules. I can say general rules. In case of resident and ordinarily resident, my dear lovable students, global income is taxable in India. Am I right? That's why taxable. If the income received in India, taxable. If the income accrued or raised in India, taxable. If the PGBP outside India, taxable. Other than PGBP outside India, taxable. Easy for resident and ordinarily resident. Rule number 2, with regard to the resident but not ordinarily resident, this is the second guy, my dear lovable students. Second guy, because sir, 3 people are there. For second guy, Indian income will be fully taxable. Indian income will be fully taxable. What are the Indian income? Income accrued or risen in India and income received in India. Are you all really with me? This will be taxable in India. In addition to that, sir, PGBP income earned outside India, which has been controlled from India or set up from India, will be taxable in India because this guy is the second person. This guy is the second person. So 2 rules will be applicable. All the Indian income will be taxable, and income which has been accrued or arisen from outside India from the PGBP will be taxable. Am I right? With regard to the what resident, non-resident, my dear lovable students, sir, that non-resident, anyway, Indian income will be taxable. This is what rule number 1. And rule number 2, sir, PGBP income earned outside India will not be taxable. And rule number 3, sir, other than PGBP income earned outside India will not be taxable. How many people? 3 people. 3 rules. First person, 1 rule. Sir, if the person is resident and ordinarily resident, global income is taxable in India. Right, sir? Second person, a resident but not ordinarily resident, two rules will be applicable. Rule number one, Indian income will be taxable. Foreign income, sir, if the income is PGBP income, will be taxable in India. Am I right? The next one, third one, non-resident, third person, three rules will be applicable. Indian income will be taxable. Foreign income, PGBP income will not be taxable. Foreign income other than PGBP income will also not be taxable. This is what yesterday's class we have talked about. Are you all really with me? My dear lovable students, today, this is what the table. Look at here, man. Taxable, 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 taxable. That means if the assessee is a resident and ordinarily resident, global income is taxable. One line summary. Sir, for the resident but not ordinarily resident, two rules will be applicable. Indian income will be taxable. Sir, foreign PGBP income will be taxable. No other income will not be taxable. Are you all with me? If the assessee is a non-resident, Indian income will be taxable. Foreign PGBP income will not be, foreign other than PGBP income will not be taxable. It's very easy to carry this table. Now, let me ask you a question, my dear lovable students. Sir, any Indian income will be taxable. Any Indian income will be taxable. What are the two Indian income? Income received. Income received. That means any income received in India, the source of income is in India. What government of India is asking that if the source is in India, sir, you have to pay tax in India. After you become chartered accountant, you will be, sir, going for a job. You will be getting salary. Once you get the salary, sir, that salary you will give to your mother, pakathu veet Andiya. Your mother. Because the source is from your house. What Indian government is feeling that if the source is in India, pay the tax in India. Don't go and pay tax to any other country. Are you all really with me? This is what income received. The only problem in India, or rather, only problem in the Income Tax Act, even though certain things, sir, now we are studying income tax at the morning, 7:30 is our class. Am I right? I'm saying, sir, now it is night. Will you accept? No, sir. This is not night. This is morning. What income tax throughout the act will say that certain things will be deemed as. What, man? Deemed as. Sir, now it will be deemed as night. That's what? Income received. This is actual or dash to be received. Deemed to be received in India. Deemed to be received in India. Why? Because Indian government want to increase the tax base. You tell me whether the assessee is a resident and ordinarily resident, resident but not ordinarily resident, or non-resident. My dear lovable students, Indian income will be taxable. Indian income will be taxable. Indian income will be. So the scope of Indian income, you want to be less or more? More. That's why they are not only stopping with the actual, they are going for the deemed. So my dear lovable students, income received or deemed to be received in India. Income accruing or arising or deemed to be accruing or arising in India. That means Madiri. Marudil. Madiri. Are you all really with me? That means it will be treated as income received in India. It will be treated as income accrued or arisen in India. My dear lovable students, from here game starts. Income Tax Act is explaining what is this concept of deemed. What, man? Deemed through two sections. Section 7 and Section 9. Without Section 7, Section 9, you are not supposed to step into the examination. You cannot solve the residential status and the scope of total income. The scope of total income answer is lie in Section 7 and Section 9. So you tell me, what is Section 5? Scope of total income. Section 6 is the residential status. Section 7, income deemed to be dash in India, received in it. So is the first limb or the second limb? First limb. What is the first limb? Income received or deemed to be received in India. Deemed to be. That means number 1, number 2, number 3. This 3 income will be treated as income deemed to be received in India. Am I right, sir? Income number 1, contribution in excess of how much percent of salary? 12% of salary to the recognized provident fund or interest credited in excess of 9.5% per annum. This is a salary chapter topic. I am the employer, you are the employee. Sometimes I will be contributing more than 12%. Sometimes I may contribute 14%. That means, my dear lovable students, the extra 2% will be taxable in the hands of employee as perquisite. My dear lovable students, have I paid that extra 2% in your hand? No. I deposited the 14% of salary in the PF account only. That means, as an employee, have you received that amount? No. It will be deemed that you have received in your hand. Are you all really with me? That means, even for that 2%, my dear lovable students, that will be treated as received in India. Received in India. It is liable to pay tax in India. So government is saying that, otherwise you will say that the provident fund is situated outside India. Since the provident fund is situated outside India, my dear lovable students, the income is not received in India. Only Indian income will be taxable. Government is clarifying all the doubts. Sir, whether the PF account you have maintained in India or outside India, if an employer is contributing to the employee provident fund in excess of 12% or interest in excess of 9.5%, it will be deemed that it has been received by the employee. Game over. Number 2, amount transferred from unrecognized provident fund to the recognized provident fund being the employer's contribution and what they're on, interest there. That means we know that there are 4 types of provident fund are there. Recognized provident fund, statutory provident fund, public provident fund and unrecognized provident fund. You are keeping the fund in the unrecognized provident fund. Are you really with me? Sir, if you deposit in unrecognized provident fund, we will not be taxable at the time of credit. We will be taxable at the time of withdrawal. Right? So at the time of contribution, nothing would have been taxable. Suddenly you are coming and saying that, sir, I'm going to shift from the recognized provident fund to the unrecognized provident fund to the recognized provident. That recognized provident fund is having limit. That should not exceed 12% of the salary and interest should not exceed. So if you do this drama, my dear lovable students, it will be treated as income deemed to be what in India? Received in India. Because government till now don't know that you are saving the money in the unrecognized provident fund. Now you are shifting from unrecognized provident fund to the recognized provident fund. It will be treated as income in the hands of the employee by virtue of deemed to be received in India. Clarity? The third one, man, contribution by the what government? Central government or any other employer. Sometimes you may be a central government employee. You may be a railway employee. Your father, your parents may be railway employee. They may be working under the central government staff. Then the employer is the central government. If employer is the what government? Central government. They will be contributing to notified pension scheme under section 80 CCD. Under section? That means after your retirement, you have to get some money. My dear lovable students, for that, employee will be contributing to notified pension scheme. Same contribution will be done by the employer also. So, section 7 is saying that 3 things will be treated as income deemed to be received in India. Number 1, sir, to the recognized provident fund, if an employer is contributing more than 12% and from that recognized provident fund, employer is getting more than 9.5%, accepting. That's it. Number 2, sir, if you are transferring money from the unrecognized provident fund account to the recognized provident fund account, then the receipt in the recognized provident fund account will be treated as deemed received in. Next one, man, sir, your employer is a central government employer or the any other employer. They are contributing to notified pension scheme under section 80 CCD. Then, my dear lovable students, it will be treated as income has been deemed to be received in India. Are you all really with me? So all are salary related item. All are salary related item. That means employer is contributing in excess of 12%. Then interest in excess of 9.5%. Shifting from unrecognized provident fund to the recognized provident fund. Employer is contributing to the notified pension scheme under section 80 CCD. Can I proceed? Now the real game starts, that is section 9. Income deemed to accrue or arisen in India. Income deemed to accrue or that is explained by section 9. That is explained by section. That means whose job over? 7's job over. 7 is just to support the salary chapter. Now section 9. Section 9 we are having 9 clause 1, 9 clause 2, 9 clause 3, 9 clause 4. 9 clause 1. Beautifully enjoy this part. This part is only there as the scope of total income. Their scope of total income, they'll be testing what plus what only? 7 plus 9 only. You know one thing, once we complete 7 plus 9, the first slot of the direct tax residential status discussion will comes to an. Sir, income accruing or arising directly or indirectly through or from. Through or from. That means income is accruing or income is arising. Either what or what? Directly or indirectly. Directly or indirectly. Through or from these sources. Number 1, business connection, property, source or capital asset which is situated in India. That means you should be very, very clear and clever. Please don't by heart. Please be with me and enjoy. What section 9, subsection 1, clause 1 is saying that? Sir, if the income is accruing or what? Arising from these 4 things from India, it will be deemed that income has been accrued or arisen in India. It has been accrued or arisen in India. Are you all ready with me? Sir, that number 1 is from the business connection. Number 1 is from the business connection. So, you are getting an income from India through a what connection? Business connection. Then, my dear lovable students, that income is originated because of the what connection? Business connection. That means the income has been deemed to be accrued or arisen in India. Am I right, sir? Then number 2, property. You are having a house property in India. From that house property, you are getting rent. Or tomorrow, you may sell that house property. My dear lovable students, you will be having capital gain. Then that capital gain will be treated as accrued or arisen in India. Or from any source in India. You are having a source. For example, if you put an FD in an Indian bank, you are getting interest. You have invested in mutual fund. You are getting dividend. The source is from India. Then the income will be deemed to be accrued or arisen in India. And the capital asset. Sometimes you would have bought the equity shares of an Indian company. So the capital asset is situated in India. If that is the case, income has been deemed to be accrued or arisen. 4 things. Number 1, business connection. Number 2, property. Number 3, source. Number 4, capital. Look, any income accruing or arising in any place outside India. In any place, whether directly or indirectly, through or from business connection in India. For example, I am ANM classes. I am doing, sir, business in India. I am getting income in India. That will not fall under this definition. Sir, I am getting income outside India. I am getting income. Sir, how are you getting income outside India? Because of the business connection in India. Because of the. Then government of India is saying that even though you have received the income outside India, that is not a foreign income. That is an Indian income. Because once the income is an Indian income, it will be taxable in all 3 people's hands. Are you all really with me? Because even though you have received the income where? Outside India. My dear lovable students, the reason for the receipt is because of business connection in India. Reason for the receipt is because of the business connection in India. So it should never be treated as a foreign income. It should be treated as an. But there is one exception. These exceptions and all will be tested as the adjustment points in question for what resident? Non-resident. But if you are a what resident? Non-resident. That means the 3rd category of person. I am not a resident and ordinarily resident. I am not resident but not ordinarily resident. I am a. The following are not deemed to accrue or arisen in India. Number 1, number 2, number 3. These 3 things and number 4. These 4 things will not be treated as income has been accrued or arisen from India. Number 1, business with operations partly outside India. Business with operations partly outside India. Sir, only the income reasonably attributed to operation carried out in India will be taxable in India. For example, I am a what resident, non-resident. This will be tested in exam. Very carefully, logically understand. So that means I don't have much connection with India. That means during the 11 previous year, I was not in India for 182 days or more. During the 11 previous year, I was not in India for at least 60 days or more. And cumulatively 365 days or more in the 4 immediately preceding previous year. That's why I got the tag of a non-resident. That means I don't have much attachment with what? India. So that's why I got the tag of what resident? Non-resident. I'm having a business. I'm having a that business, sir, if it is fully in India, my dear lovable students, that income has been received in India or accrued in India. I will never go to the deemed concept at all. But if that business is situated outside India and I'm operating some part of the business is from what India also outside. 50% of the business I'm operating from outside India. 50% of the business I'm operating from India. My dear lovable students, if the assessee is a non-resident, sir, for him, sir, first one, Indian income will be taxable. PGBP income outside India will not be taxable. That's it. And other than PGBP also will not be taxable. Are you able to follow the three rules? If that is the case, how much percent of the business is controlling from outside India? 50%. That means the Indian business income into 50% will not be taxable in India. That means the remaining 50%, since he is controlling from India, my dear lovable students, that will be taxable in India because that will be treated as Indian income and that will never be treated as foreign income. Are you agree with me? So business with operation partly outside India, that means that part will not be taxable in India. That's what only the income reasonably attributed to operation carried out in India is taxable in India. Income from operation outside India is not deemed to accrue or arise in India. That means I am a what resident? Non-resident. What is the general rule? My dear lovable students, the general rule is if you are having any income accruing or arising in any place outside India, whether directly or indirectly through or from business connection in India, it will be deemed that income has been accrued or arisen in India. This is what our general rule. To that general rule, we are having 5 exceptions. Exception number 1. Sir, if you are a what resident? Non-resident. And if you are having a business and that business is partly operated outside India, then my dear lovable students, that will not be taxable in India. That portion, that part will not be taxable in India. Number 2. Sir, purchase of goods in India for what? Export. That means sir, no income is deemed to accrue or arise in India. If the assessee is a what resident? Non-resident. Sir, I am a non-resident. That means I am situated outside India. I came to India for 10 days. You tell me, if I come to India for 10 days as per income tax law, will I become a resident? Sir, why you came to India? I don't came to India for see the Taj Mahal. I don't came to India to see the Shah Jahan and Mumtaz. I came to India for purchasing goods from India, for purchasing calculators from India. Hello, sir. So for non-resident operation are confined to purchase goods in India for what? Export. That means, my dear lovable students, I will come to India, I will purchase the calculator and I will export to any other country. Any other country. That means from India, I will export to Japan. From India, I will export to New York. From India, I will export to, sir, any other country outside India. If that is the case, you tell me, my dear lovable students, what government of India is saying that activity will not be treated as income has been accrued or arisen from India. A non-resident, please come to our country. Please purchase from our country. Then the domestic sales will increase. Yes, sir. For that, if the government of India is saying to the non-resident that you have to pay tax in India, no non-resident will be interested to come. They will say that, sir, I am from Australia. I will go to Germany. I will purchase the calculator from Germany. From Germany, I will export to New York. Otherwise, I thought of come to what? India. So what government is said that if the non-resident is coming to India just for purchase the goods, and those purchased goods they are not selling in India, those purchased goods they are exporting outside India, then that activity will never be treated as income deemed to accrue or arise in India. If it is not income accrued or arisen in India, that means, sir, it will not come in the scope of the total income. That means for that activity, the non-resident is not liable to pay tax in India. Next one, sir. Sir, collection of news and views in India. Super fantastic. Will be tested in exam. Sir, I am a what resident? Non-resident. Engage in news agency or publishing. Sir, I am working in Saudi, Al Jazeera. Sir, there is a, news channel called as Al Jazeera in Saudi Arabia. I am a person who are working in Saudi, Al Jazeera. Sir, in India, 2011 World Cup happened. We won because of Mahendra Singh Dhoni. You may have difference of opinion. I don't have anything. Sir, if you want to pass in Jan, say that Mahendra Singh Dhoni. That's it. My dear lovable students, Sir, this has to be reported. This news has to be reported all over the world. So I am working in Al Jazeera. I'm coming to what? India. So I am a what resident? Non-resident. I will be in India for that 20-30 days or whenever that World Cup happening. Hello, sir. Engage in news agency or publishing. Publishing in the sense means I may be a newspaper publisher or I may be a magazine, are not taxed, sir, on income from collecting news and views in India for transmission outside India. So what I'm doing, I'm coming here, I will be taking the interviews with a lot of people. If you see, Ricky Ponting is there, so a lot of, sir, coaches are there, Gary Christian is there, sir, the Al Jazeera want to have an interview with the Gary Christian or current coach, that is Gautam Gambhir. Hello, sir. Sir, he won't give any interviews because he's not even talking with the teammates itself. Then how you'll be giving interview? Let it be there. So Gary Christian will take, man. Sir, Gary Christian is the person when India won in 2011, he showed like this. Hello, sir. Because he has achieved something. So Al Jazeera person want to interview the Gary Christian and want to telecast that interview not in Indian channel. It's not in, sir, நீங்கள் பார்த்து கொண்டிருப்பது Sun TV in Tamil Malay, not in that channel. They want to export that news. They want to export that views where? Outside India. From that, they are getting some income. Al Jazeera is getting some income. That's what their business is all about. Indian government is saying that, come on, come to our country, collect the news, get the views, get the business. We will not say that the income has been accrued or arisen from India. We will not disturb you by way of asking the tax. Are you all really with me? Very important, the next one, man. Shooting of films in India. Jackie Chan is coming to India. He's coming and saying, quang, quang, quang. Hello, sir. He's using the Indian place. For example, Jackie Chan want to, sir, conduct a film. For that, he is seeing some school or something. He's coming to ANM classes. Hello, sir. He's asking that, is there, sir, I just want a Kutti Jackie Chan. Sir, yes, Iman is available. Yes, sir. Alright. Is there? Kutti no. Pinadi irkar. So, no income is deemed to accrue or arise in India. For shooting films, if the non-resident is an individual who's not a what citizen? Indian citizen. I'm a non-resident. I'm Tom Cruise. I'm coming to India. Sir, I'm any actor who are situated outside India. For the purpose of acting, I'm coming to India. Film acting. Yes. Then you can capture India. You can show India to all over the world. From that, you will be getting revenue. Don't pay tax in India. Let everyone see India. Then tourism will improve. Are you all really with me? Sir, a firm with no partners who are Indian citizen or what? Resident. That means, sir, I'm a film shooting company, but no partners who are what? Indian citizen or residents. That means all the partners are what? Resident, non-resident. That partnership firm is coming to India for the purpose of shooting film in India. And they are shooting something. Aluma, doluma, they are going out ma. For that, government of India is saying that don't pay tax in India. A company which no shareholder who are Indian citizen or what? Resident. Sir, that means I'm a company. I'm coming to India for the purpose of shooting and I'm shooting India, sir, along with the actor. And I'm going out. I'm exporting that. What Indian government is saying that no problem, man. That will not be taxable in India. And the last one, man, sir, explanation 1E. Display of rough diamond in special notified zones. Sir, I am a what company? Sir, engage in diamond mining. That means diamond mining means Indian people are having a great attachment toward the gold and diamond. Generally, kids, if someone say that, they biscuit taranda, they will go back. Indians, diamond, they will go back. Sir, so I am a what company? Foreign company. Engaged in diamond mining. Is not taxed in India on the income from displaying uncut, unassorted diamond in where you should not go and show in the malls and all. You should show in the SNCs. What is SNC? Special notified zone. Notified by the central government. So if you are a what company? Foreign company. Come on, come to India, do this 5 activity, my dear lovable students. That income will not be treated as income deemed to accrue or arise in India. Number 1. Business with operation partly outside India. purchase of goods in India for export, collection of news and views in India, shooting of films in India, display of rough diamond in special notified zones, right? What is the topic we are discussing? We are discussing about 9 subsection 1 class 1. In that class 1, this many discussions are there. If any income is accruing or arising either directly or indirectly from 4 things. Number 1, business connection, property, source and capital asset. Income is accruing or arising outside India. But that reason for accruing or arising is because of what connection? Business connection in India. Then that income will be deemed to be accrued or arisen in India. Clarity? My dear lovable students. But sir, if the assessee is a what resident? Non-resident. And if he is doing how many activity? 5 activity. Then that will not be treated as income deemed to accrue or arise in India. Activity number 1. Business with operation partly outside India. Purchase of goods in India for export. Collection of news and views in India. Shooting of film in India. Display of rough diamonds in special notified zones. The next one. Sir, income from property. That is the second income. Sir, asset. That is the third income. And sources of income in India. That is the fourth income. For all the 4 remaining 3, we are having only one rule. Any income which arises from any property. That property may be movable property, immobile property, tangible property, intangible property, would be deemed to accrue or arise in India. Example, you are getting rent from a property. My dear lovable students, if the building is situated in India, it will be deemed that income is accrued or arisen from India. Interest on deposit with Indian company. You gave some deposit. For that, you are getting interest. Since the deposit is in India, income will be accrued or arisen in India. Are you all really with me? Income through transfer of capital assets situated in what? India. For example, I am a non-resident. I am situating outside India. I am getting some income. Sir, how you are getting some income? Sir, I am having a house property in India. Am I right? This property I am selling. Because of selling that, I am getting some capital gain. Any income, what or what? In any place outside India. That means I'm getting the income outside India, whether directly or indirectly, through or from capital gain, from transferring the capital assets situated in India, are deemed to be accrued in India, irrespective of the asset type or the payment location. That means, my dear lovable students, you have to be very careful, man. What section 9, subsection 1, class 1 is saying that if you are a non-resident, if you are getting any income outside India because of business connection from India, it will be deemed that income has been accrued or arisen from India, right? Number 2, sir, because of any property situated in India, because of any source from India, because of any transfer of capital asset from India, then it will be deemed that income has been accrued or arisen from India. Sir, I'm moving into the next clauses. We can easily say that 9 subsection 1 clause 2. 9 subsection 1. Salary earned. Salary? You are earning salary for the services rendered in India. That means where you are worked. India. For example, I may be a non-resident. I came to India and I would have got some salary. After work is over, I would have gone out of India. And I would have received that salary in outside India. Even though you receive the salary outside India, you receive that salary for the job what you have performed in India. That means as per section 9, subsection 1, class 2, everyone join along with me. As per section 9, subsection 1, class 2, if you receive any salary outside India for the services rendered in India, it will be treated as income deemed to be accrued or arisen. So income from salary earned in India. Sir, salary for service rendered in India is deemed to accrue in India. Salary for leave or rest period related to service rendered in India, provided it form part of terms of the service contract. Simple. Where you worked? In India. Where you got the salary? Outside India. Still it will be treated as deemed to be accrued or arisen in India. So what is section 9, subsection 1, clause 1 for income? Number 1. Income from business connection, income from property, income from source, income from capital assets. Paka. What is 9 subsection 1 clause 2? Salary for earned for the services rendered in India. Coming to the next one, man. Salary payable by government. Salary payable by which government? Central government. Which government? State government. Where this government is situated? India. That means you are getting income from Indian government. My dear lovable students, pay tax to the Indian government. That's what the tax system is all about. To Indian citizen. I may be a what citizen? For services rendered outside India. For example, my dear lovable students, I am a what citizen? I went outside India representing government of India. I may be a government official. I will go to the other country for embassy purpose. How the other embassy are situated in India? Sir, in Nungambakam itself, we are having a American embassy. The same way, in America, Indian embassy will be there. So, in Indian embassy, American officials will not be there. In Indian embassy, Indian officials will be there. That Indian official is the workers of the government. Are you all really with me? So, they are gone out of India and working on behalf of the Indian government. So, they will be getting salary from Indian government. That will be treated as income accrued or arisen. You should understand this salary and this salary. Second salary and third salary. Second salary, where you worked? India. Where you got the salary? Since the service has been performed in India, it will be deemed that income has been accrued or arisen in India. Right? Next is salary. 9, subsection 1, class 3. Where you worked? Outside India. Where you got the salary? Outside India. Who paid? Government of India. Where they are? India. Since it will be treated as income has been accrued or arisen in India. Clarity? Next one. 9. Subsection 1, clause 4. Dividend paid by what company? Indian company. Where? Outside India. So that will be reading and will be proceeding further, man. Are you able to appreciate? Salary paid by government for services rendered outside India. You provide the service outside India. You got the salary outside India, but it is paid by the Indian government. So salary payable by whom? Government. To whom? Indian citizen. For service rendered where? Outside India are deemed to be accrued in India. Sir, the Indian citizen may be a dash or dash, resident or non-resident. Let it be a resident and ordinary resident, resident but not ordinary resident or non-resident. Hello, sir. Since you receive salary from Indian government and Indian government is situated in India, my dear lovable students, it will be treated as income has been deemed to be accrued or arisen from India. If the salary is paid to other than what citizen? Indian citizen by government, then this section does not apply and hence not taxable. So 9, subsection 1, class 1. How many income? Any income from business connection, any income from property, any income from source, any income from capital asset. 9, subsection 1, class 2. Salary received outside India for the services rendered in India. Number 3. 9, subsection 1, class 3. Salary for the services rendered outside India and received outside India from the government of India. Can I? My dear lovable students, this is just a highlight. Allowances and perquisite paid where? Outside India by government are exempt under section 10 subsection 7. If you study the salary chapter 10.5, leave travel concession or leave travel assistance will be there. There is one section called as 10.7 for the foreign allowance. Foreign allowance is fully exempted. So you may be a Indian citizen. You will be representing the government of India. You will be working outside India. You will be getting salary outside India. That salary will be treated as deemed to be accrued in India. Whereas, sir, if you are getting any what and what, allowances and perquisite, that is fully exempted under section 10.7. Fully exempt under section. I'm moving to the next income, man. Sir, section 9, subsection 1, clause 4. What income? Dividend income. Paid by whom? Indian company. So, where the Indian company is situated? India. But they are paying outside India. That means non-resident invested in India. Sir, non-resident is getting income outside India from Indian company. Then it will be treated as income has been deemed to be accrued or arisen. That's what dividend paid by what company? Indian company. Outside India are deemed to be accrued or arisen in India and taxable for the shareholders. This is what section 9, subsection 1, class 4. Class 1. Business connection, property, source, capital asset. Class 2. Salary received outside India for the services rendered in India. Number 3. Indian citizen receiving salary outside India for the services rendered outside India from the government of India. Right? Class 4. Dividend received outside India from an Indian company. Clarity? Next one, interest. Very important part and very interesting part. Very important part and very interesting part. You are a non-resident. You are a Sir, you gave loan. That's why you are getting interest. Am I right? You gave loan. That's why you are getting what? Interest. Sir, interest is deemed to accrue or arisen in India if it is payable by whom? Government. Who is paying? Government is paying. That means who borrowed? Government borrowed. Hey, if salary has been paid by government, it will be treated as income has been accrued or arisen in India. Are you all with me? The same interest has been paid by Indian government, then it will be treated as income has been. Number two, a dash in India. Sir, ANM classes is paying interest. Is ANM classes a resident? To a what resident? Non-resident. That means non-resident is getting interest outside India. But from government of India or from resident of India or from a non-resident. Wow. That means the recipient is a non-resident and even payer is also a non-resident. What that non-resident is doing for debt used in the what or what in India. That means this non-resident borrowed money from this non-resident, my dear lovable students. After borrowing the money, the payer non-resident, borrower non-resident has started business or profession in India. That means he used the fund to do business in India. So what they are saying, if the assessee is a what resident? Non-resident. And my dear lovable students, he is getting interest income from either government of India or from resident of India or from another non-resident. And that non-resident used that fund for the purpose of doing business or profession in India. This will be tested as exception. This is there in the workout. Don't worry at all. Sir, in the following cases, the interest is not taxable when the borrowed money is used for. That means we are talking about non-resident. He is situated. He is getting interest from the government of India, from the resident of India, from the non-resident of India, non-resident who are doing business or profession in India. Are you all really with me? But in two circumstances, that interest will not be taxable. That means that interest will not be treated as income has been accrued or arisen from India. Number one, a business or profession conducted where? Outside India. Business or profession conducted outside India. Hello, sir. Generating income from any source outside India. That means if the source of income is from outside India. Sir, I am a government. I am a resident. I am a non-resident. I borrowed money from a non-resident. And that money, with that money, I am doing business or profession outside India. Or I invested outside India. From that, I am generating some income. For that, I am paying interest. What government is saying that such income will not be treated as deemed to be accrued or arisen in India. And the exception for non-resident for debt used in the business or profession in India, the same is not taxable if the debt are used outside. One line summary of the entire discussion is if the assessee is a what resident. And if he is getting any interest from government of India, a resident of India, and a non-resident, and that non-resident should use for the business or profession in India, then that interest will be treated as deemed to be accrued or arisen in India. Am I right? My dear lovable students, but if these people, government of India, resident in India, or a non-resident has borrowed money for the purpose of conducting business outside India or for generating any source from outside India, this concept will not be applicable. That's it. I'm coming to the 9 subsection 1 clause 6. Clause 6, which is royalty. Which is what? Royalty. I am a non-resident. I'm a non-resident. I'm situated outside India. Have you saw Nanban film? Yes, sir. In that Vijay last finding out, sir, where is sir Kosasi Pasapogad? They will be going and searching Kosasi Pasapogad. At that time, one beach they will show. Shankar will show one beach. At that time, lot of people will be doing findings, sir, doing research and all. How to use the, sir, washing machine with one machine. Cycle will be showing. Like that, being a non-resident, I am a big scientist. I find out something very important or useful for conducting the business. I shared those things with the government of India to conduct business in India. I shared those things with ANM classes to conduct the business for ANM classes in India. Or I shared with another non-resident to conduct a business or profession in India. For that, that non-resident is asking royalty. That non-resident is asking That's what royalty is deemed to be accrue in India. If it is payable by government of India, a resident in India, a non-resident for rights or service used in India, only when the royalty is in respect of business or profession carried out in, or for generating income from any source in India. Am I right, sir? The same, the last case, it was interest. Now it has become exception for a resident in India. Sir, in the following case, royalty is not taxable. What would have been the case, man? Sir, in respect of transfer of any right or any property or information used for a business or profession conducted, the same rule, generating income from any source outside India. My dear lovable students, sir, the business should be conducted in India. And if non-resident is getting any royalty, my dear lovable students, that royalty will be treated as income has been accrued or arisen from India. Am I right? Sir, lump sum royalty not deemed to accrue or arise in India. Sir, lump sum royalty paid by resident to a what resident? For the transfer of right in respect of computer software along with the what hardware? Computer hardware. Under a scheme approved by government are not deemed to accrue or arise in India. For example, he find out one tally software. Who? Non-resident. I am a resident. I am paying 10 crore to get that software. That means it will be treated as a purchase price only. So it will be treated as purchase and sale only. That's what lump sum royalty payment will not be treated as income accrued or raised in India. But if I am a calculator manufacturer, I am manufacturing calculator in this shape and this size. For manufacturing of every calculator, I have to pay 10 rupees to the non-resident. That is not a lump sum royalty. That's a recurring royalty. Recurring royalty will be taxable and lump sum royalty will not be taxable. Meaning of royalty and all irrelevant, man. Are you all with me? Yes, sir. So what is section 9, subsection 1, class 1? Income accrued or arising from business connection, property, source, capital asset. Are you all with me? What is 9, subsection 1, class 2? Salary received outside India for the services rendered in India. What is 9, subsection 1, class 3? For an Indian citizen, sir, salary received outside India for the services rendered outside India from the government of India. 9, subsection 1, class 4. Dividend received outside India from an Indian company. What is 9, subsection 1, class 5? Interest. Interest received by a non-resident from government of India, from resident of India, or from a non-resident who are conducting business or profession in India. Right? 9, subsection 1, class 6. Royalty. Sir, a non-resident is receiving royalty from government of India, from resident of India, from non-resident of non-resident who are conducting business or profession in India. Am I right? Then 9, subsection 1, class 7, that is fees for technical services. Fees for example, my dear lovable students, I am a government of India. For example, government want to start a big manufacturing plant, car manufacturing. They are also going to enter into what manufacturing? Car manufacturing. For manufacturing car, government also going to start like Tata, like Stalin car, like sir, Modi car, sir, Nano car, like some car they are going to manufacture. For that, a big plant and machinery has to be installed in India. This plant and machinery is worth 50 crores. We can even increase since it is government of India, 500 crores. 500 crores. My dear lovable students, this plant and machinery government has purchased from China. Not duplicate product, original product. So, this has to be properly installed. Hello, sir. For the purpose of installation, hello, sir, a big gigantic person called as Iman is coming from, Thailand. From Thailand to India, he is coming for the purpose of installing this. He is coming here, he is touching here, there and all. He is saying that the machine is ready. My dear lovable students, for that he is collecting some fees from India. That is called as fees for technical service because he know the technique. Only he know the technique, where to touch, how to fix, everything. How much crore? 500 crore plant and machinery has been fixed. He got 5 crore. You just tell, sir, fees for technical service will be deemed to accrue or arise in India if it is payable by government of India, a resident of India, non-resident, when the fees for technical service is in respect of service used for business or profession or for generating income from any source in India. Am I right? The same exception will be applicable. My dear lovable students, if a business or profession is conducted outside India, that fees for technical services will not be taxable in India. Or for generating income from any source outside India, that fees for technical services will not be taxable in India. Are you all really with me? This is the one line summary. This one table is more than enough for your examination. Adapavi. Sir, if I say this first, you will not be able to appreciate or understand. This is, sir, IFRS. I stands for interest. F stands for fees for professional or technical services. R stands for royalty. And S stands for salary. Are you all really with me? Sir, if you look, these are the clauses. Now, are you able to appreciate or understand? 9 subsection 1. Clause 1 is income accruing or arising from business connection, property, source, capital asset. Sir, clause 2, salary earned outside India for services rendered in India. Clause 3, salary payable by the government to the Indian citizen for service rendered outside India. Clause 4, dividend paid by Indian company outside India. Clause 5, interest paid outside India by government of India, by resident of India, by the non-resident. Are you all with me? Royalty paid outside India to a non-resident by government of India, by resident of India, or by non-resident. Technical services payable to a non-resident by government of India, by resident of India, or by a non-resident. Are you all really with me? And we are having clause 8. I will come at the appropriate time. Clause 8 and we will finish it. That's it, man. We are done with that area. Sir, government. Sir, if you are getting interest from government, taxable. If you are getting royalty from government, taxable. Fees for technical service from government, taxable. Am I right? My dear lovable students, sir, resident in India. Sir, resident in India. Global income is taxable, sir. Are you really with me? Taxable, taxable, taxable. Am I right? Exception. But if it has been used for business conducted outside India or any other source of income outside India, it will not be taxable, not taxable, not taxable. Am I right? Sir, think like this. You are a non-resident. You are getting interest from government. Taxable. Royalty from government. Taxable. Fees for technical service from government. Taxable. Next one. You are getting interest from resident. Taxable. You are getting royalty from resident. You are getting fees for professional technical service from resident. Taxable. But that resident is using that, sir, fund for doing business outside India. Not taxable. To earn any other income outside India. Not taxable. Alright, sir? The same way with regard to this. Next one, sir. Sir, you are getting interest from a what resident? Generally not taxable. Generally. Hello, sir. Because you are a non-resident. You are getting interest from non-resident. Both the people are situated. Why are you paying tax in India? Generally not taxable, not taxable, not taxable. Generally. But. Sir, if it has been used for business or profession conducted in India or any other source of income in India, look. This is interest. This is what? Interest. Sir, business or profession conducted in India is taxable, whereas in order to earn any other source of income, interest income is not taxable. Highlight point. Are you all really with me? That means you are a what resident? Non-resident. You are getting interest from another non-resident. That non-resident is paying interest. That means you have funded him. That fund has been used in India for the purpose of conducting business in India, then that interest will be taxable. To earn other income from India, not taxable. But fees for professional or technical services, royalty, both that and all, no exception. That is taxable. Are you all really with me? This is very, very important. Any sum of money paid by a resident Indian. Are you resident? Are you resident? To a non-corporate what resident? Non-resident. They are situated outside India. Or to a what company? Foreign company. Or to a resident but not ordinarily resident in India. Wow. You should understand very clearly. My dear lovable students, sir, you are a what Indian? To a non-corporate non-resident. Non-corporate non-resident means general, normal, non-resident. Other than company. Or to a what company? Foreign company. That means corporate. Again, they are what resident? Non-resident. Or to a resident but not ordinarily resident in India. So who is paying? Resident is paying. To 3 people he is paying. Number 1, non-resident, foreign company, or resident but not ordinarily resident. If they are paying, if the sum of money paid by resident Indian to a non-corporate non-resident, foreign company, resident but not, he exceeds how much? 50,000 and is chargeable under section 56 subsection 2 class 10. It will be deemed to be accrued or risen in India. That means very simple. I am a resident. No. I am having my brother-in-law, father-in-law. I am having my relatives who are situated outside India. My cousin is situated outside India. Are you thinking that I am having income? Yes sir, no sir. I am gifting him 10 lakh rupees. I am gifting him. That guy is a what resident? Non-resident. But he is getting gift from a resident, which the amount is more than section 56 subsection 2 class 10 will be applicable. Then in his hands, it will be treated as income has been accrued or arisen from India. Are you all really with me? That's what section 9 subsection 1 class 8 is all about. Class 8 is all about. So what is section 9 subsection 1 class 1? Business connection, property, source, capital asset. Class 2, salary. Class 3, salary from Indian government. Class 4, dividend. Class 5, interest. Class 6, royalty. Class 7, fees for professional technical services. Class 8, gift under 56 subsection 2 class 10. Sir, this income will be treated as income received or accrued or risen from India. Am I right, sir? I'm coming back to the discussion, man. I'll be doing 2 or 3 problems to our pocket. We'll try to match whatever we have discussed, sir. Let me choose question number 6 as our discussion point, right? You know, this is MTP April 2022, RTP November 2019, and November 2018 past examination question. That means like this only a 6-mark question will come for exam. With this limited knowledge, we'll try to approach. Mr. Krishna, aged how many years? He is a citizen of India. Citizenship is different. Residential status is different. You may be a citizen of India, but you may not be a resident of India. Both are different. Serving in the Ministry of Finance in India. Ministry of Finance in India. Was transferred to Indian Embassy in UK on 15th March 2024. That means in sir 23-24 financial year, he has been transferred to the Indian Embassy. Indian Embassy in UK. So now he is going to work outside India by representing government of India. He will be getting salary from the Indian government as per section 9 subsection 1 class 3. That income will be deemed to accrue risen in India, and he will be getting allowance or perquisite. That allowance or perquisite will be fully exempted under section 10 subsection 7. His income during the financial year 24-25 is given here under. These are the income he has earned. Rent from house situated in UK. So the house property is situated in UK. Received in UK. So source is in UK. Receipt is in UK. Look, when he left India, 15th March 2024, last year itself. That means from 1st April 2024 till 31/3/2025, during our financial year, 365 days he was not in India at all. That means, my dear lovable students, 182 days condition has not been satisfied. And even 60 days condition has also not been satisfied. None of the basic condition has been satisfied. He will be treated as a non-resident. Right? For a non-resident, only Indian income will be taxable. PGP income earned outside India will not be taxable. Other than PGP income will not be taxable. This is other than PGP income. Thereafter remitted to Indian bank. My dear lovable students, this is second receipt. Always in Income Tax Act, the original source has to be checked. First receipt has to be checked. Because this is not income. Sir, for example, I am getting teaching fees from ANM classes. That I am depositing in my bank account. That is my income. But after I receiving that, I am sending to any other person. Is other person's income? No, sir. That's why first receipt is considering, not the second receipt. That means for this 5,25,000, Mr. Krishna is liable to pay tax in India, not liable to pay tax in India. So if you see, sir, his income from house property is nil. Income from house property is, my dear lovable students, rent from a house situated at UK, received in UK. Income from property situated outside India would not be taxable in India in the hands of what resident? Since it's neither accrue or arise in India, nor it is deemed to accrue or arise in India, nor it is not received in India, it does not fall under section 7 or under section 9. That means this will not be taxable. In order to understand this, you should have this much discussion. Are you all really with me? Come on, man. The next income. Interest on post office savings bank account in India. That means bank is situated in India. Income has been accrued or arisen from India. How much rupees, man? 4,500. This 4,500 will be taxable under the head IFOS. Under the head? Because any interest received will be taxable under IFOS. And this is from what office savings bank? Post office savings bank. Where level? Where level? Sir, I have to go to the what? IFOS. Sir, interest on post office savings bank. You just tell me. Post office. Who's the owner of the post office? Government of India. You just think, I'm a corporate person. I'm having a company. I'm having a business. Will I go and start a bank account in Axis Bank or IndusInd Bank or HDFC Bank or SBI or Post Office? SBI or Axis Bank, HDFC Bank, because those people are private corporate banks. This post office is run by Government of India. There if you go and you have to stand in a queue. Hello, sir. People are not interested to start their savings account in the post office. What government is saying that in rural areas and all, only post office are there rather than this Axis Bank. Am I right? You being a businessman, come and deposit your money in the post office. We will be pay you interest. For that interest, up to 3,500 rupees is exempted. That means 80 TTA is there. Savings bank account up to 10,000 rupees is exempted. The same way, if you are putting the money in the what office? Post office. Sir, post office up to 3,500 rupees is exempt for a single person. For a? That means if you are starting post office account in your name, 3,500. If it is joint account, 7,000 rupees. If it is joint account, for example, I am starting an account in my name and my own wife's name. Then is it single account, joint account? 7,000 rupees is exempted, which is nothing but 3,500 into 2. Are you all really with me? So you now go and read the question, man. Sir, look at here. Interest on post office savings bank account in India. How much rupees? 4,500. Out of that, 3,500 rupees is exempted. Balance 1,000 rupees will be, and that 1,000 rupees will be taxable under the head income from other sources. A clarity? Salary from Government of India, 9,25,000. My dear lovable students, sir, he is now working outside India, representing the Indian government in the Embassy of India. So even though service has been rendered outside India, even though salary has been received outside India, since the salary is received from the Government of India, it will be treated as income has been deemed to accrue or arise in India as per section 9, subsection 1, class 3. Clarity? That's what, man, salary income. How much is the salary received? 9,25,000. If you write 9,25,000 as salary income, swaha, you have to reduce the standard deduction under 16 subsection 1A based upon the route what he is traveling. Whether he is traveling through the default tax regime or the optional tax regime. Am I right? That's what, man, I'm going to find out the salary income. Salary from Government of India is 9,25,000. Wait. Foreign allowance from Government of India, 8 lakh. Sir, now that guy is situated outside India, representing Government of India. Government cannot say that you walk and come. It will be a big shame for Government of India. Are you all really with me? Government of India have to provide the car. Government of India have to provide the quarters. Government of India have to provide the daily allowance, helper allowance, academic allowance, traveling allowance, daily allowance, helper allowance. Hello, sir. And Government of India have to provide the rent-free accommodation. Government of India have to provide the medical facility. Government of India have to provide the movable asset. All those, sir, motor car, all those perquisite has to be provided. Any allowance or perquisite has been provided by Government of India to an Indian citizen who are working will be fully exempted under section. That means this 8 lakh will not be. That's what they have written here, man. Look at here, man. Foreign allowance from Government of India. Any allowance or perquisite paid or allowed as such outside India by government to a citizen of India for rendering service outside India is exempt. Under what section? That means nothing will be taxable. Your gross salary will be 9,25,000. Right? Less standard deduction under 16 subsection 1A. of how much rupees? 50,000 being lower of gross salary of 9,25,000 or 50,000, whichever is lower. Sir, under what route you will get 50? Optional tax regime, because question did not mention anything. Sir, Mr. Krishna, okay, compute his total income for assessment year 25-26. Assume he does not opt for 115 BS. He does not. That means he's not going to travel through the default tax regime. He come out of the default tax regime. He want to travel through the. This is the only section in the entire act where under the optional tax regime you are having less benefit. This is the only section in the entire act where under the optional tax regime less benefit. Otherwise 75,000 is the benefit. Sir, if you are traveling through the default tax regime, 75,000 is the benefit. You are, sir, throwing that default tax regime and you are going to travel through the optional tax regime. Under optional tax regime, you will be having a benefit of only 50,000. So that 50,000 can be claimed. Balance taxable salary will be 8,75,000. Am I right? That's what this 8,75,000. Sir, Mr. Krishna did not come to India during the financial year 24-25 at all. That's why we treated you as a non-resident. Number of days stayed in India is 0. You are not in India for 182 days. You are not in India for 60 days during the relevant previous year. Hello, sir. Even, sir, none of the basic condition has not been. You will be, sir, treated as compute his total income for the assessment year 25-26 and assume he does not opt for section 115 BSc. What a beautiful question. How many things you should understand? Are you all really with me? This is the scope of what income, total income. That you can read its solution and you can go through that today itself. Sir, income chargeable under the head salaries, notes and all they have given. I'm moving into illustration number 7 from this area. Come on. Mrs. Sai is an American. Okay, is an American. Got married to Mr. Kabir of India in New York. Fine. I don't know. Everyone is meeting at New York. All right. On 14/2/2024. Look at the date. 14/2/2024. That means in financial year 23-24, they got married. Who? Mrs. Sai and Mr. Kabir. It should be Mrs. Kabir, no? Okay, fine. Right. Mrs. Sai. The name is Sai. Nothing, no information has been given. And Kabir said to Sai that, I just want to show you the heaven of the world. Come to India. And came to India for the first time on 18/3/2024. So in the last financial year 23-24, they came to India to enjoy India. She left. On Australia on 16/8. On August 16, she left India. She returned to India again on 23/3. 23/3 means end of the financial year. Right? What has happened, man? What is her travel story? Come on. What she's doing? Leave the last year. In the current year, from 1/4/2024, she was in India only. Yes, sir. When she left? 16/8/2024. So April, May, June, July, August. Right. April, how many days? 30 days. May, 31. June, 30. July, 31st. August, when she left. So that even the leaving day should also be included. It's not period of stay. Alright, sir. Date 16. So in this lab, 30 plus 31 plus 30 plus 31 plus 16 comes to 138 days she was in India. Again she came back. Sir, on 23/3. Okay, that means 23rd of March. That means that day she is in India. That means 23, 24, 25, 26, 27, 28, 29, 30, 31. 1, 2, 3, 4, 5, 6, 7, 8, 9. So in the second slot, she was in India for how many days? 9 days. Right? So 138 plus 9. During our previous year, totally her stay in India was 147 days. This is less than 180. That means first basic condition has not been, sir, but she was in India for 60 days during the relevant previous year. But last year only she came, no? Last year when? 14th of February 2024. Am I right? That okay, 18/3 only she came. 18/3/2024. Sir, this is the first time she is coming to India. So anyway, their stay will be less than 365 days in the 4 immediately preceding previous years. So this condition also will not be satisfied. What is her residential status? Super, sir. So she will be treated as non-resident. Step number 1 done. What is step number 1? Determination of residential status. Now I am moving into the scope of on 1/4/2024, our financial year, on April number 1, she had purchased a flat in Mumbai. So the flat is situated in Mumbai. 9 subsection 1 class 1. My dear lovable students, if you are having a property situated in India, it will be deemed that income has been accrued or arisen in India. That's it, game over. Which was let out to Mr. Samir on a rent of how much rupees per month? That means they are indirectly testing IFHP. Sir, from 1/6/2024. From 1/6. So from what date only it has let out? Sir, she purchased on 1/4, that is on April, but April, May, it was vacant. 2 months it was vacant. So the rent is only for how much month? 10 months. So 26,000 into 10 comes to 2,60,000. She had taken loan from an Indian bank for purchase of this flat, on which bank has charged interest of 2,05,000 up to 31/3 IOBC, which can be claimed as deduction under 24B. That 24B is allowed irrespective of the tax regime. Whether you travel through the default tax regime or optional tax regime, you are entitled to claim 24B. But 24A will be available only under the optional tax regime, will not be available under the default tax regime. All these points should come to your brain. While in India, during the previous year 24/25, she has received a gold chain from her in-laws worth rupees 1,50,000. Gold chain is jewelry. Jewelry is other than immovable property. Other than immovable property, fair market value exceed 50,000 will be taxable under 56 subsection 2 class 10. And 1,65,000 from very close friends of her husband. Husband is only relative. Her friends are not relative. Hence, my dear lovable students, is 1,65,000 is more than 50,000. Provisions of 56 subsection 2 class 10 will be applicable. This will be taxable under the head. From the information given above, you are required to determine her residential status. We already determined she is a and compute her total income chargeable to tax for assessment year 25/26, assuming she has gifted out of the default tax regime, that is shifted out of the default tax regime under section 115 BAC. That means she is going to travel through the. Now I'm going to vomit the provision under section 6 subsection 1. An individual is said to be a resident in India in any previous year if he satisfies any one of the following conditions. He has been in India during the previous year for a total period of 182 days or more. He has been in India during the 4-year immediately preceding the previous year for a total period of 365 days or more, and has been in India for at least 60 days in the previous year. If an individual satisfies any one of the basic conditions mentioned above, then he will be treated as a. If both the above conditions are not satisfied, the individual is a. Therefore, residential status of Mrs. Sai, an American, for assessment year 25/26 has to be determined on the basis of her stay in during the previous year 11 to the assessment year 25/26. That is for previous year 24/25, and in the preceding for assessment year. Her stay in India during the previous year 24/25 and preceding 4 years are as follows. For our year, sir, 138 plus 9, 147 days she was in India. Sir, even we got 147 days. Are you all really with me? And in the immediately 4 preceding previous years, she was just for 14 days, which is less than 365 days. So the total stay of Mrs. Sai during the previous year in India was less than, and during the 4 years preceding this year was just for. Therefore, due to non-fulfillment of any of the basic condition, she will be treated as a non-resident for assessment year 25/26. Clarity? Now, computation of what income? Total income. Sir, number 1, income from what property? House property. Since the property is situated in India, that income will be deemed to be accrued or arisen in India as per section 9 subsection 1 class 1. Am I right? Sir, 2,60,000 is the gross annual value. What annual value? Because gross annual value, fair rent and all has not been given in the question. Otherwise, fair rent or municipal value, whichever is higher or standard and whichever is lower, that answer is called as expected rent. Expected rent or actual rent received or receivable, whichever is higher. All this discussion will be made in the income from house property. Hello, sir? So 2,60,000. Let's LT bar MT paid by the owner. No information has been given in the. So NAV is 2,60,000. Since this guy is decided to travel through the optional tax regime, maximum benefit will be available. You can claim 30%, 78,000. And IOBC has been given in the question 2,05,000. Since the property is a letter property, there is no restriction for IOBC. If the property is a self-occupied property, you can claim either 30,000 rupees or 2 lakh as the case may be. In order to claim 2 lakh, assessee has to satisfy 3 conditions. Loan should be taken on or after 1/4/1999. Loan amount should be used for the purpose of construction or acquisition of the property. Such construction or acquisition should be completed within a period of 5 years from the end of the financial year loan has been taken. All this I'll be discussing in the chapter income from. Don't worry at all. So there will be a loss of 23,000. Am I right? Sir, income from what sources? Other sources. Twist. What chain? Gold chain. Gold chain is a jewelry. Worth how much? Received from the what? Parents of the husband. Sir, husband is relative. Sir, lenient ascendant, lenient descendant of the individual is a relative. Lenient ascendant, lenient descendant of the spouse is also a relative. Mamu is also a relative. Hello, sir. Sir, would be exempt since the parents of husband fall within the definition of the relative and gift from relative are not chargeable to tax. So, when you are taxing gift, you should see the amount of gift. You should see from where you got, from whom you got, relative or other than relative. Are you all really with me? And gift received from friends of her husband, aggregating 1,65,000. It is more than 50,000. It is taxable under 56 subsection 2 class 10 since the amount of cash gift exceeds 50,000. So this 1,65,000 will be. So the gross total income or total income will be 1,42,000. Are you all really with me? Sir, this is how you will be getting the question for exam. I will be doing one more illustration number 8. Mr. Sarath, an individual, an Indian citizen. What citizen? Living in Dubai. Now he is living in since 2025. Since 2025 means from 2025. So from 2025 onwards, he settled outside India, Dubai. And never came to India for a single day. Since then, he went outside Dubai. He was happily enjoying the Dubai life. Earned the following income during the previous year, 24-25. So my first question to you. What is the residential status of Mr. Sarath for 24-25? Non-resident, neither basic condition number 1 satisfied, nor basic condition number 2 satisfied, right? Income accrued and arisen in Dubai, but is not liable to tax in Dubai. Oh my God, 20 lakh. Means this guy is not a chota wala. This guy is a bada wala. You just understand one thing. This guy is a dash citizen. Indian citizen means what government is saying that idu ungal chottu. This guy belongs to India. This guy belongs to India. This guy born in India, studied in India, studied in the government school of India, studied in ANM classes of India. Hello, sir. After he utilizes the entire resources in India, now he is flied outside India to provide his best energy outside India. Then how India will be a developed country? India will be a developing country only because all the good brains are flying outside India. Like us, the best brain should be in India. Hello, sir. My dear lovable students, now this guy is having income accrued and arisen in Dubai. Now he is having lot of property investment and all in Dubai. But Dubai is a tax heaven. Tax-free country. Like Mauritius. There is no income tax in Dubai. If you study CA in Dubai, my dear lovable students, one paper will not be applicable. There is no income tax. So that is a tax heaven. I never said that India is a tax hell. Fine. That is a tax heaven. There is no tax. So since this guy has settled in Dubai, since there is no tax in Dubai, this guy will go to washroom and cry. Why? I am earning income in Dubai, but no one is asking tax from me. Because I am in such a country where there is no tax. I love to pay tax. But no one. Government of India is saying, don't worry, man. Income accrued and arisen in India. How much lakh? 5 lakh. So this is foreign income and this is Indian income. Income deemed to accrue arise in India, 8 lakh. This is Indian income. Income arising in Dubai from a profession set up in India. Income arising in, this guy is a non-resident man. For non-resident, only what income will be taxable? Indian income will be taxable. This guy is not resident and ordinarily resident. This guy is a. So 5 plus 8. So 13 lakh is the Indian income. Am I right? Look, determine the residential status of Mr. Sarath and taxable income for the previous year 24-25, assuming no other income arise during the previous year. My dear lovable students, what is the residential status? You have to vomit. Sir, Mr. Sarath is an Indian citizen living in Dubai since 2005 who never came to India for a single day since then. He would not be a resident in India for previous year 24-25 on the basis of number of days of his stay in India as per section 6.1. However, since he is an Indian citizen, this word is very important. Indian citizen is Yengal Chottu. Tell me, Indian citizen is Yengal Chottu. Who is saying? Government of India is saying. Having total income, excluding income from foreign source. Don't see the foreign income. See the Indian income. My dear lovable students, Indian income 5 lakh plus 8, 13 lakh plus 10 lakh. Totally is having India, from India is having 23 lakh income is there. Sir, 23 lakh, which exceeds the threshold limit of 15 lakh during the previous year. Sir, for Indian government, chota wala, bada wala is based upon 15 lakhs. Is the Indian income exceed 15 lakh? Yes. And not only that, he's not liable to pay tax in Dubai. He's crying now in washroom. He's earning income in India. But for this Indian income, Dubai government is not even asking tax for the income earned in Dubai. Hey, understanding? Then why are they asking for Indian income taxation? Right? He would be dash resident in India. Deemed resident in India for the previous year 24-25 by virtue of section 6 when my dear lovable students, he is not a resident, he is a non-resident, but he is a Indian citizen. Hello sir, Indian citizen having Indian income more than 15 lakh and that 15 lakhs is not taxing outside India, then this guy will be treated as. When I explained the provision, I said one thing. Every deemed resident are resident but not ordinarily resident. For a resident but not ordinarily resident, PGBP income will be taxable in India. That means this 10 lakh will be taxable in India. Are you all really with me? That means the step number 1 is determination of the residential status. Before determining residential status, don't say what is the scope of total income. That's only I taught. First topic I taught is residential status. Am I right? Then only what of total income, scope of total income. So if you read the first line based upon number of days, he is a non-resident. But don't finalize he is a non-resident, because if an assessee has not fall under 6.1, we are having when a 6.1a. 6.1a is saying that what resident? Deemed resident. Every deemed resident are resident but not all. Then game will change. Are you all really with me? Then my dear lovable students, income accrued or arisen in India. My dear lovable students, is this income PGBP income controlled from India? No. That means this is a foreign income. It will not be taxable in India. It will be taxable only in the hands of resident and ordinarily resident. It will not be taxable in the hands of resident but not ordinarily resident. Clarity? Income accrued or arisen in India will be taxable. Income deemed to accrue or arise in India will be taxable. Income arising in Dubai from profession set up in India would be taxable in case of resident but not ordinarily resident. Clarity? Because for resident but not ordinary resident, Indian income will be taxable. Foreign PGP income will be taxable. That's it. These are the two income will be taxable. So the total income will be 23 lakhs. I'm giving further. What would be your answer? If the income arising from Dubai from profession set up in India is only 2 lakh instead of 10 lakh. My dear lovable students, question they are saying that this is only how much lakh? 2 lakh. So 8 plus 5, 13 plus 2, Vechambarapu, 15 lakh. He is having Indian income exactly 15 lakh. What is the provision? First of all, you should not fall under 6.1, sir, and you should be a what citizen? Indian citizen or Yengal Chottu. And you should be having an Indian income exceed, look at the word, sir, which exceed the threshold limit of 15 lakh. Exceed. Tell me. My dear lovable students, if income arising from Dubai, from a profession set up in India is 2 lakh instead of 10 lakh is total income. Excluding income from foreign source will only be how much lakh? Since the same does not exceed the threshold limit of 15 lakh, he would not be a deemed resident. If he is not a deemed resident, he will be treated as a, accordingly, he would be a non-resident in India for the previous year 24-25. Once he is a non-resident, only Indian income will be taxable. Indian income, my dear lovable students, he is having 5 lakh and plus 8 lakh, 5 plus 8. Even this 2 lakh will also be taxable. 2 lakh taxable? No, sir, because he is a what resident? Non-resident, only Indian income will be taxable. Foreign PGBP will not be taxable. Foreign other than PGP will not be taxable. That table remembering. Today's class I highlighted. That means what plus what? 5 lakh plus 8 lakhs comes to 13 lakh will be taxable. Again pushed question. Come on, sir. What would be your answer? If Mr. Sarath is not a what citizen, but his parents were born in India, that means he is a person of Indian origin. He is not born in India, but parents was in India. Then parents have been migrated to Dubai. So at that time, he was born. He was settled in outside India. This provision is applicable to Indian citizen or Indian citizen and person of Indian origin. Only Indian citizen. If this guy is a person of Indian origin, sir, deemed resident concept will not be. If Mr. Sarath is not an Indian citizen and our parents were born in India, he would be a person of Indian origin. In such case, the provision relating to deemed resident would not apply to him. So, deemed resident concept will be applicable only for the Indian citizen. Then only the attachment with the government will be more. Indian citizen means you born and brought up in India. Your parents means your grandparents. Sometimes, sir, my parents, grandparents, maybe, sir, England king. What can I do? Hello, sir. You should be part and parcel of India. Accordingly, he would be a non-resident and his total income will be 13 lakhs. Are you able to appreciate? From here onwards, it is an easy sailing only. In the coming classes, we'll be doing more and more and more question. Question number 9. Certain question I will ask you to try first, then I will be checking that. Question number 9, sir, question number 10, like that it will go. Lot of applicability you will be getting. My dear lovable students, have a proper revision of the residential status and scope of total income. This will come for 6 mark in examination. A sure shot 6 mark in exam. Revise very well. We will be doing more question in the coming class and we will be entering into the other topics also. I'm with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy morning to all. So we are doing the workout batch for the DT Inter. In that, we are in slot number 1, which is basics and residential status. Basics and residential status will be coming for 6 mark in examination. Since the DT is for 50 mark, 6 mark plays a major role. Basically, one question you will be getting, which is residential status and scope of total income. We have completed provisions of those. We'll be doing in this slot the full workouts. I'll be doing question from the last because the last questions will be recent examination questions. So those questions we will try at least 7 to 10 questions we will try from the residential status and computation of total income. Let me try illustration number 27 first. Because this question is a September 2024 very recent examination question. Mr. Madan, a citizen of India. When you are reading tax, these lines are very important. Mr. Madan is the assessee who is a citizen of India and the Karta of the HUF. He is the Karta of the HUF. He is employed in Messes PCS Private Limited. My dear lovable students, now he is working in PCS Private Limited. He is drawing monthly salary of 65,500 in India. So he is getting salary from India. That means income has been accrued or arisen from India. As per section 9, it will be taxable in India. On June 1, 2024, he purchased one residential house property in Mumbai. Since the property is situated in India, from that property, if he is getting any rental income, that will be an Indian rental income. It will be taxable in India for rupees 18 lakh in his individual capacity. So this is the story. The market value of the property is how much lakh? 32 lakhs. And the value for the purpose of charging stamp duty value is 23 lakh. So stamp duty value of the property is 23 lakh. Whereas, my dear lovable students, the market value is 32 lakh. But he has paid only how much lakh? 18 lakh. So consideration paid is 18 lakh. That means there is an immovable property whose stamp duty value is 23 lakh. 23 lakh stamp duty value property, one assessee has purchased for a value of 18 lakh. Is there any, sir, gift to the assessee? Yes. The difference between the stamp duty value and the consideration paid should be taxable under the head IFOS. Because you have to check two conditions, my dear lovable students. Condition number 1, is the actual consideration less than the stamp duty value? Yes. Because you are supposed to pay how much lakh? 23 lakh. But you have paid only 18 lakh. And is that 23 lakh more than 110%? That means 18 lakhs into 110% comes to 19 lakh 80,000. The stamp duty value is more than 19 lakh 80,000. Since both the condition has been satisfied, the difference between the stamp duty value and the consideration paid should be taxable under the head IFOS. On August 31, 2024, he was transferred to the branch office of Messes PCS Private Limited. There only he has worked in India, in USA. That means now he is going to leave India. And he left India on September 1st, 2024. That means September, October, November, December, January, February, March. He is out of India. The overseas branch paid him a salary of $2,500 per month in USA. He managed business of HUF from USA when he was not in India. That means from April till September 1st, he was in India only. So when he was in India, my dear lovable students, he has managed the business from India. That is called as partly or wholly from India. If you are, sir, looking the HUF partly or wholly, my dear lovable students, it will be treated as a resident. He had also gone out of India for 99 days and 201 days in the previous year 23-24 and 22-23 respectively. He had never gone out of India prior to that. He visited India from January 2015 to January 1, 2025 to January 15, 2025 for a training on a project and received 15 days salary in India as per Indian monthly salary before being transferred. Mr. Rajiv, one of his friends, gifted him a sculpture in India on August 10, 2024. Market value is 45,100. Determine the residential status of Madan and his HUF and also compute gross total income of Madan for the assessment year 25-26, assuming he opted out of the default tax regime. Value of $1 may be taken as 70. Beautiful, fantastic, outstanding question. This is a past examination question. Very reason to reason question. September 24 question. My dear lovable students, before you solve these type of question in residential status, always please try to make a timeline. In the sense means our financial year is starting from 1/4/2024 till 31/3/2025. Am I right? From April, sir, May, June, July, August, sir, till 1st of September, he was in India only. That's a story given. Sir, he left out of India on 1st of September. That means September 1st he left. Sir, as per the normal terms and condition of the Income Tax Act, day of entry and day of exit should be included. That means in the month of September, then October, then November, then December, and then Jan. And again he visited India back on January. He visited India from January 1, 2025 to January 15, 2025. So I can take only till December. Again, one more cut is coming. That is for Jan 1 to Jan 15. This time he was in India only. Then the balance will be for the balance of what? Jan. Then balance Jan, Feb and March he left out of India. My dear lovable students, all these days he was in India only. Sir, April, how many days? 30 days. May, 31 days. June, 30 days. July, 31 days. August, 31 days. Sir, 30 plus 31 plus 30 plus 31 plus 31. 153 days he was solidly in India only. My dear lovable students, when he left 1st September, on the date of entry and date of exit should be included. So add September 1. How many day? 1 day. So 153 plus 1 day comes to 154 days he was in India only. Sir, in September, if you leave 1 day, out of 30 days, remaining 29 days, he was out of India. So, in September, even though 30 days are there, 1 day he was in India. So, 29 days he was out of India. Am I right? October, 31 days he was out of India. November, 30 days he was out of India. December, 31 days he was out of India. So, 29 plus 31 plus 30 plus 31. 121 days he was out of India. Then for this period, again is in India. Am I right, sir? January 1 to January 15. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. How many days? 16, 15 days. 15 days he was in India. Sir, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. It's 15 days only. How 16 days will come? Will it come 16 days, sir? No, sir. Please study the counting first. Alright. Then from January 16th onwards, January 31st is outside India. So balance January. 16 days, sir. Yes, sir. February 28 days. March 31 days. So 16 plus 28 plus 31. 75 days he was out of India. So in our timeline, my dear lovable students, during the previous year, in India, 154 plus 15 days. Am I right? 154 plus 15. 169 days. Number 2, sir, outside India, sir, which is 121 plus 75 days comes to 196 days. Calculator, 169 plus 196 comes to 365 days. Is our days tallied? Always in residential status, try to make a chart like this before you step into the analysis of the question. Then conditions classified into 2 categories. I'm talking about basic condition, which is basic condition number 1 and basic condition number 2. Basic condition number 1, sir, 182 days or more. Have we satisfied the first basic condition? No. My dear lovable students, sir, since he was in India only for 169 days, which is less than 182 days, he has not satisfied the first basic condition. Can I proceed? Coming to the second basic condition, he should be in India for 60 days or more during the relevant previous year and 365 days or more in the 4 immediately preceding previous year. Am I right? Yes, he was in India for more than 60 days. And I have to go and check the 4 immediately preceding previous year. For the 4 immediately preceding previous year, I am checking for the previous year 24-25. So immediately preceding previous year, 23, 24, 22, 23, 21, 22, 20, 21. Am I right? Question clearly saying that in the last 2 years, he also gone out of India for 99 days and 201 days in 2023 and 22. So 23, 24, 365 days minus 99 days. Am I right? And here 365 days minus 201 days. Am I right? Here he was in India for 365. He was in India for 365. I don't want the total because 1 year itself he was in fully in India for 300. So in the 4 immediately preceding previous year, he was in India for 365 days. So even though he has not satisfied the first basic condition, the second basic condition has been satisfied. But you have to check again the rule, whether he will fall under the exception or not. How many exceptions are there? 4 exceptions are there. First exception number 1, sir, first one, which citizen? Indian citizen. First of all, is this guy an Indian citizen? Yes. This guy is an Indian citizen. What is the action he is supposed to do? He has to leave India. Yes, he has left India for the purpose of employment outside India. Yes, for the purpose of employment outside India, he went out of India. If that is the case, my dear lovable students, second basic condition will not be applicable. Only first basic condition will be applicable. That means in exam, in order to save the time, before you check the second basic condition, first check the exception, whether he's falling in the exception or not. Are you all really with me? If he's not falling in the exception, then check the second basic condition. Otherwise, like this, your time will go. Are you all really with me? So step number 1, first check the first basic condition, whether he's in India for how many days or not, 182 days or not. Second step, you have to check whether he's falling under the exception to the second basic conditions. If he's not falling in the exception, step number 3, you have to check whether he has satisfied the second basic condition or not. Are you all really with me? If once you satisfy the second basic condition, if he satisfied any of the one basic condition, then you have to check the step number 4 is simple, man. You have to go and check the 2 additional condition, sir, to confirm that whether he is a resident and ordinarily resident or resident but not ordinarily resident. Sir, if that also satisfied, my dear lovable students, then you can, sir, say the status. So as per this question, for him only first basic condition will be applicable, but he has not satisfied the first basic condition. That means the residential status of this guy is non-resident. What is the scope of total income of non-resident? Only Indian income will be taxable. Outside Indian income, whether it is PGBP income or other than PGBP income, will not be taxable. Right, sir? He is having salary income, my dear lovable students. Salary income has been received for the work what he has done in India and also outside India. Outside salary income, put it on dustbin. And he visited India for 15 days for January. For that also, he will be entitled to get a 15 days Indian salary income. That will be taxable. Are you all really with me? Look at here, man. Solution. Residential status of Madan. This is a past examination question for 6 mark. Mr. Madan, a Dash citizen, who left India on 1st September for the purpose of employment too, would be a Dash resident in India. Since he stayed in India for only how many days? 169 days. Only during the previous year, 24-25, which is less than 182 days. That means he has to mandatorily satisfy the first basic condition to be a resident. But since he has not satisfied, my dear lovable students, he will not be treated as a resident. He will be treated as a... Now I'm coming to the residential status of what? HUF. Since Mr. Madan is managing the HUF for part of the year from India. Yes, sir. In April, May, June, July, August, September 1st, till that HUF was managed by Madan from India. Sir, whether if you are managing the affairs of the HUF either wholly or partly in India, that partly, now you will get pakka meaning. Are you all really with me? Partly means a time part also allowed. That means some number of months I was controlling the HUF from India. That's it. That HUF will be treated as a control and management of his affairs situated partly in. Hence the HUF would be resident in India for the previous year, 24 and 25. Now I have to further dig the HUF. I will not further dig the Madan. My dear lovable students, since Madan is a non-resident for this financial year, previous year 24-25, my dear lovable students, I have to further dig the HUF. HUF is said to be resident and what resident? Ordinarily resident in India. During the previous year, what? 24-25. If Madan in this case satisfy following, both the following condition. Are you all really with me? That means I have to check that whether Madan is a resident and ordinarily resident or resident but not ordinarily resident. This is the I love you area from ICAI because Madan is a what resident? During the previous year, my dear lovable students. During the whereas resident and ordinarily resident or resident but not ordinarily resident is depends upon the immediately preceding previous years. Are you all really with me? That means students will be having a understanding that, okay, anyway, Madan is a non-resident, then even HUF is also a non-resident. No, HUF residential status is based upon their control and management. Hello, sir. Sir, a part or whole of control and management is in India, then my dear lovable students, they will be treated as resident. Then after you find out it as resident, you have to further bifurcate it into resident and ordinarily resident. Resident but not ordinarily resident depends upon the residential status of the Karta. Sir, now I'm going and checking the residential status of the Karta. He is a resident in at least 2 out of 10 previous years preceding the relevant previous year. I have to check the residential status of Karta, what he has done in the last 10 years. Out of the last 10 years, my dear lovable students, whether he has stayed, he is a resident for at least 2 years. Or his stay in India in the last 7 preceding the 11 previous years is how many days or more? 730 days or more. If both the condition has been, if Madan has satisfied both the condition above, as he has never gone out of India except for 99 days and 201 days in previous year, 23, 24 and 22, 23, which is clearly given in there. That means if you take the last 10 years, sir, let it be there. 2 years he gone out of India, some number of days. The remaining 8 years, full days he was in India only. That means he is a resident for, sir, actually 10 by 10. Sir, since he stayed in India for, sir, last 7 years in India only, he can easily cross 730 days. Am I right, sir? So the HUF will be a resident and ordinarily resident in India. HUF will be resident. Because, my dear lovable students, the residential status of the Karta for this year is non-resident. Residential status of the Karta, sir, what is the residential status of the Karta? Non-resident. Why it is non-resident? Because he is an Indian citizen. He left outside India or he left India for the purpose of employment. That means second basic condition will not be. Hence, he has to mandatorily satisfy the first basic condition. Since he has not satisfied the first basic condition, he will be getting a tag of non-resident. Accepting? Immediately don't conclude that HUF is also a non-resident. HUF's residential status is based upon their control and management. Is part or whole of the control and management of the HUF is in India? Yes, sir. Then HUF is a resident. Now I have to bifurcate into resident and ordinarily resident. The resident but not ordinarily resident, that is based upon the Karta's residential status. So I have to check that whether Karta is resident and ordinarily resident or resident but not ordinarily resident. For that, I will never check the basic condition. I will check the additional condition. That additional condition is not at all based upon the current previous year. Additional condition is based upon the immediately preceding previous years. Out of last 10 years, at least 2 years, Karta should be a resident. Out of last 7 years, Karta should be in India for at least 730 days. Both the condition has been satisfied. That means, my dear lovable students, actually Karta is a non-resident plus a resident and ordinarily resident. But like this, I cannot say. Am I right? Yes, sir. So when I am thinking from the angle of the Karta, I will say that he is a non-resident. If he is a non-resident, no further digging. But for the purpose of HUF, he will be treated as a resident and ordinarily resident. Getting the clarity? So my dear lovable students, that's it. Residential status done. Computation of gross total income of Madan. Here they will kill it. Income under the head salaries, my dear lovable students. Salary earned in India. Look, per month salary has been given in the question, which is 65,500. April, May, June, July, August. Because 1st September he left. Are you all really with me? My dear lovable students, into 5 months. So this salary has been accrued or arisen in India. And this is the beautiful twist. On January 1, he came to India. Till January 15th, he was in India only. So my dear lovable students, 65,500 into 15 days he was in India. Since a month is January, January is having 31 days. That's what 15 into 31, 3,59,194 is the total, which is nothing but take your calculator, 65,500 into 5, which comes to 3,27,500 plus 65,500 into 15 divided by 31 means 31,694. Am I right? So 3,27,500 plus 31,694 comes to 3,59,194. Sir, salary paid in USA, my dear lovable students, Madan is a what resident? Non-resident. This is not Indian salary. This is foreign salary. In order to be Indian salary, he should get salary for the service rendered in India. No, he got the salary for the service rendered. And number two, sir, are he getting salary from the government of India? No, sir. That means this is not Indian salary, sir. As per section 9, this is, sir, income has been accrued or arisen outside India. Sir, for a assessee, non-resident, income accrued or arisen outside India will not be taxable in India. Not taxable as Mr. Madan is a non-resident. And such income does not accrue or arise or received in India. Beautiful nil. Are you all really with me? Let's standard deduction 50,000 because question specifically said in the last line that, sir, he assumed he opted out of the default tax regime. That means the assessee is going through the optional tax regime. This is the only deduction where you will be getting lower benefit in the optional tax regime. All other deduction are ulta in the Income Tax Act. That means you are entitled to claim only 50,000. So from 3,59,194, if you reduce 50,000, you will be getting 3,09,194 as sir taxable salary. Am I right, sir? Coming to income from other sources, my dear lovable students, actually this guy has purchased a property. Sir, you can receive gift either by way of cash or by way of immobile property or by way of other than immobile property. Am I right, sir? If you are receiving cash, my dear lovable students, then you have to check, sir, whether the cash received exceed 50,000 or not. This is what property? You have to check the stamp duty value. What is the stamp duty value of the property? 23 lakh. What is the consideration paid? 18 lakh. Sir, think from the angle of the assessee. Actually, in order to get that building, you are supposed to pay 23 lakh. But you have paid only 18 lakh. So, actually, not as per Income Tax Act, as per common sense, there is a gift. Because I should have paid 23 lakh. I paid only 18 lakh. So, there is a difference of this 5 lakh will be taxable under the head what OS? Under section 56 subsection 2 class 10 if two conditions has been satisfied. Condition number 1, have you paid a consideration less than stamp duty value? Yes, sir. And stamp duty value is more than 110% of the consideration? Yes, sir. Because 18 lakhs into 110 percentage comes to 19 lakh 80,000. This 23 lakh is more than 19 lakh 80,000. Since both the condition has been satisfied, the difference of 5 lakh will be taxable as income under the head income from other sources. So difference between the consideration of 18 lakh and stamp duty value of 23 lakh of the residential house property acquired, taxable since the difference of 5 lakh exceed how much? 1,80,000, but being higher of 10% of the consideration and 50,000, because of that this 5 lakh will be taxable. Whereas one of the friend has given sculpture, but the value of sculpture does not exceed 50,000. Hence, because of that, that 50,000 will not be, that amount will not be. So, sculpture received as gift from Rajiv is friend in India, not taxable as the value does not exceed. So, the gross total income will be 8,09,194. A beautiful question to do a residential status and scope of total income. Are you getting? I'm moving into the earlier question, man. Question number 26. We'll be trying to do at least 5 to 7 questions in this slot because this is workout. We'll be working out at least 5 to 7 questions, right? Beautiful questions, man. This is a May 2024 pass examination question. Mr. Tilak, aged 35 years, furnishes the following information regarding his income for the assessment year 25-26. Compute the total income if he is resident and ordinarily resident. If you are a resident and ordinarily resident, global income is taxable in India. That's it. A resident but not ordinarily resident. If you are resident but not ordinarily resident, Indian income will be taxable and the foreign PGBP income will be taxable. That's it. These are the two income will be taxable. Two rules. Right, sir? A resident but not ordinarily resident. Ignore the provisions of 115 back. That means don't travel through the default tax regime. Please travel through the optional tax regime. Can we? That means generally we used to put 3 column, man. Resident and ordinarily resident. Resident but not ordinarily resident. Non-resident. Now you skip the non-resident. You put only 2 column. So I will read one thing. You have to say how it will be reflecting in the 2 column. Remuneration of rupees 50,000 for services rendered in Malaysia. So services are rendered in Malaysia. Credited to his bank account in Malaysia. So the first receipt also in Malaysia. And immediately remitted to his bank account in India. It's second receipt. Sir, in Income Tax Act, we will never consider the second receipt. We will consider only the first receipt. My dear lovable students, if this guy is resident and global income is taxable, 50,000 will be taxable. Whereas if this guy is resident but not ordinarily resident, only Indian income and foreign PGBP income will be taxable. Is this foreign PGBP remuneration of service rendered in Malaysia? No, sir, because this profession is not controlled from India, man. Are you all really with me? He went outside India for the purpose of providing services. That means if this guy is resident but not ordinarily resident, this 50,000 will not be. So what should be the ideal answer? 50,000 dash. Am I right, sir? Sir, if this guy is resident and ordinarily resident, this 50,000 will be taxable. If this guy is resident but not ordinarily resident, this 50,000 will not be taxable. You try to say the answer before me. You come to a conclusion. This will be taxable, this will not be taxable. Then surely you will go wrong somewhere. There you will get the clarity. Profit from business in England. So this is foreign PGBP. Controlled from Bombay. Controlled from... How much lakh? 3 lakh. That's it, John. You are gone. Whoever it may be. Are you all really with me? Either of these two. A resident and ordinarily resident, global income is taxable. Sir, for resident but not ordinarily resident, foreign PGBP income is taxable if you are controlling that business from India. Right? Because of that reason, entire 3 lakh will be taxable. Out of which 25,000 is received in India. Irrelevant. Irrelevant. So if you are resident and ordinarily resident, global income is, if you are resident but not ordinarily resident, still this 3 lakh rupees will be taxable because the business is controlled from India. Coming to the third one. Amount brought to India out of past untaxed profit earned in Singapore. Let me ask you a question. In Singapore, I am doing a business. So where the income has been accrued or a reason? Singapore. If you are a resident and what resident? Ordinary resident, global income is taxable. So in the year of accrual, in the year of earning this income outside India, this 1 lakh rupees already paid tax by the resident and ordinarily resident. Already would have been taxed. Right? Whereas if you are resident but not ordinarily resident, this is foreign PGBP, and since the business is not controlled from India, it is not taxable in India. If you are a non-resident, sir, other than Indian income will not be taxable in India. That means, my dear lovable students, I am doing business in Singapore. Okay. If I am a resident and ordinarily resident, sir, in the year of earning profit itself, I would have paid the tax. Other people are not liable to pay the what at all? Tax at all. But after 3 years, after 4 years, after 5 years, I am bringing that profit of 1 lakh to India. You tell me, is resident and ordinarily resident again liable to pay tax? No, because already paid tax. Other people are liable to pay tax at the time of bringing that money to India. Whether that bringing is a first bringing? No. Whether that income has been accrued or risen in India? No. Then why are you paying tax? So, read the line. Amount brought to India out of past untaxed profit earned in where? Singapore. Sir, rupees how much lakh? 1 lakh. Since this 1 lakh already taxed in the hands of the resident and ordinary resident, it will be nil. In the hands of resident but not ordinarily resident, this income will not be taxable because this is untaxed profit. This has been accrued or arisen outside India, and this has been received outside India. Basically, this is a foreign income. Foreign income will not be taxable. Are you all really with me? Capital gain on sale of land in India. John, you are gone. Because capital asset is situated in India. As per section 9, subsection 1, class 1, any capital asset situated in India, income deemed to occur arisen in India. That's it. But received in Malaysia, entire 2 lakh will be taxable if you are a resident and ordinary resident. And this 2 lakh will be taxable if you are a resident but not ordinarily resident, because this is Indian income. Am I right? Income from agriculture land at Nepal. Is Nepal in India? No, sir. Nepal is situated outside India. How much? 18,000. Received there and then brought to India. My dear lovable students, if you are resident and ordinarily resident, global income is taxable. Hence, this 18,000 rupees is taxable. Am I right? But if you are resident but not ordinarily resident, this is a foreign income. My dear lovable students, is this foreign income from PGBP? No, sir. Hence, it will not be taxable. And sir, received there only. Even received concept also has not been satisfied. So this 18,000 will not be taxable in the hands of a resident but not ordinarily resident. Can I proceed? I'm moving, man. He paid 50,000 towards principal payment of loan taken from construction of his self-occupied house in India. That means if you pay interest, you can claim IOBC 24B. If you pay principal, you can claim ATC. You can claim ATC, Chapter 6A deduction. Sir, in order to claim Chapter 6A deduction, you should travel through the optional tax regime. Question, sir, compute the total income. Is there any word? Ignore the provisions of 115 BAC. That means this guy is not traveling through the default tax regime. This guy is traveling through the... So both the people can enjoy ATC deduction under ATC 50,000 if you are resident and ordinarily resident. And my dear lovable students, if you are resident but not ordinarily resident, then also ATC 50,000 can be claimed. Can I proceed? Interest on savings bank in the State Bank of India, 12,000. Since State Bank is situated in India, income has been accrued or risen in India. My dear lovable students, this 12,000 will be treated as income in the hands of assessee. Am I right? And is entitled to claim 80 TTA to the extent of 10,000. To the extent of... So, my dear lovable students, that 12,000 should be included in the gross total income. After you include in the gross total income, you can claim Chapter 6A deduction under 80 TTA. But under 80 TTA, maximum deduction you can claim is only... So the total income, if you are resident and ordinarily resident, will be 5,20,000. Are you all really with me? My dear lovable students, sir, here, sir, you have to include 12,000 under income from other sources and 80 TTA 10,000. So the total income will be 4,52,000. Are you comfortable? Very easy, man. We can easily score that 6 mark residential status. This is not 6 mark. This is our confidence. That's the difference. Because it's a sure shot area in examination. I'm moving to the next question, my dear lovable students. Question number 25. A beautiful, fantastic, outstanding question. This has been asked in May 2023. Mr. Prashant, aged 35 years, is an Australian citizen. That is very important for me. If he is Australian citizen, he is not an Indian citizen. That means he will not fall under exception. Right? Who is settled in Australia and visit India for 125 days in every financial year since past 11 years. He is having some connection with India. Every year he is coming to India for how many days? 125 days. During financial year 24-25, he visited India for a total period of 200 days. I don't know, sir, in our financial year, he were having some extra commitment. Instead of 125 days, he came for... The purpose of his visit was to meet his family member who are settled in India and also to manage his family members who are settled in India, and also for managing in business in Sri Lanka through his office in Chennai, India. So, my dear lovable students, he is coming to India for seeing the family members and also to control the business. It is in Sri Lanka. That means even though the business is situated outside India, such business is controlling from India. Right, sir? During previous year 24-25, he has the following income. Income from business in Australia, controlled from Australia. Basically, this is a foreign income. Am I right? How much lakh? 20 lakh. In outside India, he is earning 20 lakh. If he is a resident and ordinarily resident, even for this 20 lakh, you are liable to pay tax in India. Income from business in Sri Lanka, controlled from Chennai, 16 lakh. My dear lovable students, the business is situated outside India, but it is controlled from India. If you are resident and ordinarily resident, the 16 lakh will be anyway taxable. But if you are resident but not ordinary resident, still the 16 lakh will be taxable. But if you are a non-resident, it will not be taxable. Am I right? Short-term capital gain on sale of shares of Indian company. That's it, John, you are gone. My dear lovable students, because the capital asset is situated in India, received in Australia, this 50,000 will be taxable in India. These shares were sold online from Australia. Sir, whatever you do, it will be taxable in India. Income from agriculture land in Australia, received there. So foreign income, received also in foreign country. Then brought to India. How much lakh? 2 lakh. Resident and ordinary resident taxable. Resident but not ordinarily resident not taxable. And non-resident not taxable. Find out the residential status of Mr. Prashant and compute his total income for assessment year 25-26. Am I right, sir? Sir, without reading all the stuffs, you just work out if you are in examination hall. My dear lovable students, you will be first putting the timeline. Am I right? Your timeline will be like this: 1/4/2024 till 31/3/2025. Am I right? My dear lovable students, total 365 days are there. They themselves straight away given in the question that he visited for a period of. So in totally 200 days, he was in India. I am having basic condition classified into how many category? Basic condition number 1 and basic condition number 2. Basic condition number 1, he should be in India for how many days or more? 182 days or more. Yes, during that particular previous year, he was in India for 182 days. More than 182 days. Right, sir? So he will be given a tag of resident. Now, I want to know whether he is a resident and ordinarily resident. Resident but not ordinarily resident. Clarity? For that, I have to see the immediately preceding previous years. My dear lovable students, sir, I am checking the residential status for the financial year 24-25. Yeah. Now, I have to check for financial year 23-24, financial year 22-23, like that it goes. Sir, for financial year 23-24, last year, he was in India for 125 days, which is less than 182 days. So, last year, he does not satisfy the first basic condition. Whereas he was in India for more than 60 days. Am I right? Plus, my dear lovable students, 125 days into 4 years. Because in all the last 11 years, he came to India. So, 125 into 4 comes to 500 days, which is more than 365 days. He satisfied the second basic condition in the last year. So, last year, his status is a resident. Can I proceed? So even for the just before year also, he was in India only for, so he does not satisfy the first basic condition, but he was in India for more than, and during the 4 immediately preceding previous year, he was for 500 days. That means he is he satisfied 2/10 condition. Am I right? Out of the 10 immediately preceding previous year, he was in India for 2 years. That means, sir, additional condition number 1 has been. Look, man, sir, in the immediately 7 previous years, he should be in India for at least. That means, my dear lovable students, sir, how much into how much? 125 into 7 comes to 875, which is more than. That means, sir, 730 divided by 7 years condition. Additional condition number 2 also satisfied. That means, since he has satisfied the first basic condition and both the additional condition, he will be treated as resident and ordinarily resident. If he is resident and ordinarily resident, Sauda, global income will be taxable in India. Alright, sir? Whatever they have given in the question will be taxable. That means income from business in Australia, control from Australia, 20 lakh should be taxable. Yes, sir, because global income. Sir, income from business in Sri Lanka, 16 lakh will be taxable. This 50,000 will be taxable. Agriculture land in Australia will be taxable. So 20 lakh plus 16 lakh plus 50 lakh plus 2 lakh comes 50,000. Sorry, 50,000 plus 2 lakh comes to 38 lakh 15 should be the 50, 50, 30. Sir, 20 lakh plus 16 lakh plus 50,000, sir. 38 lakh should be the taxable income, right? Look at the answer, man. Determination of residential status of Mr. Prashant. Mr. Prashant is an Australian citizen who comes on visit to India for 125 days in every financial year since last 11 years. During our financial year, he visited India since he stayed in India for 182 days or more. During the previous year, 24-25, he would be resident in India for the assessment year 25-26. Our answer right. An individual is said to be resident and ordinarily resident in any previous year if he satisfies both the condition. Please fill where I am leaving. He is a resident in at least how much out of how much? Preceding previous year during the 11 previous year. And his stay in India in the last 7 preceding the 11 previous year is how many days or more? Alright, man. Sir, I am calculating the first condition. First condition means additional condition. Number 1. Residential status for previous year 23-24. I am going back 1 year and I am calculating the residential status. He will be treated as a resident because he has stayed more than 60 days, which is because he was in India for 125 days. And in the said previous year, and more than 300 and because 500 days he was there, sir, in the 4 immediately preceding previous year, right? That means he has satisfied, sir, both second and sir, additional condition number 1 and additional condition number 2 has been satisfied. What, man? Second, this is what condition? For which year I am testing? Just previous year. Just previous year I want he to be a resident. For to be a resident, I will check only basic condition only. So this I have checked basic condition number 1 and basic condition number 2. But he was, for him, basic condition number 1 has not been, but he has satisfied basic condition number 2. That means for this year, he is a, then I'm going back once again. So residential status for the previous year, 22-23, that is assessment year, he will be treated as a resident. Same explanation. He was in India for more than 60 days and he was in India for more than 365 days in the 4 immediately preceding previous year. Therefore, he satisfied the first condition of being what in India? In at least 2 out of the 10 preceding previous years. That means in the last 10 years, 2 years, he was a resident. Right? That because by this, he has satisfied the first additional condition. Am I right? He has to satisfy one more condition. Sir, stay in India in the 7 immediately preceding previous year is how many days? 875 days, which is more than, since both the additional condition are, he will be treated as resident. In case of resident and ordinarily resident, global income will be taxable in India. Accordingly, his total income would be as follows. Hello, sir. Computation of total income of Mr. Prashant. Income from business in Australia, how much lakh? 20 lakh. Income from business in Sri Lanka, 16 lakh. Short-term capital gain on sale of share of Indian company, 50,000. Income from agriculture land in Australia, 2 lakh. So 38 lakh, 50,000. That's what the answer we also got. 38 lakh, 50,000. Comfortable? This is a past examination question. Sir, this note, no need, just for reading, alternate manner of determination of whether Mr. Prashant is a resident and ordinarily resident or resident but not. Look at here, man. Alternate view, man. Negative view they have given, man. Lusumari. Not read, man. Sir, 9 by 10. Sir, in the last 10 immediately preceding previous year, in 9 years, if he is a non-resident, he will never be treated as resident and ordinary resident. He will be treated as resident. And he stay in India in the last immediately 4 previous years is, sir, how many days or less? 729 days or less. If that much only days, if he is in India, he will be treated as. So Mr. Prashant does not satisfy either of the above condition. That means negative, in negativity has not fall. Then he will become a positive person, right? On account of being resident in more than 1 year out of 10 years and stayed in India for 875 days, hence he is a resident, and this note is having some sense. Sir, in the absence of information relating to whether Mr. Prashant is a person of what origin? What the question is saying regarding the Prashant, you go and read, man. Mr. Prashant is a what citizen? Now he is in Australia. So whether he is a person of what origin or not, Indian origin or not. Why, sir? Sir, because if he is a person of Indian origin, my dear lovable students, if he is visiting India, then, sir, you have to see the total income of the Prashant. Sir, total income without including the foreign income. That means I have to go and check the Indian income. Am I right, sir? Sir, this Australia will not be Indian income. Hello, sir. Income from business is Sri Lanka, controlled in India. Right, sir? There I am having two alternatives are there, my dear lovable students. What are the two alternatives? Sir, for him, second basic condition straight away will not be applicable. Hello, sir? If he is a chota wala, only first basic condition will be applicable. Sir, if he is a bada wala, instead of the second basic condition, altered second basic condition will be applicable. That's what they have given in the note. Look, sir, in the absence of information relating to whether Mr. Prashant is a person of, the above solution has been worked out, assuming that Prashant is not a person of Indian origin. Since he is not a person of Indian origin, for him exception will not be applicable. Hence, I have solved as per the normal question. However, alternative assumption that Mr. Prashant is not a person of Indian origin, I will never support this answer, because question did not say that he is a person of Indian origin. Hello, sir. If that is the case, you don't go and assume that if he is a person of what origin? Indian origin. Then you assume one thing, 365 days he was outside India. That means he will become a non-resident. Then to the question you can assume one thing, he never came to India. Question specifically saying that every year he came for 125 days. So this is like, sir, we are reading something not there in the question. I will never support this. When I solve this question in my mind, whether he is person of Indian origin or not will not come at all. Are you all really with me? But question is highlighting that if he is a person of, then based on that I will drill my provisions and I will say that this guy second basic condition will not be applicable. Is also possible since the purpose of his visit was to meet his family member. So question this assumption they are taking from that line. Why their family member is here? Because his parents were born and brought up in India. And he also born and brought up in India. Now he left outside India and now he is visiting India, who are settled in India. Accordingly, it is assumed that he is a person of. Then for determining whether he is a resident in previous year 23-24 or 22-23 or 23-24, information relating to his total income, excluding income from foreign source for the said previous is required for ascertaining whether the condition of 120 days in the 11 previous year plus 365 days in the 4 immediately preceding previous year would be attracted in this case. This information is not given in the question. Are you all really with me? Accordingly, assumption would have to be made relating to the applicability of this condition. Income details has not been given in the question. So, my dear lovable students, I am assuming that he is not a person of Indian origin. Hence, sir, for him, even second basic condition will be applicable. Are you all really with me? Are you able to apply to the provisions to the questions? I'm coming to the next question, man. Question number 24 is a target. This is a Jan 2021 question. Rajesh was employed in Access Limited, Mumbai. According to me, a very good question. They have, sir, drafted the question very well. Access Limited, Mumbai. So where is he working? Mumbai. That means he's getting salary from India. Salary has been accrued or risen from India. He received a salary of 45,000 per month from 1/4, that is 1st of April till 20th of September. He resigned and left for Dubai for the first time on 28th September. So this guy Rajesh, born and brought up in India, now he is leaving India for the purpose of employment outside India and got monthly salary of rupee equivalent to 90,000 from 110 till 31st of March. His salary for October to December was credited in his Mumbai bank account directly. தப்பு பண்ணிட்டியடா, தப்பு பண்ணிட்டியே. Hello, sir. And the salary for January to March was credited in his Dubai bank account. At that time only he opened a bank account. He took some time. So even though he worked outside India for the month of what man? October to December, since the first receipt is in India, that income will be taxable in India. Right? The cost of his air ticket to Dubai costing 1,50,000. That means from India he left to Dubai in Emirates flight, business class he has traveled. 1,50,000 was funded by her sister, relative. Sister is a relative. Even though the gift amount is more than 50,000, that will not be taxable under the head IFOS. Staying in London. That sister is staying in London. Cost of his initial stay at Dubai, because now only he went to Dubai. At that time, he don't have money because now he is going to join the job. Then only he will get the salary. That salary also he deposited in Indian bank account. Alright, sir. Costing how much? 40,000. Was funded by one of his friends staying in Delhi. Staying in Delhi. That means, wow. Tell me. Because this friend, look man, I will explain, then you will enjoy. This friend is situating in Delhi. This friend is situating in Delhi. That means this guy is a resident. This guy is a... But whereas Rajesh went outside India, as per section 9, subsection 1, class 8, if a resident is gifting to a non-resident, even though it is outside India, it will be taxable in India, provided if the amount of gift is more than 50,000. Since the initial stay cost is less than 50,000, that 40,000 will not be taxable. Here it is not taxable, it is because of the sister. Because sister being a relative. Whereas, my dear lovable students, here it will not be taxable because it does not exceed the statutory limit. He further received interest of 10,500 on his what deposit? And 7,500 on his savings account. For savings account, you can claim deduction under 80 TTA to the extent of 7,500. Because here the income itself is only 7,500. Don't reduce 10,000. It's not standard flat deduction and all. With his Mumbai bank, that's it. Mumbai bank means income has been accrued or raised in India. He also paid LIC of 15,000 for self. For LIC, you are entitled to claim ATC. And 10,000 for spouse. We know that ATC, SSC, ATC, SSC, ATC, SSC, self, spouse, children, self, spouse, children, self, spouse, children. Are you all really with me? So for self, how much paid? 15,000 paid. For spouse, how much paid? 10,000 paid. And for dependent mother, mother and all, sir, self, spouse, children. Is mother self? No. Mother spouse? No. Mother children? No. Put it on dustbin for the purpose of this section. You will really with me? 71 years. That means this 25,000 cannot be claimed as Chapter 6 deduction under ATC. Compute taxable income of Mr. Rajesh for assessment year 25-26 is the question. Wow. My dear lovable students, Sir Rajesh was employed in Access Limited, Mumbai. Have anywhere said that Rajesh is an Indian citizen or person of Indian origin? Actually, question never said he is an Indian citizen or person of Indian origin. Where he is working? He received salary of 45,000 per month from 1/4/2024 to 29. He resigned and left for Dubai for the dash time. That means still now he was in India only. That means, my dear lovable students, we can assume that this guy is a Indian citizen, or sir, in case of Indian citizen who are leaving India for employment during the relevant previous year, period of their stay during that previous year for being treated as resident of India must be how many days or more? Because if the assessee is an Indian citizen who are living outside India for the purpose of employment outside India, second basic condition will not be applicable. Only first basic condition will be applicable. In order to be a resident, you should be in India for more than 182 days. Am I right? Sir, as per amendment, in case of Indian citizen or person of what origin, having total income more than 15 lakh, other than income from what source? Foreign source. Then the second basic condition is applicable. And instead of 60 days, in the previous year, 120 days are considered. This is for the people not who are leaving. This is for the people who are coming. Right? But this guy has only gone out of India. That means this provision does not have relevance here. But they have vomited whatever they know in residential status. That's it. During the previous year 24-25, Rajeshan, an Indian citizen, was in India for 181 days only. Because, my dear lovable students, April fully he was in India. April how many days? 30 days. May he was fully in India. 31 days. June, 30 days. July, 31 days. August, 31 days. On September 20th he left. That means even 20th will be included. Am I right? 20th he left the job. Hello sir. Yes sir. He resigned and left for Dubai for the first time on 28th of September. So you will be including till 28. Am I right? So 30 plus 31 plus 30 plus 31 plus 31 plus 28 comes to 181 days. One day miss aita. My dear lovable students, since he was in India for only 181 days, thereafter he left India for employment purpose. Since he does not satisfy the minimum criteria of 182 days, he is a non-resident for the assessment year 25-26. That's it. He is a what resident? Sir, now scope of total income. A non-resident is chargeable to tax in respect of income received or deemed to be received in India. That means Indian income. And income which accrue or arisen or deemed to accrue or arisen to him in India. Again, Indian income. Are you all really with me? Hence, salary of January to March, which was credited in Dubai bank account for service rendered in Dubai, will not be taxable in the hands of Rajesh. But first 3 months salary has been credited in the bank account of India. Am I right? That will be taxable. Whereas, my dear lovable students, any income which has been accrued or arisen outside India or received outside India will not be. So, can we calculate the taxable salary of Rajesh? Sir, from 1st of April, my dear lovable students, April, May, June, July, August, 5 masam full salary. That means 45,000 into 5. Whereas, my dear lovable students, on September month, he don't work for the entire month. Am I right? Don't expect 45,000 to 6 and all. The employer is not charitable trust. Even though you worked for 20 days, he won't pay for the full month salary. When he left September 20, in September, how many days? 30 days. That's why 45,000 into 20 by 30. 45,000 into 20 by 30. Am I right, sir? My dear lovable students, 2,55,000 is the answer you are getting. Are you getting? Okay, man. Sir, which is 45,000 into 5, you are getting 2,25,000 plus 45,000 into 20 divided by 30, you are getting. That's how you are getting 2,55,000. Can I proceed? Now, actually, after September, he left India. He's now doing job outside India. But for the first 3 months, he has done a mistake. Sir, salary from 110 to 3112, 90,000 into 3, 2,70,000 will be taxable in India. Am I right? So the gross salary will be 5,25,000. Claim standard deduction under 16(1)(a). My dear lovable students, question, have anywhere said that he is opting out of the default tax regime? Question, anywhere said that he is, sir, going out of the default tax regime? No, sir. Hello, sir. But he is having this many chapter 6A deduction and all. Hello, sir. So I am first calculating as per the optional tax regime. And actually, practically, I will calculate as per the default tax regime also. Whichever is beneficial to the assessee will be adopted by the assessee. Am I right, sir? So come on, man. So the net, so that's why I'm claiming only 50,000. So the net salary is, taxable salary is 4 lakh. Come on, come to IFOS. Sir, FD interest, how much? 10,500. Since this FD has been put in Indian bank, income has been accrued or risen from India. Incomes on savings account, how much? 7,500. Total comes to 18,000. So the gross total income is 4 lakh. Less deduction under chapter 6A, deduction under 80C, LIC premium for self and spouse. Sir, LIC premium for mother is not allowed for deduction. Because what is our slogan? 80C, SSC. What is SSC full form? Self, spouse, children. Are you all really with me? That means 25,000 can be claimed as deduction. Deduction under 80 TTA, either statutory limit of 10,000 or the amount of SB income, whichever is lower. So 7,500 can be claimed as. So the total income is 4,60,500. Are you all really with me? Sir, cost of his air ticket to Dubai, costing how much? 1,50,000. Funded by his sister. Sister is not taxable under 56 subsection 2 class 10 in the hands of Rajesh. Since sister is a what? Relative. Because if you are getting any gift from relative, my dear lovable students, provisions of 56 subsection 2 class 10 will not be applicable. Cost of initial stay at Dubai, costing 40,000, funded by his friend, also not taxable under 56 subsection 2 class 10, since the amount does not exceed. These two things you have to write as note. Are you able to appreciate, sir? I'm moving into question number 23. We have tried question number 27, question number 26, question number 25, and question number 24. 4 questions we have done. Now I'm moving into question number 23. Minimum 5 to 7 questions will be solving in this slot. Are you all really with me? Mr. Sanjay has following income during the previous year 24-25. Compute taxable income of Sanjay for assessment year 25-26 if he is a not ordinarily resident or non-resident. That means he is not resident and ordinary. Leave the first person, second person and third person is required. Only 4 things are there. It's like a, sir, relaxing time for us. After we calculated big question, like this question is a relaxing time. All right. Interest on England development bond. That means the bond is situated outside India. 1/3 received in India, 60,000. So my dear lovable students, 60,000 into 1/3 comes to 20,000. Sir, it's not first person, second person and third person. For second person, Indian income will be taxable. Sir, 20,000 is Indian income. Am I right? And foreign PGBP income will be taxable, but this is not foreign PGP income. Hence, only 20,000 will be taxable. Whereas for non-resident also, Indian income will be taxable. Whatever amount you received in India is a what income? Indian income. So, what should be the answer? 20,000 and 20,000. Are you all really with me? Yes, ma'am. Interest received from a non-resident. That means Mr. Sanjay is a not ordinary resident. Or Mr. Sanjay is a non-resident. There are 2 situations are there. This Sanjay is getting interest from a non-resident. How much? 5,000. Against a loan given. Yes, Sanjay has given loan to a non-resident. To him to run a business in India. Are you all really with me? As per section 9, my dear lovable students, 9, subsection 1, class 5. Class 5. Interest. What is class 1? For income. What is class 2? Salary. 2 conditions should be satisfied. Sir, you should provide the services where? In India or outside India? In India or outside India? In India. For that, salary received outside India. 2 conditions. That's why it is class 2. You should do the job in India, but you should get the salary outside India. That's why 9 subsection 1 class 2. 9 subsection 1 class 3, 3 conditions should be satisfied. You should do the job outside India and you should receive the salary outside India from the government of India. That's why 3 condition, 9 subsection 1 class 3. A, B, C, D. 4th one is D. D stands for dividend. 5th one, I should have some interest. I should have some interest. 9 subsection 1 class 5. Are you already with me? 6, sir, royalty. Royalty, R. Royalty. It is starting with what? 6. Royalty. Are you ready with me? Because royalty, what is the spelling? R. R means 6. Hello, sir. So 9, subsection 1, class 6. Like that, so many things are there, man. Alright, sir. Then coming to 9, subsection 1, class 7, which is fees for professional or technical services. Fees, sir, fees, F7, sir. Fees, F7. Fees for professional or technical services. If you reverse it, 7 will come. Hello, sir. Yes, sir. If you show like this, love also will come. Right, sir. My dear lovable students. Yes, sir. So, that's what 9, subsection 1, class 7. Then, sir, gift 9, subsection 1, class 8. Last miscellaneous, gift. It's a new class, which is an amendment. So, now you apply. Interest, 9, subsection 1, class 5. What that section is saying that, if an assessee is getting interest from a non-resident, government, non-resident or non-resident, who are, sir, these people are using to conduct business or profession in India, then that interest will be treated as Indian interest. Hence, this 5,000 will be taxable. Are you already with me? Yes, sir. So, 5,000, because interest received from a non-resident against a loan given to him to run a business in India would be deemed to accrue arisen in India. That means this is an Indian income. Once this is an Indian income, irrespective of the residential status, it will be taxable. The such interest is taxable in case of both resident and not ordinarily resident and non-resident. Can I proceed? You read it, you apply. Royalty received from Akhil, a resident, for technical service given to run a business outside India. Business outside India. That means now the Sanjay is going to be a not ordinarily resident. If he is a not ordinarily resident, this is not a foreign PGBP income. This is other than foreign PGBP income. Is this income has been accrued or arisen in India? No, sir. Because this is royalty received from Akhil, sir, a resident. If you are getting royalty from government or resident or from non-resident for the purpose of doing business in India, then it will be treated as Indian income. That means for this 20,000, it should be what, man? Dash, dash. Are you able to connect? Income from business in Sri Lanka, 25,000, out of which 15,000 were received in India. So whoever it may be, that 15,000 is Indian income. Whereas the extra 10,000, the business is controlled from India. That means if you are not ordinarily resident, entire 25K will be taxable. Whereas if you are non-resident, 15K will only be taxable. So it will be 25,000 and 15,000. So you will be getting the taxable income. Sir, this is a November 2023 question. Look, man, our, sir, strong basic discussion are giving, sir, the answers. Are you all really with me? I am interested to solve a super duper RTP May 2024 patas. This is a real patas. Illustration number 22. Very good question. You try to apply. Miss Rita, an Indian citizen. Fine. They have highlighted Indian citizen. And an MBA from Harvard University. Was employed in AFL LLP of country A. Not our country, country A. Since June 2016. That means from June 2016, Rita is working outside India. Sir, she's a what citizen? Indian citizen. She studied MBA in Harvard University and now she's employing in foreign country. She came to India on 15/11/2024 and joined as CEO of Autofit Limited. She thought that, why I have to work outside India? India is God's own country. Let come and work in India itself. I'm coming back to India. She joined in an Indian company. What is that Indian company name? Autofit Limited. Sir, AFL, Autofit Limited. Sir, is that AFL LLP of country A and Autofit Limited India are one and the same? No, sir. Both are different. Hello, sir. This LLP is situating outside India, whereas Autofit Limited is in. Miss Rita was in India before she left for overseas education in May 2012. So till 2012, she was in India. Hello, sir. And was subsequently employed outside India and never visited India thereafter. She was pakka enjoying outside Indian life, bachelor life. There was no income tax in country A. In country A, she was crying in washroom because there is no income tax. I am earning income, but there is no one is there to ask tax from me. She was crying. She has earned income, interest income of rupees 2,40,000 in country A, and salary income from AFL LLP to the extent of what? 15 lakh up to the date of a return to India in the financial year 24-25. So in financial year 24-25, all ரொம்ப பெரிய இடம். Till she come to India, my dear lovable students, she was earning salary income of 15 lakh and interest income of 2,40,000. Are you all really with me? Pakka foreign income. Don't see this. See the Indian income. Salary income computed of Miss Rida from Autofit Limited. What is Autofit? Indian company. Up to 31.3 is 13,50,000. 13,50,000. Look, in bracket they have given computed. Don't go and reduce standard deduction and all. Yes, sir. And she earned dividend of 3 lakh from shares of what company? Indian company. Sir, now 13,50,000 plus how much lakh? 3 lakh comes to government Rida Meloru Kannu. Because her income exceed 15 lakh. If she's an another, what government is saying that, don't worry, we will adopt you. If you are not a resident, if you are a non-resident, don't go and cry in washroom and all. We will be treated as deemed resident under section 6 subsection 1A. Are you all really with me? What would be the residential status of Rida and her total income for assessment year 25-26? Beautiful question. My dear lovable students, first of all, sir, in order to be a resident, you should be in India for at least 182 days or more. When Rida came back, 1511. That means 1511 means which month? November. So November 15th onwards, then December, then January, then February, and then March. Are you all really with me? So November 15th, from November 15th till end, she was in India only. In November, how many days? 30 days. Are you all really with me? December, 31 days. Sir, this is 30 days total, sir. How much was in India, sir? 16 or 15? You have to include 15 also. Then 16 days. Sir, January, 31 days. February, 28 days. March, 31 days. My dear lovable students, 137 days. That means I can confirm that she was in India during the 11 previous year for less than 182 days. Am I right? Yes, sir. Sir, is Rida a Indian citizen? Straight away given in the question. Now she is visiting India. Alright, sir. Then second basic condition will not be applicable. And her Indian income is more than 15 lakh. She is a badawala. So instead of second basic condition, altered second basic condition will be applicable. Right? Sir, altered second basic condition is she should be in India for more than 120 days instead of 60 days. Don't stop with that. Plus, she should be in India for more than 365 days in the 4 immediately preceding previous years. Am I right? My dear lovable students, question specifically highlighting that after her studies from May 2012, she never came back to India at all. That means in the last 4 immediately preceding previous year, she was in India for 0 days. Are you all really with me? That means even though she has satisfied the 120 days condition, she has not satisfied the. Because of that, sir, second basic condition, altered second basic condition has not been. Adhuve satisfy panlena. Then how she will be satisfying the 182 days condition? Am I right? That means she has not satisfied the first basic condition. She has not satisfied the altered second basic condition. She will be treated as non-resident. Are you really with me? Sir, one she is a what resident? Non-resident. My dear lovable students, don't go and check that whether she is a resident and ordinarily resident. Resident but not ordinary resident. Stop all the discussion. She is a what resident? Now government is feeling that since you are a non-resident, point number 1, you will not cover under 6 subsection 1. And in Dubai, there is no tax. In Dubai, look, this is the logic. In Dubai, if there is tax, since she was staying in Dubai, Dubai law will be having rules and regulation for finding out residential status. Correct? She came to India only on 15/11. That means April, May, June, July, August, September, October, November 15. Till this time, that means more than half of the year, she was in Dubai only. As per Dubai law, in that particular year, more than 6 months she was in Dubai. In the last 4 immediately preceding previous year, she was in Dubai only. That means as per Dubai law, she would have become resident and ordinarily resident of the Dubai. Right? That means if that is the case in Dubai, in her hands, global income will be taxable. That means even this 16,50,000 will also be taxable in Dubai. But there is no income tax in country A. Because of that, this 16,50,000 has now not taxed in Dubai and even not taxed in India. That's why deemed resident concept has brought to the Indian Income Tax Act. Why? There is a lacuna in the act. Why? Nowhere it is taxing. Either the other country should get the tax or we should get the tax. That's why this provision has been inserted as an amendment in the Recent Finance Act. So they said that since you are an Indian citizen, since you are not paying any tax outside India, we are ready to collect the tax from you. Now things are clear. Balance and all, it's a national reading only. Determination of residential status of RIDA for the assessment year 25-26. As per section 6, subsection 1. In order to be a resident of India in previous year 24-25, RIDA should satisfy either of the following 2 conditions. Basic condition. Her stay in India should be a period of 182 days or more in the previous year 24-25, or stay in India should be for a period of 60 days or more in the previous year 24-25, and for a period of 365 days or more in the 4 immediately preceding previous year. Right? This is the first condition. Sir, Ms. Rida stay in India in previous year 24-25 is how many days? 138 days. We also got 138, I suppose. 137. Why? First month. Leap year. Illiye, 24-25 only, no? February 29 days. Yes, sir. We took February 28. Yes, sir. What is our financial year? 24-25. Hello, sir. 24-25. 24-25 leap year. No, sir. 25 February not leap year, sir. Old answer, sir. Mistake, sir. Correct, sir. Because in this day, in this month, first month, November, November 15 you should include. From November 15, November how many days? 30 days. So 30 minus 14. This is correct. December 31 is correct. Jan 31 is correct. February only 28 days are there. Because this February is February 2025, not 2024. Are you all really with me? Look, calculator. 2024 divided by 4. Divided by 4. How much you are getting? 506. 2025 divided by 4. 506.25. 0.25 coming. That means if point is coming, it's not a leap year. Leap year means exactly 4, man. Divided by 4, it should satisfy. That's how you have to find out whether a year is a leap year or not. For example, 2020, man. 2020 divided by 4. 505. It's a leap year. Hello, sir. What is leap year, man? Every year, sir, quarter of a day will come extra. Once in 4 years, 1 extra day will come. That's a leap year. That means exactly should divide by 4. Hey, Third standard teacher would have taught you, no. My teacher taught me. Okay, I'm still remembering. Now I am applying that provision here. That's it. So 2025 is not a leap year because divided by 4 we are getting fraction. Okay. Sir, fraction means that 1 by 4th of a day. 1 by 4th of a day plus 1 by 4th of a day plus 1 by 4th of a day plus 1 by 4th of a day. It will become 1 day. Once in 4 year only it will become 1 day. That's why divided by 4. Logic, science, come on. Come on. Sir, March, 31 days. So our days are only correct. It is not 138, it should be 137. Okay, she left India in May and never visited India thereafter. Her stay in India in 4 immediately preceding previous year would be nil. Therefore, she does not satisfy either condition number 1 or condition number 2 for being a resident. As per 6 subsection Venne, an individual who is a dash of India, who is deemed to be a resident of India, if his total income other than income from foreign source exceeds how much lakh during the relevant previous year and is not liable to tax in any other country by reason of his domicile or residence or any other criteria of what nature, similar nature, then they will be treated as once they are deemed resident as per the provisions of the Income Tax Act, they will be treated as resident. You know, for a resident but not ordinary resident, Indian income will be taxable. Foreign PGP income will be taxable. That means Miss Rita total income other than income from foreign source would be 16 lakh 50 because this is more than 15 lakhs. Am I right? Since Rita is a citizen of India who is not liable to pay income tax in country A and her total income other than foreign source exceeds 15 lakh, she would be deemed resident in India under section 6 subsection 1A for the assessment year. A deemed resident is by default a resident. In case of resident but not ordinarily resident, income accrues or arises deemed to accrue resident and received or deemed to be received in India will be. In addition, which income which accrue or resident outside India would also be taxable if it is derived from a business control or profession set up in India. That means they have written the table. So Miss Rita's total income, salary income of AFL LLP, you tell me, now she is a deemed resident. Deemed resident in the sense means, sir, resident, this is not a foreign PGBP income, this is a foreign salary income, will not be taxable. This is, sir, Indian income. Income has been accrued or risen in India, will be taxable. Interest income in country A, this is not a foreign PGBP income. Other than PGP income will not be taxable. Whereas dividend income will be taxable. So the total income will be 16 lakh and 50,000. Are you all really with me? I am interested to solve illustration number 21. So 21, 22, 23, 24, 25, 26 and 27. 7 questions. That's what my target. Last question for the day. Miss Jaychand, an Indian citizen, left India for the employment in country X on 5th June. 5th June. June itself he has left, man. Because since this guy is an Indian citizen leaving India for the purpose of employment outside India, second basic condition will not be applicable. Yes, sir. He has to satisfy first basic condition. He should be in India for at least 182 days or more. Since he left in June, July Madatil, India ke liye. That means he was in India for less than. That's it. He regularly visited India and stayed for 60 days in every previous year since then. Before that, my dear lovable students, he come to India for how many days? However, in financial year 24-25, he did not come to India at all. Hello, sir. When he left India for the first time? 2015. We are in 25, man. Good morning. Yes, sir. Sir, from that year, the year in which I have passed my CA final. Hello, sir. Regularly he visited for 60 days. But in our year, he don't came to India at all. Hello, sir. He owns a commercial building in Delhi, which is let out. He has also set a retail store in India, which is controlled by his brother from India. Right. He provides the following information to you regarding his income for the financial year 24-25. Income from commercial building in Delhi, 12 lakh. Computed as per the provisions of the Act. Already 30% standard deduction and all done. Income from retail store, 4,50,000. Computed as per the provisions of the Act. That means, sir, they have calculated that income as per chapter 4D. That is PGBP, section 28 to section 44D. Country X does not tax any individual on their income as there is no personal income tax regime. If all these information are there, question is for the deemed resident. That's it. Are you all really with me? Determine the residential status of Jay Chan for assessment year 25-26. Will your answer change if he's a citizen of country X? Yes. Because we cannot call any other country person as deemed resident of India. Then other country will kill us. Then in ministry there will be fight. Are you all really with me? My answer will change. So my dear lovable students, first of all check. This guy has not came to India at all. So during our previous year, 0 days is there. Since this guy is visiting India, second basic condition will not be applicable. I have to go and check whether his Indian income exceeded 15 lakhs or not. Sir, from the building itself 12 lakh plus 4 lakh 50. Surely it is more than 15 lakh. So altered second basic condition will be applicable. For that you should be in India for at least 120 days. You are in India only for 0 days. Right? You have not satisfied the basic condition at all. That means you are a what resident? Non-resident. Now he is going and crying in washroom, saying that nobody is there in this world to collect tax from me. Government is asking, are you paying tax in country X? He is saying that no. Government is saying that don't worry, come on, I will adopt you as my son. From now onwards, you will be treated as a deemed resident. Deemed residents are always resident but not ordinarily resident. Only Indian income plus a foreign PGBP income will be taxable. That means this 12 lakh will anyway taxable. 4 lakh 50,000 will anyway taxable. Are you all really with me? That's it, man. Sir, determination of residential status of Jay Chan for assessment year 25-26. Since Mr. Jay Chan, an Indian citizen employed in country X, did not come to India at all during the previous year 24-25, he would not be a resident for assessment year 25-26 under 6.1. However, since he is a what citizen having total income, that is Indian total income more than 15 lakh, which exceeds the threshold limit of 15 lakh, not liable to pay tax in country X, he would be deemed resident in India for the previous year 24. Sir, deemed resident is always a resident, but not ordinarily resident. Yes, in case Mr. Jay Chan is a citizen of country X, he would be a what resident? Because deemed resident provisions will be applicable only to an Indian citizen. Are you all really with me? Citizen. What citizen? Indian citizen. If you are other than Indian citizen, deemed resident concept will not be applicable. Ajit citizen illa. Indian citizen. Hello, sir. That's it. With regard to question number 21. So in today's workout session, we have solved question number 21, 22, 23, 24, 25, 26 and 27. Sare, I am able to appreciate, sir. From your heart, anybody is there? Where is a grand clap? In one more slot, we will be closing this residential status and scope of total income. Man, that means the remaining question. And I will be moving into the next set of discussion, which are clubbing, set off and carry forward, and chapter 6A reductions. This 10 mark area is what the next slot of our discussion. We will be spending nearly 4 to 5 days in that area. Every slot we will be doing 4 to 5 days. There are 5 slots are there. Nearly 25 days we will be doing this part, and I will be completing this 550 page of the workbook. Are you getting a good grip? Those who are listening to the workout batch from here onwards till your examination, daily have a writing practice of 7 questions. You have to do daily 7 questions. And in tax, direct tax, don't worry that the answer should be exactly like what is there in the workbook. That you worry for Jayashree ma'am, not for me. For me, accounts, DT, IDT, if you write the provision in own words itself, ICAI will give the marks. Are you all really with me? So you have to write the provision, but no need that. It has to be, sir, pakka cut and paste. So don't worry about that. But you need a writing practice. Am I right? So daily from today onwards, you have to sit and do 7 questions per day. By the time if you complete the residential status, I will be adding the other chapters also by entering into the clubbing, set off, carry forward, and chapter 6A reduction. From your heart, anybody is there? Where is the grand clap? Sir, very happy morning to all. So we are doing the workout batch for CA Inter. My dear lovable students, we are in the first topic of the discussion, that is residential status and scope of total income. As I already said many times, this is a 6 mark area for examination. Sure shot, 6 mark will come from this area. So we are going to close this slot by adding another 7 more questions to our pocket. I'm moving into question number 9. From the following particulars of the income furnished by Mr. Ashok, aged 65 years. So the assessee is Ashok, age is 65. Pertaining to the year ended 31/3/2025, compute the total income for the assessment year 25-26 if he is resident and ordinarily resident. Global income is taxable is the rule. And non-resident, only Indian income will be taxable is the rule. My dear lovable students, capital gain on sale of land in Jaipur. You tell me, is Jaipur is situated in India? Yes, sir. Jaipur is in Rajasthan. Are you all really with me? To Mr. Ramesh, a non-resident outside India. So a resident has sold the land to a non-resident. The consideration is also received outside India in foreign currency. That doesn't matter. My dear lovable students, since the land capital asset is situated in India, even though it has been sold to a non-resident outside India, as per section 9, subsection 1, clause 1, it will be deemed that income has been accrued or arisen in India. That means this 1,50,000 should be taxable in the hands of all the people. Are you all really with me? That's what capital gain on sale of land in Jaipur to Mr. Ramesh, a non-resident outside India and received outside India will be taxable. I'm moving to the second transaction. Rent from property in Delhi. This is only rent. Don't take the full amount. We have to reduce the standard deduction of 30%. Let out to a branch of a foreign company. Sir, since a property is situated in India, it will be treated as income has been deemed to accrue or arisen in India. The rental agreement is entered outside India. Monthly rent is also received outside India. Whatever you say, this 1,20,000 will be taxable in India. So 1,20,000 into 70% comes to 84,000 will be the taxable income from house property. 84,000. So rent from property in Delhi received outside India, 1,20,000. From that 30% standard deduction, you can claim it under section 24A. Balance will be the taxable income. Agriculture income from land situated in Nepal. Is Nepal in India, outside India? Since the agriculture land is situated outside India, it will not be treated as agricultural income. Received in Nepal, my dear lovable students, that means the asset is situated outside India and received concept also outside India. But if you are resident and ordinarily resident, global income will be taxable. That means this 55,000 will be taxable. Whereas in case of non-resident, Indian income will only be taxable. Sir, this is not an Indian income because accrual outside India and received also outside India. So nothing will be taxable. In the hands of the non-resident, only 55,000 will be. Agriculture income from land situated in Nepal, received in Nepal. Interest on savings bank deposit in UCO Bank, Delhi. Since the source is from India, that is from UCO Bank, Delhi, this is an Indian income. Indian income is taxable in the hands of all the three people. So this 18,000 will be taxable. So my dear lovable students, 18,000 and 18,000. This is interest on savings bank deposit. Interest on savings bank deposit. Deposit. Are you all really with me? That means deposit means FD, fixed deposit. Sir, interest on savings bank. You are entitled to claim deduction under 80 TTA to the extent of 10,000. My dear lovable students, this is savings bank deposit. Deposit means fixed deposit. What is the name of the assessee? Mr. Ashok. What is the age? 65 years. That means age is more than 60 years. That means the assessee is a senior citizen. Since the assessee is a senior citizen, 80 TTA will not be applicable. 80 TTB will be applicable. So, for that, you are entitled to claim interest on savings bank account subject to a maximum of 50,000 or 10,000 as the case may be. 50,000 or 10,000 as the case may be. My dear lovable students, sir, here assessee is resident and ordinarily resident. If the assessee is resident and assessee is entitled to enjoy 80 TTB. Assessee is entitled to enjoy 80 TTB. 80 TTB limit is 50,000. But the income included in the gross total income is only 18,000. So 18,000 or 50,000, whichever is lower. Whichever is. Whereas, my dear lovable students, if the assessee is a non-resident, assessee is a, sir, we will go and check the chapter 6A. My dear lovable students, we are having chapter 6A deduction here. I will be going and checking and showing 80 TTA and 80 TTB. This is what 80 TTB. Look here. Sir, 80 TTB, individual being what citizen? Senior citizen. That means assessee should be an individual and assessee should be a senior citizen. As per 80 TTB, you should get interest on deposit. That deposit means fixed deposit. What is the amount? Sir, 100% of the interest income or statutory limit of 50,000, whichever is lower. Whichever is. Sir, these are the general notes for 80 TTB, where interest income is derived from any savings account or deposit held by or on behalf of a firm, AOP, BOI, partner of firm, member of AOP, BOI, would not be allowed deduction in respect of such income while computing their total income. That means, sir, interest income is derived from any savings account. What man? Savings account. 80 TTA. Or deposit held by, sir, on behalf of a firm. That means partnership firm is putting the FD. So partnership firm is getting interest, or AOP is getting interest, or BOI is getting interest, or partner of the firm is the partner of the firm or the member or the, sir, would not be allowed as deduction. That means there is a partnership firm put an FD. From that FD, partnership firm is getting interest. Then partner cannot claim 80 TTA or 80 TTB as the, because 80 TTA will be applicable only to individual or HUF. Whereas 80 TTB is applicable only to individual. Individual, right, sir? Deduction under this section would, however, not be available to a what citizen? Senior citizen for deduction under 80 TTB. That means if a senior citizen claimed 80 TTB, that senior citizen cannot enjoy 80 TTA. Because 80 TTA is only 10,000, whereas 80 TTB is 50,000. You are already enjoying higher limit of 50,000. Then why are you asking for 80 TTA? Deduction under this section would, however, not be available to a senior citizen. It's the same point repeated, man. Deduction under 80 TTA would be available to individual or HUF only if he or it exercise the option of shifting out of the default tax regime, because under the default tax regime there is no concept of chapter 6A at all, except 3 or 4 section, like my dear lovable students, 80 CCD subsection 2, 80 CCH subsection 2, 80 JJ, yeah, like that there are some sections are there. Deduction under 80 TTB would be available only when he exercise the option of shifting out of the default tax regime. Are you all really with me? So in this question, my dear lovable students, sir, look at, sir, what the status of the assessee from the following particulars of income furnished by Mr. Ashok, aged 65 years, pertaining to the year ended 31/3/2025, compute the total income if the assessee is resident and ordinarily resident. If the assessee is a resident and he is a normal person, he can enjoy 80 TTA. If the assessee is a resident and if he is a senior citizen, he can enjoy 80 TTB. Am I right? The second one, if Mr. Ashok is a non-resident, my dear lovable students, this 18,000 will be included in the total income, gross total income, because the income has been accrued or risen from India. Sir, for this 18,000, I have to claim the deduction under 80 TTA, 80 TTB, 80 TTA. Why? Because for non-resident, higher benefit will not be available. So interest on savings bank account subject to a maximum of 50,000. So in the first column, he is resident and ordinarily resident, that means he's part and parcel of India, and that guy is a senior citizen, then, sir, instead of 80 TTA, 80 TTB benefit will be available. In the sense means either 18,000 or statute limit of 50,000, whichever is lower. But in this case, since the assessee is a non-resident, he won't have much higher benefit. 80 TTB provisions will not be applicable. Only 80 TTA provisions will be applicable. Either 18,000 or statute limit of 10,000, whichever is lower, 10,000 can be claimed it as a reduction. So 3,61,000 is the total income and 2,77,000 is the total income. My dear lovable students, sir, look at here. The notes have been given for your reference. So this question, normal residential status, scope of total income, normal only. People will go wrong in the chapter 6A deduction. Are you all really with me? In case of resident and ordinarily resident, global income is taxable as per 5.1. Is this settled provision? However, as per 5.2, in case of what resident, only the following income are chargeable to tax, which is nothing but Indian income. Income received or deemed to be received in income accruing or arising or deemed to accrue arising in India. Therefore, agriculture land from a land situated in Nepal, income earned from business in London, which is controlled from received outside India, and fees for technical service from a non-resident for business outside India is not taxable in case of a non-resident, because these incomes are accrued or arisen outside India and these incomes are received outside India. If that is the case, my dear lovable students, that will not be taxable in India. Sir, in case of what citizen? Senior citizen, being a resident, aged how many years or more? Interest up to 50,000 from savings account with inter alia, a bank is allowable as deduction under 80 TTB. So many conditions are that. First of all, you should be an individual. You should be a individual. Number two, you should be a senior citizen. You should be a, first of all, you should be an individual. Then you should be a, and third one, you should be a resident. And you should be a, that's what? In case of a what citizen? Senior citizen. One of the conditions, senior citizen. Being a what? Resident. This is what? Another condition. Resident. Sir, I am a company, sir. Can a company claim 80 TTB? No, sir. Only individual can claim 80 TTB. Are you all really with me? That means, my dear lovable students, this guy is what, man? This guy is a, sir, senior citizen. Senior citizen means age of more than 60 years. Sir, more than 60 years, how you will treat them, sir? You will say that, vada, poda, de, vada. More than 60 years. Will you behave like this? No, sir. Because they are what people? Aged people. Aged people, we have to give respect. Aged people, we have to give respect. Are you giving respect to me? Yes, sir. Is it because of aged people? No, sir. Because of my knowledge. Because of my guidance. So what you used to call me? The same sir you call. Yes, I are. That means, first of all, he should be a senior citizen. He should be an individual. He should be a resident. Then you are entitled to claim higher limit of 50,000. Otherwise, 10,000 will be applicable. Are you all really with me? That's when, so that's what they are saying. In case of senior citizen, being a resident aged 60 years or more, interest up to 50,000 from savings bank account, inter alia, the bank is allowable as deduction under 80 TTB. While in case of what resident? Non-resident, my dear lovable students, interest up to 10,000 from savings account, a bank is allowable as deduction under 80 TTA because their SAR condition has not been satisfied. He is not a resident. A good point for our examination. Can I move into the next question? A very good question, man. Illustration number 10. I'm moving, which is second question in our discussion row. Mr. Rajesh Shawarma, aged 59 years. Look at his age, man. 59 years. He's not a senior citizen. An Indian citizen. Oh my God. This Indian citizen, whenever I hear, man, there is, sir, a scope of falling in the exception. Travel frequently out of India for his business trip as well as for his outings. Certain people love traveling. You also should love travel after you become chartered accountant, not now. Now you study and write the assignments. He left India from Delhi airport on 20th April 2023 as stamped in the passport and returned on 15th October 2024. Padubavi. 23-24 he left India and is coming on 24-25. That too only on 15th of October. For our financial year 24-25, from 15th of October to 31st of March, my dear lovable students, we have to check how many days are there. When you are calculating that number of days, 15th October should be included for the purpose of stay in India. He has been in India for less than 700 days during the 7 years immediately preceding years. That means he is not satisfying the additional condition. So he may be a resident but not ordinarily resident, or he may be a non-resident. He shifted out of default tax regime. He said that I love only determine his residential status and his total income for the assessment year 25-26 from the following information. Can we first knock out the residential status? Now you tell me, this Indian citizen, have he traveled outside India for the purpose of employment outside India? No, sir. This is for the purpose of his business trip. Business trip means PGBP, not salary. There are 5 heads of income. Income from salary, income from house property, PGBP, capital gain, and IFOS. Right? The exception is saying that an Indian citizen who are leaving India for the purpose of employment. That means if he's a salaried employee, my dear lovable students, we are ready to provide him certain benefits. For him, second basic condition will not be applicable. First basic condition alone will be applicable. That means only if he is in India for more than 182 days, he will be treated as a resident. Are you all with me? But if you are a businessman, you are a high-class person, you will be having lot of money. Why you need a benefit, my dear lovable students? If you are in India during 60 days itself, sir, even though you are an Indian citizen, you are leaving outside India for the purpose of business or profession, for you, the benefit of second basic condition will not be applicable, Are you all with me? That means for you, second basic condition will be applicable. If you are in India for how many days itself? 60 days itself. And obviously, in the 4 immediately preceding previous year, if you are in India for 365 days or more, my dear lovable students, you will be treated as a resident. Clarity? But this guy has gone for business trip and for his outings, that all will not be considered. That means, sir, he left India on 20th April 2023 and 15th October. That means he is having October, November, December, January, February and March. In March, 31 days, 28 days and January 31 days. Am I right? In December 31 days, November 30 days, October from 15th to 31 days comes to 17 days. Am I right? So 17 plus 30 plus 31 plus 31 plus 28 plus 31. 168 days. This is less than 182. First basic condition has not been satisfied. But coming to the second basic condition, he was in India for 60 days during the 11 previous year and 365 days or more during the 4 immediately preceding previous years. Because in the last 7 years, he was in India for 700 days. Am I right? Yes, sir. Because he left India only on 22-23. That means 22-23, sir. This is 23-24. He left India. But on 22-23, he was fully in India only. Fully in India means the entire 365 days he was in India only. That means I need out of last 4 years, I need only 365 days. So he can be treated as resident. And when I check the additional condition, question itself said that he have not in India for 730 days out of the last 7 years. That means we can conclude that he is a resident but not ordinarily resident. Now I'm going and checking the residential status. You have to vomit the answer like this. You have to draft the answer like this. For drafting the answer, my dear lovable students, you won't get how to write the answer in exam. Sir, daily you have to write 7 questions. Daily you have to write 7 questions. Get the writing practice. An individual is said to be resident in India in any previous year if he satisfies any one of the following condition. Under section 6.1, an individual is said to be resident in India in any previous year if he satisfies any one of the following condition. He has been in India during the previous year for a total period of 182 days or more. He has been in India during the 4 immediately preceding previous year for a total period of 365 days or more and has been in India for at least 60 days in the previous year. If an individual satisfies any one of the above mentioned condition, he will be treated as a, if both the conditions are not satisfied, individual will be treated as a non-resident. Mr. Rajesh Sharma an Indian citizen has satisfied the first basic condition for being a resident. He was in India for 189 days. For us, how many days we got? 168. From which date he was in India? 15th October. Sir, October, how many days? 17 days. 17. Then November, 30. December, 31. January, 31. Sir, February, 28. And sir, March, 31. This 20 days is not there and this 1 day is not there. April, that is April 23. That is last year he left India. 20th April 2023 he left India. 23-24 he left India. Okay. During our financial year only he came back. As per this facts of the question, our answer is correct. As per this facts of the question, our answer is correct. Am I right, sir? That means, my dear lovable students, sir, he has not satisfied the first basic condition, but he has satisfied the second basic condition during the previous year 24-25. Then he will be treated as a resident in India. Sir, an individual would be resident but not ordinarily resident if he satisfies either one of the following condition. He has been a non-resident in 9 out of 10 previous years, right? Positive connotation, negative connotation, negative. And he has been during 7 previous years, immediately preceding the 11 previous year, in India for less than 730 days. Since Mr. Rajesh Sharma has been in India for less than 700 days, during the 7 immediately preceding previous years, he would be resident but not ordinarily resident. Resident but not. Come on, we'll be checking the, sir, total income. Long-term capital gain on sale of shares of Tilt India Limited. That means shares are of Indian company. That means income has been accrued or arisen in India. Indian income will be taxable. A listed Indian company amounting to 1,12,000. Sale proceeds were credited to his bank account in Singapore. That doesn't matter. My dear lovable students, this 1,12,000 will be taxable. 1,12,000. Long-term capital gain on sale of share of Indian listed company is chargeable to tax in hands of Mr. Rajesh Sharma, since it has accrued and arisen in India, even though the sale proceeds were credited to the bank account in Singapore. Number 2, man, dividend amounting to rupees 40,000 received from Treat Limited, an Indian company. As per section 9, subsection 1, class 4, any dividend received outside India from an Indian company will be treated as income deemed to be accrued or arisen in India. He had borrowed money from Mr. Raj, a non-resident Indian, for the above mentioned investment on 2nd April 2024. Interest on borrowed money for the previous year 24-25 was rupees 10,000. My dear lovable students, this income will be treated as income deemed to be accrued or arisen in India. There is no doubt. But this 40,000 will be taxable under the head IFOS. Under IFOS, we are having section 56, 57, 58, 59. 56 is a charging section. What are the income to be taxed under IFOS is explained in section 56. 57 is deduction. When you are taxing those income, my dear lovable students, what are the expenses you can claim? Section 56, subsection 2, class 1 is talking about dividend should always be taxable under the head IFOS. When you are taxing dividend, as per 57, class 4, my dear lovable students, any interest up to the amount of 20% or the actual interest, whichever is lower, can be claimed it as a deduction. That means, sir, dividend received from Indian company taxable in the hands of Rajesh Sharma as IFOS, since the income has accrued or arisen in India 40,000. But this entire 40,000 will not be taxable. Interest expenditure restricted to 20% dividend. Sir, this point should strike in exam. My dear lovable students, already when you have studied earlier, this IFOS, we would have discussed this point either in your earlier attempt or in our regular classes. So, this 8,000, why 8,000? 40,000 into 20% comes to 8,000. Or the actual interest paid is 10,000, whichever is lower. Because a maximum deduction under 57 clause 4 is either the amount of interest or 20% of income, whichever is lower. Good takeaway point. Interest on post office savings bank account Delhi amounting to 9,500. This point we already discussed or covered earlier. Sir, if you are getting interest from post office, sir, if you are getting normally interest from savings bank account 10,000 under 80 TTA, sir, I am respecting you, sir. Sir, you can enjoy 80 TTB to the extent of 50,000. But this is not savings bank account. This is not, sir, this is post office. If you are getting interest from post office, single account 3,500. Sir, joint account 7,000 rupees. Am I right? So, my dear lovable students, interest on post office savings is taxable in the hands of Mr. Rajesh as income from other source, since it had accrued or arisen in India. That comes to 9,000. Less exemption under section 1015. That 3,500. 80 TTA is there? No. 80 TTB is there? No. The same way this 3,500 can we claim it as exemption under section 1015. We know 1010 gratuity, 1010A pension, 1010A leave salary. In that category, there is one section called as section 1015. Section 1015 is saying that if you are getting any interest from post office, single account 3,500, joint account 7,000 rupees. So the gross total income is 1,50,000. My dear lovable students, sir, out of 9,500, you have claimed 3,500 as exemption. As what? Exemption. Sir, 9,500 minus 3,500. 6,000. This can be claimed it as deduction under 80 TTA. What a beautiful adjustment. Sir, I will explain you. Just listen one logic in Income Tax Act. Sir, we are having income from salary. We are having income from house property. We are having PGBP. We are having capital gain. And we are having IFOS. Am I right? If you are adding all the 5 heads of income, my dear lovable students, the answer is called as gross total income. Answer is called as, for example, when I am finalizing income from salary, this is the way in which I will finalize the income from salary. Like I will be putting basic salary. I will be putting, my dear lovable students, DA. I will be putting gratuity. Are you all really with me? Sir, and I will be putting a working note for gratuity. Like in a sense means, sir, actual gratuity received. Am I right? Less exempt under section 1010 because section 1010 is gratuity. Sir, if the employee may be a government employee or non-government employee, if the employee is a government employee, fully exempted. Non-government employee exemption is covered based upon whether the employee is covered under the Payment of Gratuity Act 1972 or not covered under the Payment of Gratuity Act. If an employee is covered under the Payment of Gratuity Act 1972, statute limit of 20 lakh, actual gratuity received 15/26 into last drawn salary into completed year of service. And we will be reducing some amount from this and we will be getting the taxable gratuity. Am I right? And this taxable gratuity we will be attaching here and we will be writing the taxable salary. This taxable salary, whatever we are getting, will be attaching here as income from salary. Am I right? My dear lovable students, if you are reducing anything before you calculate the what total income, that is called as exemptions. That is called as, so exemption will be above the line item. Exemption will be above the line item. The beauty of the Income Tax Act is all the exemptions are covered in section 10. For example, 10.5, 10.10, 10.10A, 10.10AA, 10.10B, 10.10C, 10.10CC, 10.11, 10.12, 10.13, 10.13A, 10.45, like that it goes. So all exemptions, those exemptions will be reduced before you calculate the gross total income. Are you all following? After calculating the gross total income, you will be reducing the what 6A, chapter 6A deductions. This chapter 6A deduction is only what? 80 TTA. That 3,500 rupees is 1015. 10 means exemption. Exemption means before gross total income. Are you all really with me? Whereas 80 TTA is chapter 6A deduction after gross total income. Are you all really with me? If you read the question, sir, have anywhere said that, sir, he shifted out of the what tax regime? If you are traveling through the optional tax regime only, you are entitled to claim chapter 6A deduction. That is a highlighted point. Even after claiming 3,500 up to 10,000 rupees, or if you are, sir, up to 50,000 rupees, you can claim deduction under 80 TTA or 80 TTB as the right. That's a highlighting point. Brilliant, fantastic, outstanding point. So 3,500 can be claimed as a exemption. Sir, exemption under what section? 10 subsection 50. And this is interest on what? Post office savings account. Sir, what 80 TTA is saying that, sir, individual or HUF, they should not claim deduction under 80 TTB. Right, sir? Sir, interest on deposit in what account? Savings account. That savings account you can keep in bank, you can keep in post office, or you can keep in any other place. First of all, it should not be FD. It should not be FD, fixed deposit. I'm putting FD. I will be getting what? Interest. That will not be claimed as deduction under 80 TTA. But for the SAR, who's SAR? Senior citizen, they are an individual and they are resident, including FD. Look, interest on what? Deposit. That's it, game over. Deposit means it may be in savings bank account, it may be in fixed deposit, because those people we have to respect. That's why government is giving respect to them. But these people are chotawala. In the sense means, if you are having SB account, my dear lovable students, every one of you will be having SB account. You all are having bank account. Do you have bank account in your name? Yes, sir. All those accounts are SB account, savings bank account. Only businessman will get the current account. Even I don't have current account. I'm not a businessman. ANM classes is a business. So ANM classes is having current account. But ANM classes will never get savings account. ANM classes will never get. Individuals will save. Sir, even though we are having account, we don't have balance in that. That is a problem. Since we don't have what? Balance, we are not getting interest. If we are getting interest, that interest will be taxable under the IFOS and we can claim it as deduction under 80 TTA. You cannot, we cannot, I cannot claim 80 TTB because we are not sir. Hello, sir. Are you understanding, sir? Yes, sir. So, here if you are getting interest on deposit in savings account, that account can be maintained either in bank or what? Post office. Then still you are entitled to claim 80 TTA. That's why the balance 6,000 has been claimed as 80 TTA. Then the total income is 1,44,000 is the taxable income. Are you all really with me? What a beautiful question. Sir, we are next slot. We are entering into the clubbing, set of carry forward and chapter 6 deduction. There I will kill it. Don't worry at all. Coming to illustration number 11. Are you feeling comfortable with the residential status? This is an MTP 2024, RTP November 2022. Mr. Akash, an Indian citizen. Whenever I heard the word Indian citizen, I will box it, mark it. Because he may fall under exceptions. Aged 45 years, that means he's not sir, he's a normal person. Worked in XYZ Limited in Delhi. He got a job offer from ABC Incorporation, California on 1/6/2023. He left India for the first time on 31/7/2023 and joined ABC Incorporation on 8/8/2023. During the previous year 24-25, sir, as per the story till now, in 24-25, he should not be in India because he's out of India. 24-25, Mr. Akash visited India from 25/5/2024 to 22/9/2024. Are you really with me? Is this, sir, leaving outside India or visiting India? Visiting India. This guy is an Indian citizen who's visiting India. Then I will be checking whether that guy is a chotawala or badawala. If he is chotawala, second basic condition will not be applicable. Only first basic condition will be applicable. If he is badawala, second condition will not be applicable. Altered second condition will be applicable. This many provisions should be downloaded in your brain. He has received the following income for the previous year 24-25. Salary from ABC Incorporation, California, received in California, computed 7 lakh. Basically, this is a foreign income. Am I right? Dividend from Indian company, Indian income. This will be taxable in India. Agriculture income from land, situated in Nepal, received in Nepal, foreign income. Are you all really with me? Rent received or receivable from house property in Delhi. This is Indian income, will be taxable in India. Profit from a profession in California, which is set up in India, received there. Since this is PGBP, my dear lovable student, if you are resident and ordinary resident but not ordinarily resident, it will be taxable in India. If you are a non-resident, this won't be taxable in. Determine the residential status of Akash and compute his total income for the assessment year 25-26 is the question. I hope that if such a question comes in exam, that 6 mark will be in our pocket. My dear lovable students, first I am checking the residential status. For how many days he was in India? From 25/5. 25/5 means May. So May, June, July, August and September. Am I right, sir? Sir, June how many days? Total 30. July 31. August 31. September 22nd till 22nd he was in India. Sir, from May 25, actually May total how many days? 31. So 25, 26, 27, 28, 29, 30, 31. 7 days. Take your calculator. 7 plus 30 plus 31 plus 31 plus 22 comes to 121 days. So he was in India for 121 days. Am I right? Which is more than 120 days. Which is more than? Now I want to check, sir, whether it's a chota wala or bada wala. For that purpose, I will not include the foreign income. I will include only the Indian income. This is basically a foreign income. Put it on. This 5 lakh is an Indian income. I will take it into account. Are you all really with me? And this is a foreign income. Put it on. Dustbin. This is an Indian income. 5.5 lakhs. And this is a, sir, is this profit from profession in California, which was set up in India, received there, is a Indian income, foreign income? Is it Indian income? So 6 lakh. So 5 lakh plus 5.5 lakh plus 6 lakh. 16 lakh, which is more than 15 lakh. That means I can claim it, man. Sir, rent received or receivable from the house property in Delhi is 5,50,000. Am I right? Yes, sir. We have to claim how much percent? 30%. Sir, if you claim 30%, what will be the figure? 3,85,000. So 5 lakh plus 3,85,000 plus 6 lakhs comes to 14,85,000. Now, has your answer changed? Yes, sir. Is the rent received will be the income, or after statutory deduction will be the income? After statutory deduction will be the income. So this is less than 15 lakh. He is a what wala? Chota wala. Second basic condition will not be applicable. Sir, only first basic condition is applicable. If you want to be a resident, he should be in India for 182 days. But he is in India only for 121 days, which is less than 182 days. So you have to, sir, tag him as. So as per our discussion, the answer is what resident? Come on, man. As per section 6.1, an Indian citizen or person of Indian origin who being outside India comes on a visit to India would be resident in India if he or she stays in India for a period of 182 days or more during the relevant previous year. Right, sir? In case such person has total income other than the income from foreign source not exceeding 15 lakh. That means this is a provision for what wala? Chota wala. If the assessee is a chota wala, for him, the second basic condition will not be applicable. If he want to be a resident in India, he should stay in India for a minimum period of 182 days or more. Clarity? Sir, however, if such person has total income other than income from foreign source, he exceeds how much lakh? He would also be a resident if he has been in India for at least 120 days during the relevant previous year and has been in India during the 4 immediately preceding previous year for a total period of how many days or more? In such a case, he would be a resident but not ordinarily resident in India. That means if the assessee is a badawala, second condition will not be applicable. Altered second condition will be applicable. Are you really with me? That altered second condition is saying that, hello sir, he should be in India for at least 120 days during the relevant previous year. Plus, he should be in India for 365 days or more in the 4 immediately preceding previous year. Am I right? Income from foreign source means income which accrue or arises outside India. Arises outside India. Except income derived from business control or profession set up in India, which is not deemed to accrue or arise in India. That means I have to eliminate the foreign incomes. Foreign income means income accrued or arisen outside India. When you are eliminating that, you should not eliminate the business PGBP income, which is controlled or set up from India. This is a definition of the foreign income. This is the definition of the. So in this case, total income other than income from foreign source of Mr. Akash for the previous year 24-25 will be salary from ABC Incorporation, California. It's purely that income has been accrued or arisen outside India. That income will not be counted for the purpose of determination of the Indian income. Am I right? That's what saying not included in total income since it is not income from foreign source. Sir, this computation I am making to determine whether the assessee is a chota wala or bada wala. This is not the computation of total income. You should understand that. Pakka? Then dividend from what company? Indian company included in the total income since it is deemed to accrue or arisen in India. This 5 lakh has to be included. Agriculture land from land situated in Nepal not included in the total income since it is accrued or arisen outside India and received outside India. Since this income is accrued or arisen outside India, then my dear lovable students, this will not be taken into account for the purpose of determining whether it's a chota wala or bada wala. Rent received or receivable from house property in what? Delhi. This is only what received? Rent received. Sir, it will be included in the total income since it is deemed to accrue arisen in India. Student, by overlooking may take 5,50,000 rupees as a total income. Hello, sir? Sir, less how much percent? This is only income. This is, sir, receipt. In Income Tax Act, don't see the receipt. You have to see the total income exceed 15 lakh. Am I right? Profit from business in California, even though the business you are doing outside India, which was set up in India, received there. Since it is set up in India, as per the definition of the foreign income, it does not include this business income. Am I right? So this 6 lakh should be included. So which comes to only 14 lakh. 14 lakh 85,000 is less than 15 lakh. He is a chota wala. Since he is chota wala, second basic condition will not be. In order to be a resident, he has to be mandatorily satisfy the first basic condition. That means he should be in India for at least, since Mr. Akash is an Indian citizen who come on visit to India only for in previous year 24-25 and his total income other than from foreign sources does not exceed, he would be a non-resident for the assessment year 25-26. Even we got the same answer. A non-resident is chargeable. Now I am coming to section 5. That is scope of what income? Total income. Sir, don't misunderstand that this is scope of total income. This is not scope of total income. This is, sir, total income computation to determine whether it's a chota wala or bada wala. A non-resident is chargeable to tax in respect of income received or deemed to be received in India and income which accrues or arisen or deemed to accrue or arisen in India. Sir, accordingly his total income would be, now he is a what resident? Non-resident. Only Indian income will be taxable, right? You tell me, is this 7 lakh taxable? No. Is this 5 lakh taxable? Yes. Is this agriculture income taxable? No. Is this rent received taxable? Yes. But it is after 30% reduction, right, sir? Is this profit from business or profession taxable? No. Because, sir, for a non-resident, even though PGBP has been controlled or set up in India, will not be taxable in India. Are you remembering? That means this 6 lakh we have included for the purpose of determining whether he is a chota wala or bada wala. Then only government is saying that he will quickly become a bada wala. Then only he will become a bada wala. Am I right? Sir, even after including 6 lakh, his income does not exceed 15 lakh. That is his headache. But generally, if you don't include this 16 lakh, 6 lakh, it will never cross 15 lakh. Correct? So, my dear lovable students, sir, salary from ABC Incorporation, not taxable. A dividend from Indian company, 5 lakh taxable. Agriculture income from land situated in Nepal, sir, it is not taxable. Rent receipt 5 lakh 50 minus 1 lakh 65, 3 lakh 85 is taxable. Profit from this profession in California, even though it which has been set up or controlled in India, since assessee is a non-resident, it won't be taxable. So that only 8 lakh 85,000 will be taxable in India. When we are doing more question, we are getting more clarity. Are you all really with me? That's where, man, we are doing each and every nook and corner of the residential status. And I will tell you, man, sir, in exam, you will never get a new scenario which is outside this frame. Since we are not preparing this frame in depth only, we are feeling very tough for the examination. Now, our brain started thinking. Now, we are able to say that no, he is a resident, he is a non-resident. No, this provision will be applicable. By naturally we are able to get it. I'm moving into question number 12. I think this is, we have started with question number 9, 9, 10, 11. 3 questions we have done. 4 by 7 is the target. Mrs. Rama, an Indian citizen, is a government employee working for the Indian government. She submits the following information for the previous year ending 31/3/2025. You have to answer this. Salary income received in Malaysia for the services rendered there, 2 lakh. That means by representing government of India, she left out of India. For the services rendered outside India, she has received salary of rupees 2 lakh. This 2 lakh will be treated as income deemed to accrue or arisen in India. As per section 9, subsection 1, clause 3. Am I right? Because services provided outside India, salary received outside India, but from the government of India. Right. Profit from business carried in Orissa. Is Orissa in India? Yes, sir. Geography you should know very well. Are you all really with me? Sir, that's why if you are very weak in geography, John, you are gone. Is Orissa in India? Yes, sir. You know Rajasthan is in India. Orissa is also in India. Alright, sir. So, the income has been accrued or arisen in India. It's not deemed. It's accrued or arisen. Loss from business carried on in Baroda. Is Baroda situated in India? Yes, sir. Baroda? I know only Parota. What is this Baroda? Baroda is in Gujarat, Rajasthan, North. Check in Google where the Baroda is. What is the distance to Baroda by walk? Where the Baroda is in. Gujarat. Yes. Yes, sir. So, you are having business loss 20,000. As per the set off and carry forward rules, my dear lovable students, business loss can be set off against business. Any head of income except salary. Am I right? So, this 20,000 can be knock off against 80,000. Are you all really with me? Profit from business carried out in Paris. Is Paris in India? No, sir. Chennai la irukra Paris kadayadara. Not that Paris. Alright. Income is earned and received in Sydney and business is controlled from Paris. That means pakka foreign income. This is foreign income. Alright. But this guy, Mrs. Rama, is an Indian citizen. Who's a what employee? Government employee. For how many days she went outside India and all, don't know. She was working for Indian government. But she went for Malaysia for some number of days. That I have to check it. Wait. Loss from business carried out in Canada, though profit are not received in India, business is controlled from Dehradun. Is Dehradun situated in India? Yes, sir. That means, sir, this loss, if it is profit, sir, resident and ordinary resident fully taxable. Right, sir? If it is profit, resident but not ordinary resident also taxable. If it is profit is taxable, loss should be allowed as a deduction. Are you all really with me? Unabsorbed depreciation of business in Canada. Unabsorbed depreciation will be treated as current year depreciation. Am I right? This Canada, since a business is controlled from Dehradun, sir, Income Tax Act will allow you to knock off the unabsorbed depreciation. Profit from Indonesia business controlled from Delhi and 60% of the profit deposited in a bank in Indonesia and 40% is received in India. That is irrelevant because since the business is controlled from Delhi, that will be treated as Indian income. Rent from house property situated in Canada and received in Canada, 1,92,000. This is only rent. You have to reduce the 30% standard deduction. Determine the gross total income of Rama for assessment year 25-26, ignoring the provision of 115 BAC. That means she is going to travel through the optional tax regime. Assuming that she is a resident but not ordinarily resident in India, Non-resident. So leave the first one. What is the first one? Resident and ordinary resident. This is resident. So you have to put 2 column. Okay. You have to say now salary income received in Malaysia for service rendered there. First of all, you classify. Is this Indian income, foreign income? Indian income means 2 incomes are Indian income. Income, sir, accrued or raised in India, deemed to accrue raised in India. Income received in India, deemed to be received in India. These 4 income are Indian income. You tell me, after thinking all the provisions, is this Indian income, foreign income? Indian income. So irrespective of the assessee, this Indian income will be. That's why this will be taxable as 2 lakh and 2 lakh. Am I right? Next one, man. Profit from business carried out in Orissa. Is Orissa situated in India? Yes, sir. Hence, this income is a. Once the income fall under Indian income, irrespective of the category of the assessee, it will be. That means, my dear lovable students, 80,000 should be taxable. Correct? But here from salary income, they have reduced the standard deduction. Yes, standard deduction 50-50 because that is a total salary received. Right? You will be getting the taxable salary 1,50,000 and 1,50,000. In house property, we have to reduce the standard deduction of. In salary, you have to check that whether it is computed or not. In exam, computed given, leave it. Otherwise, you have to reduce the standard deduction. Before you reduce the standard deduction, check whether the assessee is going to travel through the optional tax regime or default tax regime. If they are going to travel through the default tax regime, 75,000 is the deduction. If they are going to travel through the optional tax regime, this is the only section where optional tax regime, lower deduction. Right? How much? 50,000. Next one. Profit from business carried on in Orissa. Since it is accrued or arisen in India, it will be treated as an Indian income. 80,000 will be taxable. Am I right? Next one. Loss from business carried on in Baroda. Baroda is in India. Right? So, since the income is taxable, loss can be claimed as a deduction as set off. So, 20,000. Sir, since it is accrued or arisen in India. Am I right, sir? Next one, sir. Profit from business carried out in Paris. Income is earned and received in Sydney. And business is controlled from Paris. That means basically this is foreign income. Foreign PGBP. Foreign PGBP will be taxable in the hands of the resident but not ordinary resident. Only if that PGBP is controlled or managed from India. That condition has not been satisfied. So this 42,000 will not be taxable in either of the hands. And in non-resident, sollave theville. Are you all really with me? Yes, sir. Sir, loss from business carried out in Canada, though profits are not received in India, business is controlled from Dehradun. Is Dehradun situated in India? Yes, sir. That means this loss has been accrued or risen in India. Since this loss has been accrued or risen in India, my dear lovable students, this business is controlled from Dehradun 46,000. Here is the important thing. Since that assessee is a what resident? Non-resident, sir, foreign PGBP will never be taxable. If income is not taxable, loss cannot be set off. Here students will go wrong. Are you all really with me? They will reduce 46 from both the people, man. Sir, all this mistake you will do, you sit and do. That's why I said, daily solve how many questions? Till your exam, keep it as a challenge. 7 questions per day. If you solve 8, you will fail in exam. If you solve 6, you will fail in exam. Keep the number as what? 7. Then only daily you will be able to do it. I can say that daily 25 questions. It is not possible. That too, when you are doing, you have to do without see the answer. Then you have to go and check. Then only you will commit a mistake. At that time only clarity will come. At that time you will be getting a clarity like anything, man. And those 7 questions you present as if you are writing exam. It's not like scribbling. 180 days or more. No. Sir, in order to treat an individual to be a resident in India, he should satisfy one of the 2 conditions. Condition number 1. Like that you have to present very properly. Then you will never feel this subject tax as tough. Tax is easy, but we are not putting the required efforts. You tell me, a student who are not knowing from interest from post office account 3,500, can we claim it as an exemption under 1015? And the balance can we claim it as, sir, deduction under 80? For those guys, it will be tough only. Right. Next one, man. The next adjustment. Unabsorbed depreciation of business in Canada. My dear lovable students, business in Canada. Sir, Canada business, for the first person, it is, sir, income accrued or risen in India. So this 16,000, can we claim it as a deduction? Am I right, sir? 16,000. But for the second person, Canada business is foreign PGBP. Since he is a what resident? Since that income is accrued or risen outside India, its loss also accrued or risen outside India, it won't be taxable. Can I proceed? Profit from Indonesia business, control from Delhi. That's it, John, you are gone. Since it is controlled from Delhi, for the first person, 70,000 will be taxable. But the second person, non-resident, since the income has been accrued or risen in India, it won't be taxable. But 40% received in India, then receive concept will be applicable. That means 70,000 into 40 percentage comes to 28,000. So what should be the answer? What and what? 70,000 and 28,000. Is it good adjustment? Rent from house property situated in Canada and received in Canada. This is other than PGBP. Other than PGBP will not be taxable in neither of people hands. Whether second category people, third category people, it should be dash and dash. You will be getting the gross total income of 2,18,000 and 2,38,000. Are you all really with me? Sir, generally this guy should have less income as compared to this guy. That's what the rule. Are you understanding? But there are certain losses this guy were not able to set off. So because of that, his total income is showing higher than resident, but not ordinarily resident. You can read the notes by yourself, man. The notes are printed there. So we have done question number 9, 10, 11, 12. 4 questions has been done. I'm moving into the 5th question, that is illustration number 13. Miss Asha is an Indian citizen. She's a lawyer by what profession? She started her consultancy profession in India in 2021 with the name New Way Associates. In May 2023, that means 23 means 23, 24. She got married to Mr. Ram, an American citizen. Good things is happening. Ram came to India for the first time on 1st May 2022. That means love started on that day. 2022, Ram came, and on 23 May 2023, they got married. So exactly within 1 year, they have achieved. When he joined in an MNC in India, at that time in coffee break only, Ram met Asha. He got a promotion and was transferred to Dubai. Since he's so much workaholic, the company said that you are promoted. Go to what? Dubai. Now, if Ram is going to Dubai, Sita can't be here. Now Asha should also go along with Ram. He left for Dubai on 1st October 2023. That means on 23-24, he left. Who? Ram. Mrs. Asha accompanied him to Dubai. யாரும் போறாங்க, ஆஷாவும் போறாங்க. கரெக்டா சார்? சார், சிவப்பு காய் போகுது, பின்னாடியே கருப்பு காயும் போகுது. She started providing consultancy service there. Asha said that wherever you are, I am also there. So I will be providing my consultancy service in Dubai. Both of them came to India for 3 months from June to August in 2024 to spend time with Asha's family. Asha's parents are in India. So from June to August, June to August, June, July, August. Correct, sir? June, July and August. These 3 months they came. Following income were earned by Mr. Ram and Mrs. Asha during 24-25. The beauty of this question is, this is not individual SSC question. This is dual SSC question. Point number 1. Point number 2, Asha is a what citizen? Indian citizen. She is coming back. She is coming back. If she comes back, my dear lovable students, for Asha, if the assessee is an Indian citizen or person of Indian origin who are visiting India, then my dear lovable students, you have to see whether they are Chota wala or Bada wala. Sir, this is income of Mrs. Asha. Profit from consultancy profession in Dubai, which was set up in India, not liable to tax in India. This line is for deemed resident. Am I right? So this will be treated as income accrued or risen in India. Am I right, sir? Profit from consultancy profession in India, 3 lakh. Income accrued or risen in India. Long-term capital gain on sale of shares of what company? credited to her Dubai bank account. This is foreign income. Short-term capital loss on sale of listed share of what company? Indian company. That means, sir, this is in loss accrued or risen in India. That means 12 lakhs plus 3 lakh. 15 lakh minus 42,000. 14 lakh. 50. Sir, this is what loss? Short-term capital loss. Short-term capital loss can be set off only against short-term capital gain or long-term capital gain. You should know the set off and carry forward rules. ICAI is indirectly checking this. If you do this and do 14,58,000, swaha. Hello, sir. So the income is how much lakh? 15 lakh. There also ICAI is putting up, sir, have it exceeds 15 lakh. No, sir. We have already done one question for exceed. Yes, sir. That means Asha's income does not exceed 15 lakh. Asha is a chota wala. Asha is a chota wala. Since she is a chota wala, second basic condition will not be applicable. First basic condition alone has to be applicable. But she is in India for maximum only 3 months. That means which is less than 182 days. So Asha should be treated as non-resident. Right, sir? Whereas man, Ram. Sir, who's Ram? Sir, Ram, sir, American citizen. That means there is no exception for him. There is no exception for him. Because the exception will be applicable to Indian citizen leaving India for the purpose of employment, Indian citizen leaving India as a member of crew member, Indian citizen or person of Indian origin visiting India who is a chota wala, Indian citizen or person of Indian origin visiting India who is a bada wala. Clarity? This guy is a what citizen? American citizen. But my dear lovable students, you should be in India for at least 60 days. Yes, 3 months they was in India. Both were in India for June, July, August, which is more than 60 days. And in the 4 immediately preceding previous year, you should be in India for 365 days. This guy Ram came to India to pick Asha only when? First time on May 2022. That means 22-23, this guy was in India, Ram. Am I right, sir? Then 23-24, he was in India. 24-25, sir, when they left? 1st October 2023. So 23-24 October they left, right? That means October they left means April, May, June, July, August, September. Sir, 6 months. 6 into 3 comes to 180 days. So in the last year they were for 180 days. Am I right? Ram came in May 2022. May means May, June, July, August, September, October, November, December, January, February, March. 11 months. 11 into 30, 335 or rather approx I am saying. So 335 plus 180. 515, which is more than 365 days. That means Ram in the 4 immediately preceding previous years, he has satisfied 365 days condition. That means, my dear lovable students, Ram should be treated as resident. Now, out of the last 10 years, at least he should be in India for 2 years. Okay, fine. Before this, Ram is not in India. That means out of 7 years, Ram will never satisfy 730 days condition. So one of the additional condition, Ram has not been satisfied. Then, my dear lovable students, he will be treated as resident. Resident, but not ordinarily resident. Ram is having this income. Income, salary from company in Dubai. Dubai. Not taxable to tax in Dubai. Leave it. Sir, how much? 13 lakh. Right, sir? This is company in Dubai. Sir, for a resident, but not ordinarily resident, this will be a what income? Foreign income. Am I right? Will it be taxable in India? No, sir. Long-term capital gain on sale of shares in Indian company, pakka taxable. Income from house property in Delhi, computed given, pakka taxable. Dividend from shares of Indian company, pakka taxable. Am I right? So what is the residential status of Ram? Resident but not ordinary resident. Asha? Non-resident. Am I right? Now, if she is a what resident? Non-resident. You have to again check whether is there any concept of the deemed resident under section 6 subsection 1A or not. What are the conditions? Assessee should be a Indian citizen. Sir, only Indian citizen, not person of Indian origin. There you should not, sir, include person of Indian origin. Only Indian citizen. Is Asha Indian citizen? Yes. Number 2. Total income should be more than. Have it exceeded 15 lakh? No, sir. That means Asha is a chota wala. She is not a bada wala. Then deemed resident concept applicable? Not, sir. Whether she is a deemed resident, not a deemed resident. That means she is a non-resident. Have you finalized your answer? Now determine the residential status of Ram and Asha and their total income for the assessment year 25-26, ignoring the provision of 115 BAC. Sir, now you go and check. Sir, this is an RTP November 2023 question. Determination of residential status of Mr. Ram. Mr. Ram is a what citizen? Who comes on visit to India during 24-25 for just how many months? He has been in India from 1st May 2022 to October 1st October 2022 or 25. Yeah. 24-25. When they came? No. 1st May 2022 to 1st October 2023. Since Ram has been in India for a period of more than how many days? 60 days. During our previous year 24-25 and period of more than 365 days, that is 590 days during the 4 immediately preceding previous year, he satisfies one of the basic condition, then he will be treated as a, since his personal stay in India during the preceding 7 years is less than 730 days, he is a resident but not, since Ram is a resident but not ordinarily resident, income accrues or arises in India, deemed to accrue or arise in India, or received in India, deemed to be received in India, basically Indian income, and derived from business controlled in or profession set up in India is chargeable to tax in India in his hands. This is nothing but scope of total income. Am I right? So computation of total income of Ram. Sir, salary from company in Dubai. My dear lovable students, this is income accrued or arisen outside India. This will not be taxable. Long-term capital gain on sale of shares of what company? Indian company. Taxable since it is accrued or arisen in India. Am I right, sir? Income from house properties Delhi, taxable, sir. Sir, dividend from shares of Indian company, taxable, because all these income are income accrued or arisen in India, 7,75,000. Now I am coming to Asha. Is our answer with Ram correct? Yes, sir. Determine the residential status of Mrs. Asha. Mrs. Asha is an Indian citizen who come on visit to India during previous year 24 for 3 months, that is 92 days. Since she does not satisfy any of the basic condition in India for 182 days, or 120 days during the previous year 24-25. She is a resident. She is not a resident in India as per 6.1. My dear lovable students, is Asha chota wala, bada wala? Chota wala, because income does not exceed 15 lakhs. Sir, then second basic condition will not be applicable, right? They are not talking from the angle of second basic condition. They are saying that since she was in India for only how many days? 92 days. She was not even in India for 120 days. Sir, if a person who is not in India for 120 days, how she can satisfy 182 days? Are you all really with me? In that angle only they are talking. Mrs. Asha would be a deemed resident under 6.1a if her total income other than income from foreign source exceeds how much lakh? During the previous year 24-25, as she is an Indian citizen and not liable to tax in Dubai. Right? Sir, but sir, since total, so I am now calculating the what income? Indian income. Total income. This total income is not the taxable total income. This total income is to determine, sir, whether to categorize her as what or not. Chota wala or bada wala. Profit from consultancy profession in Dubai. Since it is set up in India, my dear lovable students, that has to be included as per the definition. Profit from consultancy profession in India should be included. Long-term capital gain on sale of British company will not be included since it is foreign income. Short-term capital loss on sale of listed shares of what company? Sir, it accrues or arises in India, but short-term capital loss is not allowed to be set off from business or profession. Short-term capital loss can be set off only against short-term capital gain. So the total is only how much lakh? Since total income other than income from foreign source of Asha does not exceed 15 lakh, she would not be a what resident. Even we got that answer only. Sir, hence Mrs. Asha is a what resident? Non-resident. What is the rule? What is the relevance? If she is a deemed resident, all deemed residents are deemed to be resident but not ordinary resident. Then taxability will change. But now she is a what resident? Non-resident. Since Mrs. Asha is a what resident? Income which accrue or arises in India, deemed to accrue or arises in India, received in India, deemed to be received in India is chargeable to tax in India in her hands. Profit from consultancy profession in Dubai, which was set up in India, will not be taxable. Now I am writing the taxability based on the assumption that she is a what resident? Profit from consultancy profession in India, taxable. Long-term capital gain on sale of British company will not be taxable. Short-term capital loss, this has to be carried forward. Am I right? For 8 assessment year, as per the set off and carry forward loss. So the total income is only 3 lakh. This is the total income for payment of tax. But this total is for determining whether she is chota wala or are able to place man. With this, we have done with question number 9, 10, 11, 12, 13. 5 questions we have done. I am moving into question number 14, 6th to our pocket. Mrs. Rohini, aged 62 years, was born and brought up in New Delhi. Aged 62 years. Senior citizen. She got married in Russia in 2000 and settled there since then. She was in Russia. Since her marriage, she visited India for 60 days each year during her summer break. So every year she used to come on 60 days. Following are the details of her income for the previous year ended 31/3/2025. Pension received from Russian government 65,000. Long-term capital gain on sale of land at New Delhi computed 3 lakh. Short-term capital gain on sale of shares of Indian listed company in respect of which STT was paid both at the time of acquisition as well as at the time of sale. They are saying computed 60,000. Premium paid to Russian life insurance company at Russia 75,000. Rent received equivalent to annual value in respect of house property in New Delhi. This is only rent 90,000. You are required to ascertain the residential status of Mrs. Rohini and compute her total income for assessment year 25-26 as per the normal provisions. That means she opted out of the default tax regime. She is now traveling through the optional tax regime. First of all, look at the Jadagam. Is this guy, sir, Mrs. Rohini Ravi, she got married 2000, settled since there. Sir, she is born and brought up in India. Born and brought up in India means what citizen? Now Indian citizen who are visiting India, I have to bifurcate her as either chota wala or bada wala. For the purpose of chota wala, bada wala, 15 lakh is the condition. Right, sir? Pension received from Russian government is Indian income, foreign income? Foreign income. So I will not consider this 65. Long-term capital gain on sale of land will be considered. Short-term capital gain on sale of Indian listed company will be considered. Premium paid 75,000 since this is, sir, income accrued horizon outside India. And rent received 90,000 into 70% comes to 63,000. 63,000 plus 3 lakh plus 60,000 comes to 4 lakh 23,000, which is surely less than 15 lakh. She is a chota wala. Second basic condition will not be applicable. Only first basic condition is applicable. That means in order to be a resident, she should be in India for at least 182 days or more. But she is in India for only 60 days. That means, my dear lovable students, she will be treated as a, that's it. That is our answer. Residential status is non-resident. Sir, if you are a non-resident, I am looking for the taxability. Only Indian income will be taxable. Am I right? Sir, you tell me, pension received from Russian government will not be taxable. This 3 lakh, sir, already computed, will be taxable. Short-term capital gain on sale of what, man? Indian listed company on which STT was paid both at the time of acquisition as well as at the time of sale. This is short-term capital gain. What capital gain? Not long-term capital gain. Short-term capital gain. If it is short-term capital gain, 112A in capital gain will not be applicable. Sir, 112A will be applicable only for the long-term capital gain. That means the 60,000 should be taxable. Premium paid to Russian Life Insurance Corporation at what? Russia. Since this assessee is a what resident? Non-resident. Sir, this is an income accrued horizon. Income includes expense also and losses also. Are you all with me? So when I use the word income, income includes expense and losses. Rent received, this will be taxable in India, but not 90,000 as we already said. So this is what our answer. Can we check with the ICAI answer? Now, an Indian citizen or person of Indian origin who being outside India, come on visit to India and whose total income other than from foreign source does not exceed 15 lakh would be resident in India only if he or she stays in India for a period of 182 days or more during the relevant previous year. Pakka? This is the provision. Since Mrs. Rohini Ravi is a person of what origin? Indian origin, because she was born and brought up in India. Because I don't know she is Indian citizen or not. Citizenship, again citizenship they have not said. But any person who was born in undivided India are person of Indian origin. What India? Undivided. All the Pakistanis, people who are in Pakistan, all are person of Indian origin. Those who are in Bangladesh, that is all the near, that is before India, before Indian independence, we know that India and Pakistan were one country. Hello, sir. Not only Pakistan, there are some other country like Bangladesh. So all the Bangladeshis are person of Indian origin. Because what is the meaning of person of Indian origin? Either them or their parents or their grandparents born in India. Every Pakistani's grandparents are born in India only. Every Bangladesh grandparents are born in India only. That means all of those people are person of Indian origin. So this guy has born and brought up in India. So more than the citizenship, sir, their person of Indian origin is satisfying. So since Mrs. Rohini is a person of Indian origin who come on visit to India only for how many days? 60 days. In the previous year, 24-25. And her income other than from what sources? Foreign sources does not exceed 15 lakh. She is non-resident for the assessment year 25-26. Is our answer matching? Now scope of total income. A non-resident is chargeable to tax in respect of income derived, income received, deemed to be received, income which accrue or arisen, deemed to accrue or arisen in India. That means basically for a non-resident, only Indian income will be taxable. For resident and ordinary resident, global income will be taxable. Am I right? Computation of total income of Mrs. Rohini Ravi for assessment year 25-26. Salary will not be taxable because it has been earned outside India. Am I right, sir? Yes, sir. This 65,000 man, this is pension received from what government? A Russian government. The next one. Sir, income from house property 63,000. This is after standard deduction. That's what salary they are saying. Pension received from Russian government, not taxable since it's neither accrued or arisen in India, nor it is received in India. Income from house property, annual value, rental income from house property is 90,000, less standard deduction at the rate of 30%. So you'll be getting income from house property of 60. Then capital gain already given in the question as how much? 3 lakh 60,000. Two capital gain. 3 lakh rupees capital gain. Right, sir? Which is long term. And one more short term, which is 60,000. So both if you add long term capital gain on sale of land at New Delhi, it is taxable since it is deemed to accrue or arisen in as it is arising from transfer of land situated in India. And my dear lovable students, short term capital gain on sale of shares of Indian listed company in respect of which what was paid? It is taxable since it is deemed to accrue in India as such income arising on transfer of shares of Indian listed company 60. So 3 lakh plus 60, 3 lakh 60,000. Right, sir? So what is the gross total income? 4 lakh 23,000. Let's what 6A? What is the item available for chapter 6A? Only premium paid is there. Sir, if you pay premium, life insurance premium, you are entitled to claim 80C. What, man? 80C. Look, man, sir, deduction under chapter 6A. Deduction under what? Chapter 6A. Deduction under what? C. Life insurance premium of how much rupees she paid? 75 in question. 75,000. Come on, man. Premium paid to Russian life insurance company is allowable as what? Deduction. Allowable as deduction. There is a section called as section 80C. Alright, sir? If you go and check 80C, I will show you. In the top. Section 80C is applicable to a resident individual, resident HUF applicability. They are testing the applicability. Resident HUF and here eligible assessee. Sir, 80C. An individual or HUF, whether what or what. That means 80C, my dear lovable students, is applicable to what resident also? Not all the chapter 6A will not be applicable to non-resident. இது மாதிரி எவ்வளோ அடி தான் வாங்குறது சார்? 80C will be applicable to both resident and non-resident. Resident and non-resident. Both can see. Resident can see, non-resident can see. This punch I would have said when I said it's take the regular class. 80C, who and all can see. Resident can see, non-resident can see. So now, actually in this question, that is not the twist. The twist is not 80C can be taken by the non-resident. If that itself is a twist for you, very good. According to me, that is not the twist in the question. The question is how much, sir, how much is the premium paid? 75,000. Now come and check the gross total income. Sir, income from salary, 63,000. Capital gain, this capital gain include both long-term capital gain and, sir, against the chapter capital gain, chapter 6 is not allowed. Because both are special rate of tax item. Long-term capital gain will be taxed at 12.5%, 20%, etc. And short-term capital gain will be taxed at 30%. Am I right? So in your capital gains are 3,60,000. That means other than capital gain is only what income? House property income. How much? To that extent, you can claim chapter 6A deduction. Are you all really with me? That arrow mark plays a major role. So that's what, sir. However, the same has to be restricted to gross total income, excluding long-term capital gain. That means for long-term capital gain, chapter 6A will not be allowed. Sir, for short-term capital gain, chapter 6A will not be allowed. Chapter 6A deduction are not allowable against, sir, such income chargeable under 112. What is 112? Long-term capital gain. 111A. What is 111A? Short-term capital gain. We are having two sections, 111A and 112A. 111A and 112A respectively. So, against your long-term capital gain, you are not supposed to claim the chapter 6A deduction. So, even though you have paid 75,000, the other income falls to the extent of only 63,000. So, the total income will be 3,60,000. Sir, good hit. Are you all really with me? And good learning also. Don't worry. When we do the chapter 6A, I will be highlighting all these things at all. We have done question number 6 out of 7, 9, 10, 11, 12, 13, 14. Last question. Sir, income deemed to accrue or arise in India to a what resident? Non-resident by way of interest, royalty, fees for technical service is to be taxed in India, irrespective of the territorial nexus. What they are saying? Income deemed to accrue or arise in India to a non-resident. That means if the assessee is a non-resident, they are getting interest. They are getting royalty. They are getting fees for professional or technical service. This all has to be taxable irrespective of the territorial nexus. No, sir. You have to check that whether interest has been received from government, resident, non-resident who are using that fund for business or profession in India. You are getting royalty from government, resident, non-resident who are using fund for business or profession in India. The same thing. Sir, income by way of interest, royalty or fees for technical service which is deemed to accrue in India by virtue of clause 5, clause 6, clause 7 of section 9 shall be included in the total income of the non-resident whether or not the non-resident as a residence or place of business connection in India, non-resident has rendered service in India. In effect, income by way of fees for what services? Technical services. Interest or royalty from service utilized in would be deemed to accrue in India in case of non-resident and will be included in his what income? Whether or not such services are rendered in India. Therefore, given statement that income deemed to accrue in India to a non-resident by way of interest, royalty, fees for technical service is to be taxed irrespective of the territorial nexus is correct. What the meaning of this line I will tell you. For example, I am a what resident? Non-resident. I am situating outside India. I don't have permanent establishment in India. Permanent establishment means branch, sir, head office or agency, like that it goes. I am situating outside India only. I am non-resident. but I gave loan to certain people in India. They are using that for business or profession. Sir, I have done certain services which is fees for professional or technical services. I gave certain royalty. I got certain royalty. Still, by the time I'm getting all the three income, I'm situating where only? Outside India only. Have I come to India? No, sir. Have I provided service in India? No, sir. But still, this IFRS, interest, fees for professional or technical services, royalty or any other similar sum will be taxable in the hands of what resident? Now you read, income deemed to accrue rise in India to a what resident? Non-resident. Look, if that interest, if that fees for professional or technical services, if that royalty has been received from government, has been received from resident, has been received from non-resident who are using for the purpose of business or profession in India, then only that IFRS will be treated as deemed to accrue rise in. They're saying income deemed to accrue rise in India means all those conditions has been satisfied. Hello, sir. To a what resident? By way of interest, royalty, fees for technical service is to be taxed in India, irrespective of the territorial nexus, means that non-resident is not situating in India. That non-resident is situated outside India. He gave loan to a government. He gave loan to resident. He gave loan to a non-resident. But all those people are used for their business or profession. Sir, will that IFRS will be taxable in India? Yes. That means even though that non-resident have not even, sir, came one day to India, he is not present 180 days or more. He does not present 60 days or more. He just lended money to India. He just provided technical services to a person who are in India. So irrespective of the territorial nexus, irrespective of the territorial nexus, my dear lovable students, that will be taxable in India. Examine the correctness or otherwise of the given statement. Yes, the statement is correct. Are you all really with me? So we are supposed to do illustration number 16. Illustration number 17. Then like that. Sir, 19, 20. We have completed from 21 onwards. Alright, sir? 4 questions, and in the initial questions, we have done only residential status. We have not done the scope of total income. That also has to be finished. So by spending one more slot, we'll be able to complete the 100% of the residential status. I hope that you are able to place, you are getting a lot of knowledge in the residential status and scope of total income. I'm with you, sir, from your heart. Anybody is there? Where is a grand clap? Sir, very, very, very happy morning to all. Sir, by today's slot, we are going to close the first slot of the workout batch, that is residential status and scope of total income, which is having a scope of 6 mark in exam. We have done in the last slot till illustration number 15. I'm going to proceed from illustration number 16. Following are the income of Sri Subhash Chandra, a citizen of India, for the previous year 24-25. Income from business in India, 2 lakh. The business is in India. That's it. Sir, if the business is situated outside India only, I am supposed to check from where they are controlling the business. If the business itself is from India, then the income is accrued or arisen from India. It will be taxable in India. The business is controlled from London and 60,000 were remitted to London. That is irrelevant. Because since the business is situated in India, income is accrued or arisen in India. So my dear lovable students, entire 2 lakh will be taxable. But who? Compute gross total income of Sri Subhash Chandra Bose for assessment year 25-26 if he is a resident and ordinarily resident and resident but not ordinarily resident. This is a past examination question. Sir, since the income is Indian income, irrespective of the residential status, it will be taxable in the hands of all the assessee. So that's what? Income from business in India, control from London. Taxable both in the hands of resident and ordinarily resident, and resident but not ordinarily resident, since the income accrues or arisen from business in India, irrespective of the fact that business is controlled from London, hence 2 lakh and 2 lakh will be taxable. Profit from business earned in Japan, 70,000. That means the income has been accrued or arisen outside India. Whatever may be the case, in case of resident and ordinarily resident, global income is taxable. That means 70,000 will be taxable, of which 20,000 were received in India. And the business is controlled from India. So even though the income has been accrued or arisen outside India, it is PGBP income. Since the business is controlled from India, in case of resident but not ordinarily resident, also it is taxable. That means the taxability will be 70,000 for the first person because of the reason global income is taxable in India, and 70,000 for the second person because of the reason that even though business income has been accrued or arisen outside India, such business is controlled from India. So the answer should be 70-70. You have to write the explanation for that in exam. Profit earned from business in Japan. Profit from business in Japan is taxable in the hands of resident and ordinarily resident. Since global income is taxable in the hands of resident, and moreover, entire profit of 70,000 would be taxable in the hands of resident but not ordinarily resident. Even only how much rupees is received? 20,000 is received, since the business in Japan is controlled from India. Are you all really with me? Untaxed income of 1,30,000 for the year 22-23 of a business in England which was brought to India on 3rd March 2025. Sir, the Indian taxability is based upon two things: accrual concept, receipt concept. Are you all really with me? My dear lovable students, the income has been earlier accrued or arisen outside India, and the first received income is in outside India. Later point of time, that money if you are bringing to India, that doesn't mean that income has been accrued or arisen in India in this year. Or, my dear lovable students, later on, if you are bringing to India, that will not be treated as the receipt in India. Receipt means first receipt. Receipt means first receipt. That means this does not satisfy the condition of accrual, and this does not satisfy the condition of receipt. Hence, this 1,30,000 will not be taxable in both the people's hand. Untaxed income for the year 22-23 of a business in England which was brought in India during 24-25, it is not taxable either in the hands of resident and ordinarily resident, or resident but not ordinarily resident, since such income is not related to the previous year 24-25. Coming to the fourth adjustment, fourth income, royalty of rupees 4 lakh received from Sri Ramesh, a resident, for technical service to provide to run a business outside India. First, think from the angle of the resident and ordinarily resident. So I am resident and ordinarily resident. I am getting royalty income of rupees 4 lakh from another resident. Sir, for a resident and ordinarily resident, global income is taxable in India. Whether that technical services has been provided in India or outside India, whether it is resident, whether it is non-resident, all these things are irrelevant. Am I right? So my dear lovable students, that 4 lakh rupees will be taxable in the hands of resident and ordinarily resident. Whereas with regard to a resident but not ordinarily resident, sir, this income has been, this royalty income of 4 lakh rupees has been received from a resident. So a resident but not ordinarily resident is receiving royalty from another resident. Right? This guy has provided technical services to this resident, and that resident is using that technical services to run a business outside India. That means, is the income accrued or arisen in India? No, sir. Is the income received in India? Is the income received in India? Where this guy is situating, where the recipient, resident but not ordinarily resident is situating? India. Hello, sir. Where the resident, the giver is situating? India. So the giver is giving to the recipient. Both the people are situated in India. Then is the receipt condition satisfied? Yes, sir. Sir, if the income has been accrued or arisen in India, it will be taxable in all people hand. If the income has been received in India, it will be taxable in all people's hand. Will this satisfy the receipt condition? Because of that, sir, 4 lakh will be taxable both in the hands of what and what? Look at here, nil. Read it. Sir, royalty received from a resident for technical services provided to run a business where? Outside India. You should be very clever and very clear. We are in the ending session of the residential status and the scope of total income. Still, if you are going wrong, means you need more practice. Redo all the question. Don't read the question and do the auditing. That you do with Jayashree ma'am. Don't do here. Don't see the question and tick it. And okay, this is taxable, that is taxable. Then your brain will never work. Are you understanding? That mistake, if you are doing, it is equal to non-studying. That you don't do. Question, if you see the answer, you will think that you are logically thinking. No, you are not at all thinking. No logic, not at all thinking. So that's why I ask you to do daily how many questions? 7 questions. That you have to write the answer, then cross-check with the answer. Then surely there will be difference of opinion between you and ICAI. That point only you will learn a lot of things. Just come here. Sir, it is taxable in the hands of resident and ordinary resident. There is no doubt about it. Because global income is taxable in the hands of resident, and this point we will never go wrong. Because there is no point in that. Wherever income earned by resident and ordinary resident, it will be taxable in India. Whereas it is not taxable in the hands of resident but not ordinary resident, since royalty income is not deemed to accrue or rise in India. As such income is paid by resident for technical services used to run a business where? Outside India. That means, sir, you have to critically analyze, man. The person who provided the service is resident and ordinary resident. For resident and ordinary resident, 2 income will be taxable. 2 points are there for taxability. Indian income will be taxable. Number 2, PGBP earned outside India, which is controlled or set up in India, will be taxable. Am I right? So, my dear lovable students, here he is getting royalty from a resident. If that resident is using that technical services to run the business in India, then only such royalty has been accrued or arisen in India. That means you are giving me royalty, but that technical services you are using where? Outside India. That means the consumption of the technical services is outside India. Since the consumption is outside India, my dear lovable students, income has been accrued or arisen outside India, because the source, for example, you are having a house property, you are getting rent, that house property is situated in India. Where the income has been accrued or arisen in India? India. That house property is situated outside India. From that property you are getting rent. Income has been accrued or arisen. The same way, sir, are you going to use the technical services in India to run the business? Then income has been accrued or arisen in India. If you are going to use the technical services to run the business outside India, then income has been accrued or arisen outside India. That means it has not fall under the scope of section 9 at all. If it has not fall under the scope of section 9, income has not been accrued or arisen in India or deemed to accrue or arisen in India, it will not be taxable in India. It will not be taxable in India. That's why this 4 lakh rupees is not taxable. So the same logic you apply, you read it, you say the answer, we will go wrong, then we will get telivu. Agriculture income of 90,000 in Bhutan. First question, is Bhutan situated in India? Sir, for resident and ordinary resident, global income is taxable in India, so that 90,000 will be taxable. But with regard to resident but not ordinary resident, first of all, is this Indian income? No, sir. Sir, foreign income, he is having only one foreign income is taxable in India, which is PGBP income. Is agriculture income a PGBP income? No, sir. Hence, sir, the ideal answer should be 90,000 and dash. Accepting? Are you all saying 90,000 dash? I'm going and checking, man. For that, the next one, after 4 lakh, it is 90,000 and dash. Think like this. Agriculture income in Bhutan. since agriculture income accrues or arises outside India, it is taxable only in the hands of resident but not ordinarily resident. Resident, but since agriculture income accrues or arises outside India, resident and ordinarily resident. Are you all really with me? Sir, no exemption is available. There is one exemption called as 10(1). But in order to apply section 10 subsection 1, agriculture land should be situated in India. No exemption is available in respect of agriculture income earned outside India. If you earn agriculture income outside India, such income is not at all an agriculture income. In order to be an agricultural income, the primary condition is that agriculture land should be situated in India. Clarity? So you have to highlight, you have to show to the examiner that even I know this exemption under 10(1) will not be applicable if the agriculture land is situated. That's how you have to be smart in exam. Come on, I'm moving to the next point. You apply. Income of rupees 73,000 from house property in Dubai, which was deposited in a bank at Dubai. Accrual is outside India. Receipt is outside India. Even though, my dear lovable students, in case of resident and ordinarily resident, global income is taxable. Global income. What they have given, rent of 73,000 is given or income of 73,000 is given. Income of 73,000. Will you reduce standard deduction at the rate of 30% or will you treat this as after standard deduction? After standard deduction. So in the hands of a resident and ordinarily resident, this 73,000 will be taxable. Am I right? Whereas in hands of resident but not ordinarily resident, my first question, is this Indian income? No, sir. Is this, sir, foreign PGBP income? Hence, this amount should not be taxable. So the ideal answer should be 73,000 and, sir, I'm coming and checking, man. Sir, income from house property in Dubai, which was deposited at bank at Dubai from 73,000, since income accrues or arises outside India and it is also received outside India, it is taxable only in the hands of resident and ordinarily resident. Less deduction under section 24 at the rate of 30%. On that 73,000, if you apply 21,900, balance 51,100. Sir, in the above solution, 73,000 from house property in Dubai is presumed. Presumed means assumed. You can have counter assumption also. You can write in the examination that since the word income has been given, I have assumed that it is after standard deduction. Sir, why this question has not solved like that? Because in bracket computed has not been given. Even though they use the word income, income doesn't mean the income as per the Income Tax Act. Even rent is an income. Rent will be credited to P&L account as per accounts. Am I right? In that angle, they are assuming or presuming to be what received, rent received. Since a said amount is stated to be the amount deposited in bank, accordingly, deduction at the rate of 30% of the said amount to be provided to compute the income from house property where Sri Subhash Chandra Bose is resident and ordinarily resident. Hello, sir. However, since the word income from house property appear to be indicate that same is income, presume that same was received computed under the head of income, it is possible to consider the said amount of 73,000 as income computed under the head income from, after providing deduction at the rate of 30% under 24A. In such a case, gross total income of Sri Subhash Chandra Bose, if he were a resident and ordinarily resident, will be 8,33,000. That means nothing, man. Instead of, sir, 51,100, you tax how much rupees, man? 73,000. Are you all really with me? That's what question number 17. I'm moving into question number 18. We are going to self-check ourselves whether we have clearly understood this chapter or not. This is a December 21 MTP 2023 question. Examine tax implication of the following transaction for the assessment year 25-26. Give brief reasons. Government of India has appointed Mr. Rahul as an ambassador in Japan. That means Rahul is going to work on behalf of Government of India. So he is going to provide services outside India. He is going to get the salary outside India. but he's going to get the salary from the government of India. Some section has specifically mentioned this. 9, subsection 1, class 3, because 3 condition. Working outside India, getting salary outside India from the government of India. He received salary of 7,50,000 and allowance of 2,40,000 during the previous year 24-25 for rendering his service in Japan. For this 2,40,000, since he is, sir, this is foreign allowance and perquisite are fully exempted under section 10 subsection 7. You should know 10.7. He is an Indian citizen having status of non-resident in India for the previous year 24-25. My dear lovable students, even though you are a non-resident, for non-resident the thumb rule, look, for resident and ordinarily resident, the thumb rule is global income is taxable in India. The same way for non-resident, the thumb rule is Indian income will be taxable in India. For that, Indian income include income deemed to accrue or risen in India. In that deemed to accrue or risen, section 9 is the master section. Section 9, subsection 1, class 3 is saying that, my dear lovable students, if you are providing services outside India and if you are getting salary outside India from the government of India, it will be deemed that income has been accrued or arisen in India. That means, my dear lovable students, if the income has been accrued or arisen in India, it will be taxable in India. This is salary. So don't forget to reduce the standard deduction. This much telivu you should be having. And this is exempted under section 10.7. 10.7. You just go to the salary chapter and revise whether 10.7 will be available only for the default tax regime or optional tax regime or both the regimes. Both the regimes. That is a point you should take care. 10.7 will be available whether the assessee is traveling through the optional tax regime or... Come on. Miss Jyoti, a non-resident in India, is engaged in the operations which are confined to purchase of goods in India for the purpose of export. There are 5 exceptions are there. There are 5 exceptions to 9 subsection 1 class 1. If you are coming to India for the purpose of shooting film, if you are coming to India for the purpose of exporting news, if you are coming to India for the purpose of purchase and export, if you are coming to India and show the diamonds, uncut diamonds, are you remembering the 5 exception? Based on this, even though purchase has been made in India and you have completed the export in the hands of non-resident, that income will not be deemed to be accrued or risen in India. She has earned 2,50,000 during the previous year 24-25. This activity will not be tantamount to income accrued or risen in India. So that 2,50,000 will not be taxable. Mr. Naveen, a non-resident in India, has earned 3 lakh as royalty. For royalty, section 9, subsection 1, class 6 is saying something. For a patent right made available to Mr. Anand, who is also a non-resident, let it be there. Where he is going to use that patent right matter. If that non-resident is going to use that patent right in India, then income has been accrued or risen in India. Otherwise, income has been accrued or risen outside India. Mr. Anand has utilized patent right for development of a product in India and 50% royalties received in India and 50% outside India. That doesn't matter. That means since this royalty is an Indian royalty, it has been accrued or risen in India, then the entire amount of 3 lakh should be taxable in India. Are you all accepting? Mr. James, a NRI is not a non-resident, is a non-resident Indian. In the sense means, he is an Indian citizen. Now, for the entire 365 days or less than 182 days only he was in India. Or more than 180 days he was outside India during a particular year. Or he is a person of what origin? Indian origin. Borrowed 10 lakh on 1/4/2024 from Mr. Akash, who is also a what resident? Non-resident. And invested such money in the shares of Indian company. Investing such money is not doing business in India. He is just an investor. He is not the businessman. Mr. Akash has received interest at the rate of how much percent per annum? 12% per annum. You tell me, my dear lovable students, whether this 10 lakh rupees will be borrowed 10 lakh. So 10 lakh is the principal amount. into 12% comes to, is this 1,20,000 taxable, not taxable? In order to be taxable, interest should be Indian interest. In order to be treated as Indian interest, if the assessee is a non-resident, hello sir, non-resident, and number two, if he is getting any interest from government of India, a resident or a non-resident, and all the three people should use that money for the purpose of business or profession in India. Is this condition satisfying? No sir. That means this 1,20,000 is not taxable. Can we check, sir, up to how much level we are correct? For case number 1, as per section 9, subsection 1, clause 3, thank God, because we are correct with the quoting of the section. Salaries including inter alia allowances payable by government of India to a citizen of India for services rendered outside India shall be deemed to accrue or rise in India. The salary received from government by Rahul being a what resident of rupees 7,50,000 for rendering service in Japan would be taxable in his hands after allowing standard deduction of 50,000. Is there any highlight that the assessee is whether he is traveling through the optional tax regime or default tax regime? No, sir. But still, answer has been written with an intention that he is traveling through the optional tax regime. There you can write a note also. Sir, if he is traveling through the default tax regime, he can enjoy a standard deduction of. However, any allowance or perquisite paid or allowed outside India by the government to a citizen of India for rendering services outside India will be fully exempted under section 10 subsection 7. Hence 2,40,000 being allowance would be exempted. For case number 1, ICAI should allot 100% of the mark. Pakka? Case number 2. Sir, there are 5 activities or transaction will not be treated as income deemed to accrue or rise in India. If you are a student, after this lecture, you should go and revise that 5 activity or transaction. Are you all really with me? Be strong with the provisions. Otherwise, you will not be able to apply. Sir, as per that 5 things, one of the thing is, if a non-resident is coming to India for the purpose of purchasing goods in India, and those goods, if he exported, it will not be treated as income has been accrued or risen in. Moving to case number 2. Sir, in case of what resident? Non-resident. No income shall be deemed to accrue or risen in India through or from operations which are confined to the purchase of goods in India for the purpose of export. Thus, income of 2,50,000 arises in the hands of Miss Jyoti would not be taxable in her hands since her operations are confined to purchase of goods in India for the purpose of export. Am I right? Third one, that means for case number 2 also we get full marks. Case number 3, my dear lovable students, Mr. Naveen is a what resident? Non-resident. He got 3 lakh rupees as royalty from Mr. Anand, who is also a non-resident. But that Anand is using the patent for the purpose of, sir, developing a product in India. That means now, from now onwards, it's not royalty, it's Indian royalty. Indian royalty will be taxable in India. That means to the extent of 3 lakh should be taxable. Royalty payable by whom? A non-resident would be deemed to be accrue or risen in India in the hands of the recipient only when such royalty is payable in respect of any right, property or information used for the purpose of business or profession carried on by such non-resident in India or earning any income from any source in India. In the present case, since Mr. Anand is a non-resident, paid royalty of for patent right used for development of product in, the same would be taxable in India in the hands of the recipient, Mr. Naveen, a non-resident, irrespective of the fact that 50% of the royalty is received in India. We were 100% correct with the answer. The last one. Mr. James, a non-resident Indian, borrowed how much lakh? 10 lakh on 1/4/2024. From whom? Mr. Akash, who is also a non-resident. That means one non-resident is getting income from another non-resident. And that interest is not an Indian interest. That interest is a foreign interest. Because in order to be an Indian interest, that amount should be used for the purpose of business or profession in India. Hence, since it is a foreign interest, it will not be treated as interest has been accrued or arisen in. So, can we go and check? Sir, interest payable by non-resident on the money borrowed for any purpose other than business or profession in India would not be deemed to accrue or arisen in India. In the present case, Mr. James is a non-resident, borrowed the money for investment in shares of what company? The interest on such borrowing, 1,20,000 payable to Akash, a non-resident, would not be deemed to accrue or arisen in India. Hence, the same would not be taxable in India in the hands of Mr. Akash. Are you clear? We got actually full answers, full mark. Moving into question number 19. This is a Jan 2021 question. Discuss the taxability of following transaction, giving reason in the light of relevant provision for your conclusion. Mr. Pratap, a non-resident in India, that means they themselves calculated the residential status. This Pratap has not satisfied at least one of the basic condition. So he has given a tag that you are a non-resident. A sum of 1,14,000 from Mr. Anand, a resident and ordinarily resident in India. So who's Mr. Pratap? Non-resident. He has received 1,14,000 from a resident and ordinarily resident. That means from a resident, basically. We have to check for what purpose this money has been received. The amount was paid to Pratap on account of transfer of a right to use the manufacturing process developed by Pratap. That means royalty. Pratap has developed some manufacturing process technique which has been shared with Anand. So Anand is paying 1,14,000. The manufacturing process was developed by Pratap in Singapore. That doesn't matter. And Mr. Anand uses such process for his business carried on him in Dubai. Income, this royalty is not Indian royalty. This royalty is foreign royalty. Hence, that royalty will not be deemed to accrue or arisen in India. Hence, it should not be taxable in India. Is this our answer? I'm going and checking, sir. Consideration for transfer of right to use the manufacturing process falls within the definition of royalty income. By way of royalty payable by Mr. Anand, a resident, and is not deemed to accrue or arise in India in the hands of Mr. Pratap as per section 9, subsection 1, class 6. Don't write subclass B and all. Because a lot of things will be there. Section, subsection, class, subclass, item, subitem, explanation, like that it goes. Don't go and write. Since royalty is payable in respect of right used for the purpose of a business carried on by Mr. Anand outside India, Delhi, such royalty is not an Indian royalty. Such royalty is a foreign royalty. Foreign royalty will not be taxable. I'm moving into illustration number 20. Can we? It's a May 2022 question. May 2022 question. Try to get that 6 mark. This question has been asked for 6 mark. Mrs. Sarika is an Indian citizen. Fine. This is very important for me. Not Sarika, Indian citizen. Is currently in employment with an overseas company located in UAE. Now she's not in India. Now she's working in UAE. She's not liable to tax in UAE. Deemed resident manakkudu. During the previous year 24-25, she comes to India for 121 days. She's very smart. She came more than 120 days. She's in India for 50 days, 100 days, 76 days, 45 days in the financial year 2021, 21-22, 22-23, 23-24 respectively. Her annual income for the previous year 24-25 is as follows. Income from salary earned and received in UAE, foreign income 15 lakh. Income earned and received from house property situated in UAE 2 lakh, foreign income. Income deemed to accrue in India 7 lakh. What income? Indian income. Are you all related to me? Income arising and received in UAE from business setup in India. From business setup in India, Indian income for the purpose of determination of total income, more than 15 lakh or less than 15 lakh, we will include the business income which has been set up or controlled from India. Life insurance premium paid by check in India, she is entitled to claim ATC that we will be coming at the appropriate time if she is traveling through the optional tax regime. Mrs. Sarika has opted out of the default tax regime under 115 BAC. Fine, then we can claim it. From the information given above, determine the residential status and total income of Mrs. Sarika for assessment year 25-26. What would be your answer if income arising and received in UAE from a business setup in India is 10 lakh instead of 5 lakh? In continuation to point number 2, what would be your answer if Mrs. Sarika comes to India in previous year 23-24 for only 45 days instead of 145 days? Actually, this question you should try by your own, and you have to write the answer and you have to go and check the answer. Then you can confirm that whether you have understood this chapter pakka or not. But still, I will try on behalf of you. I'll write the answer. If there is any difference of opinion, you just tell me. It's not my answer. Right, sir? Okay, sir. First point, condition number 1. I will always check that whether that particular person in India for 182 days or more. She was in India only for 121 days. That means first basic condition has not been satisfied. Then I will move into second basic condition. So I will be checking step number 2 to determine the residential status, which is nothing but, what is step number 2? Sir, checking exception. How many exception? 4 exception. I will always check whether that assessee is covering under 4 exception, because if the assessee is covering under 4 exception, my dear lovable students, second basic condition will not be applicable. Am I right? That is the case, my dear lovable students. I'll be quickly recalling the 4 exception in examination hall. Sir, exception number 1, sir, Indian citizen leaving India. That is not happened in this question for the purpose of employment outside India. Sir, exception number 2, Indian citizen leaving India as a member of crew in a ship, Indian ship. Sir, that is not applicable here. Then, my dear lovable students, exception number 3, Indian citizen or person of Indian origin visiting India, not for purpose and all. Sir, who is a chota wala? Who's a chota wala? Or exception number 4, Indian citizen or person of Indian origin who are visiting India, who's a bada wala. Right, sir? Now I will go and check. Sir, Mrs. Sarika is an Indian citizen. Right? Now currently she is doing job outside India. She is going to visit India for how many days? 121 days. Now I want to know whether she is a chota wala or bada wala. You tell me, for her, is the exception applicable? For her, will she fall in exception? She may be either chota wala or bada wala. Now, sir, in case exception is applicable, I have to confirm that whether she is chota wala or bada wala. For that, sir, I am checking step number 3. So, this is step number 1. I will always check whether basic condition number 1 has been. Step number 2, I will go and check whether they are falling in 4 exception. Yes, they are falling in 4 exception. If they are falling in 4 exception, sir, I will check step number 3, whether they are chota wala or bada wala. For the purpose of checking chota wala or bada wala, I should see only Indian income. I should not see foreign income. That means this 15 lakh, I will not consider. This 2 lakh, I will not consider. Hello, sir. Whereas this 7 lakh and 5 lakh, I will consider. Am I right, sir? What is the income? Sorry, man. What is the income deemed to be accrued? Income deemed to be accrued or risen? How much lakh? 7 lakh. Plus one more is there. What? Income arising and received in UAE. That means this is a PGBP income, but that PGBP has been controlled or set up in India. That means add business income of how much lakh? 5 lakh. So 7 lakhs plus 5 lakhs comes to 12 lakhs. Let me ask you a question. If the dash income, total income exceeds 15 lakh, my dear lovable students, they are bada wala. If the total income does not exceed 15 lakh, there only 12 lakh income is there. If only 12 lakh income is the Indian income, they will be categorized as chota wala because it is less than 15 lakh. Sir, if the conclusion, if they are what wala, chota wala, then step number 2, that is basic condition number 2 itself is not applicable. For them, only first basic condition will be applicable, right? Have they satisfied first basic condition? No, sir, because she was not in India for 182 days or more. Am I right? If that is the case, step number 4, sir, what conclusion is, sir? Basic condition number 2 will not be applicable. Only basic condition number 1 will be applicable, but that has not been satisfied. Then I will say that the status of her is non-resident for the financial year 24-25. If she is a what resident? Non-resident. Only Indian income will be taxable. Am I right? Sir, what they want? Sir, determine the residential status. She is a what resident? Are you all accepting? Okay. And the total income of Miss Sarika for assessment year 24-25. Then this 15 lakh is income accrued or raised outside India. Will not be taxable in India. Income earned and received from house property situated in UAE. Will not be taxable in India. Income deemed to accrue or raised in India. Will be taxable in India. Income arising and received in UAE, which is PGBP income. For a non-resident, PGP income will not be taxable in India. And so 7 lakh will be taxable. Sir, they want the total income. Total income means gross total income minus chapter 6A deduction, which is nothing but, my dear lovable students, 7 lakh minus 1 lakh. Sir, 1 lakh ATC. ATC is who and all can see. Resident can see, non-resident can see. That's why government gave 2 eyes. Are you all with me? 1 eye is for resident and other eye is for. That means 7 lakh minus 1 lakh comes to 6 lakh. Have the first part of the answer done? Sir, are you all accepting? What would be your answer if income arising and received in UAE from business set up in India is 10 lakh instead of how much lakh? 5 lakh. Sir, instead of this 5 lakh, take this as how much lakh? 10 lakh. Then, my dear lovable students, 7 plus 10, it will come to 17 lakh. What income? Indian income. What is the wording? Are they saying Indian income? What is the exact wording? Whether to treat it as chota wala or bada wala. What income you should check? Indian income is our word. Other than foreign income. Other than foreign income. So are they talking about the total income or other than foreign income? My question to you is that other than foreign income is before chapter 6A deduction or after chapter 6A deduction. Are you understanding? Here it is 7 lakhs plus 10 lakhs. It is going to be 17 lakh. Sir, whether I have to do 17 lakh minus 1 lakh, sir, or sir, 17 lakhs is the Indian income. 17 lakhs is the Indian income. That means for the purpose of determining whether it's chota wala or bada wala, don't remove the chapter 6A. Because if you remove chapter 6A, his Indian income will fall down. If Indian income fall down, it will be against the government of India. So government of India will not fix the provision like that. Logic? Okay, fine. That means if that is the case, I'm going and checking, sir, situation number 2. So these all are for situation number 1. Here one more table I'm adding situation number 2. Step number 1, whether they have satisfied first basic condition. No, sir. Sir, even in situation number 2, whether they have satisfied first basic condition. No, sir. Step number 2, you have to check that whether they are following in step 4 exception. Sir, they are following, they are Indian resident or person of Indian origin. They are visiting India. Now I am supposed to check whether they are what wala. Is the Indian income accrued or raised will not change. Instead of this 5 lakh, it is going to be, that means it is totally going to be, that means they are, if they are bada wala, step number 4, basic condition number 2 will not be applicable. Altered basic condition will be applicable. What is altered basic condition? They should be in India for 120 days or more plus 365 days or more in the 4 immediately preceding previous year. Sir, don't check only 120 days, sir. You will be gone. John, you will be gone. Instead of 60 plus 365, it will be 120 plus 365. That's it, game over. In that question itself, straight away saying that they are in more than 120 days. Now, 50 plus 100 plus 76 plus 45, sir, comes to 271. That means they are less than 365 days in the 4 immediately preceding previous year. That means even they have not satisfied the, sir, altered second basic condition. That means second basic condition is not applicable. Altered second basic condition is applicable. They have not satisfied the altered second basic condition. And even first basic condition is also not satisfied. So you will be getting the answer for this also as what resident? Non-resident. Non-resident. Right? Yes, sir. Now you have to think that is there any other alternative are there? Deemed resident. Sir, government is saying that if you are dash of India, citizen of India, and your Indian income, that means other than foreign income, exceed 15 lakh, and you are not liable to tax outside India. In India, va? Outside India. Yarad, in India. Sir, and you are not liable to tax outside India. My dear lovable students, you will be treated as deemed resident. That means, sir, step number 6. Section 6, residential status. It's a 6-step approach. Any question you can apply, you will get the answer. Sir, finally, whether that assessee is a what, or generally I used to say 5-step approach. That is for scope of total income. This is section 6, residential status. It's a, any question you apply this, you will be getting the answer. First check basic condition number 1. Whether they are how many days or more? 180 days or more. If they are already in 180 days or more, then why are you digging further question? Then itself first basic condition has been satisfied. Then skip the second basic condition, you can further proceed. Alright, sir. If first basic condition has not been satisfied, step number 2, I have to move into the second basic condition. Before apply second basic condition, first check that whether second basic condition is applicable or not. That's what exception to the second basic condition. 4 exceptions are there. If they are covering in second basic condition, my dear lovable students, skip step number 2, that is second basic condition, and come to first basic condition. You already checked the first basic condition. Conclude that he is a non-resident. That's it, game over. But automatically you have to check that whether that guy is a what resident or not, deemed resident or not. Finally, at the last step, because provision are saying that if a person is not falling under 6.1 only, 6.1a will be applicable. If a person already falls under 6.1, already a guy is a resident and ordinary resident, why are you making him as a deemed resident? Alright, sir. So in this step number 6, man, my dear lovable students, I am checking that whether this guy is an Indian citizen. Yes, sir. And this guy is a badawala. Yes, sir. And this, sir, foreign income is not taxable outside India. Then this guy will be treated as deemed resident. Under section 6, subsection 1a. If he treated as deemed resident, he will be tagged as resident but not ordinarily resident. If he is resident but not ordinarily resident, sir, first of all, he should be a Indian citizen and he should be a badawala. And in foreign country, that income should not be taxable. Then he will be tagged as deemed resident under section 6 subsection 1a. Once he treated as deemed resident under 6 subsection 1a, he will be treated as resident but not ordinarily resident. Clarity. If that is the case for resident but not ordinarily resident, what income will be taxable? Indian income will be taxable. Is 15 lakh? Is 15 lakh? Not taxable because that is foreign income. Is 2 lakh taxable? Not taxable because that is, this 7 lakh will be taxable and this 10 lakh will be taxable because in case of resident but not ordinarily resident, foreign PGBP will be taxable if it is controlled or managed from India. That means 17 lakh will be taxable. On that 17 lakh, my dear lovable students, you are entitled to claim 1 lakh rupees as chapter 6A deduction. The taxable income will be 16 lakh for the part number 2. Pakka? Come on. In continuation to point number 2, this is what point number 2. What would be your answer if Mrs. Sarika comes to India in previous year 23-24, not our previous year. Our previous year is 24-25. For 45 days instead of 145 days. Sir, instead of 145 days. 145 days instead of 45 days. Yes, sir. Because she came only for 45 days. Here also 145, yeah. Answer what answer? 145, 50 plus 100 plus 76 plus 145 means it will go 365 days. That's it. Then John, you are gone. Then no use in reading the question and interpreting. Can I go? 145 is the date, man. So the below, instead of 145, it is 45 days. Sir, okay, fine. Quickly, 1 second, we can change the answer. If it is 145, it is more than 365 days. That means in the current year, she was in India for more than 120 days. And in the 4 immediately preceding previous year, she was in India for 365 days. That means she has satisfied the altered second basic condition. If she satisfies the altered second basic condition, she will be treated as resident, but not ordinarily resident. Resident but not, then deemed resident concept will not be applicable. We are having control. Yes, sir. Mrs. Sarika is an case number 1. Is an Indian citizen in employment in UAE. She come on visit to India during 24-25 for 121 days. Her stay in India in the 4 immediately preceding stays, previous year was 371 days. 300, which is more than, because it's not 45 days, man. 1 is missing, 145 days, 371 days. So if that is the case, my dear lovable students, she has not satisfied the first basic condition, right? But she has satisfied the altered second basic condition, because, sir, for her, exception will be applicable, right? Altered second basic condition. So altered second basic condition has been satisfied. If you satisfy altered second basic condition, you will be treated as a resident. Come on, man. Computation of total income of Mrs. Sarika, excluding income from foreign sources. Sir, I'm going to check income from salary earned and received in India, income from foreign source, and it has to be included. Sorry, it has to be excluded. Income arising UAE from a business setup in India to be included in business is controlled from India, even though such income accrued or received where outside India. This should be taxable. Income deemed to accrue in India, 7 lakh, should be taxable. Is this data there? Oh my God. What house property? That is where from a house property situated in UAE. UAE. There is one more line in the question. Income accruing and arising in India. How much lakh? 2 lakhs. Sir, that means income earned and received from house property situated in India. Abdin pota. Appa kuda 30% standard deduction you have to reduce. Okay, fine. That means 2 lakh, man. Subtotal comes to 14 lakhs. Less deduction under ATC. LIC premium paid by check in India, assuming other condition has been fulfilled, total 1 lakh. So total income excluding the income from foreign source are how much lakh? 13 lakh. Now read. Mrs. Sarika, an Indian citizen, having total income other than income from foreign source, not exceeding how much lakh? 15 lakh. And visiting India. So he is a resident in India for assessment year 25-26. If she stayed in India for 182 days or more, since she has stayed only for 121 days, she will be treated as a what resident? Non-resident. For assessment year 25-26, her total income during the previous year would be, I will tell you what are the highlighted points. There are 1 or 2 mistakes in the question, that you leave it. Just understand the concept. Sir, first of all, my first question to you. Have she stayed in India for more than 182 days? Okay, fine. Now I am going to check the second basic condition. Before I check the second basic condition, I will first check the exception. How many exception? Have she falling in one of the exception? Yes, sir. Then I have to classify her into chota wala or bada wala. Whether to treat it as chota wala or bada wala, if the total income other than foreign income exceed 15 lakh, then she will be treated as bada wala. Right, sir? Sir, here total income means after what 6A deduction? Chapter 6A deduction. This is the highlight point. This is the highlight point in this question. My dear lovable students, Sir, total income. Sir, in any of the earlier question, this provision is there. Any question number can you say? Any provision is there? Question number 8, 10, 11, 12, like that. Or I have to move into the original provision. Look at the provision, man. Sir, Indian citizen or person of Indian origin visiting to India has total income. Sir, what is total income? Gross total income minus chapter 6A. Right, sir? That means here you have to reduce the what 6A. Chapter 6A. It's not like government don't want to unnecessarily treat a person to be a badawala. That means now you tell me, is the intention of the government good or bad? Good. Earlier, we categorize government as bad. Why? I will tell you. In exam, student will be having confusion that whether to reduce that 1 lakh rupees chapter 6A or not. Government is saying that you don't have to check the gross total income. You have to check only the total income. So here, the total income is 13 lakh, which is less than 15 lakh. Are you all agree with me? If that is the case, my dear lovable students, he is not a bada wala, he is a chota wala. If he is a chota wala, second basic condition itself not applicable, coming only to the first basic condition. Sir, that means he has to be in India for 182 days. She is not in India for 182 days. She will be tagged as resident. See, non-resident. Are you all agree with me? Since she is a what resident? Non-resident. Sir, only Indian income will be taxable. Salary accrued and arisen in UAE will not be taxable. Am I right? Income accrued or rise in India, 2 lakh will be taxable. Assume that in question 1 line is that income accrued or rise in India. Income deemed to accrue rise in India, 7 lakh will also be taxable. Income arise in UAC from a business setup in India, this will not be taxable because this will be taxable only in the first person and second person hands. It will not be taxable in the third person hands. Pakka. So gross total income is how much lakh? 9 lakh. From that, reduce the chapter 6A. Chapter 6A 80C. If you are traveling through the optional tax regime, you are entitled to get the chapter 6A reduction. My dear lovable students, this sir, total income will be how much lakh? 80 lakh. Case number 2. Sir, if income arising and received in UAE from business setup in India is how much lakh? 10 lakh instead of 5 lakh. Her total income other than income from foreign sources during the previous year will be 18 lakh. Am I right? In such case, Mrs. Sarika, an Indian citizen having total income other than income from foreign source exceeds how much lakh? 15 lakh and visiting India during the previous year 24-25 can be resident in India for the assessment year 25-26 if she has been in India for 120 days or more but less than 182 days in previous year 24-25 and during the 4 year immediately preceding previous year 24-25 for a period of how many days or more. Since she has stayed in India for only 121 days during 24-25 and her stay in 4 immediately preceding previous year is 371 days, she would be a resident in India for assessment year 25-26 and by default she would be a resident but not ordinal resident. What is simple provision? If her Indian income is more than 15 lakh, she will be treated as badawala. For badawala, second basic condition will not be applicable. Altered second basic condition is applicable. Altered second basic condition is saying that she should be in India for more than 120 days. Yes, she is in India for more than 120 days. And in the 4 immediately preceding previous years, she should be in India for 365 days. Yes, she is in India for more than 365 days. Hence, she will be treated as resident. She will be treated, she has satisfied the second basic condition, then she will be treated as resident. Don't go and check the additional condition because she has become a resident by satisfying the altered second basic condition. For those people, it will be deemed that they are resident but not. In such case, income arising and received in UAE from business setup in India would also form part of what income? Total income. Sir, that will be taxable? No. Additionally, that will be taxable? No. According to her, total income would be 18 lakh, which is nothing but already her income was 8 lakh. Now, there is an increase of 10 lakh or 5 lakh. How much? Instead of 5 lakh, it has become 10 lakh. Earlier, she was a non-resident. Since she was non-resident, this entire 5 lakh was not taxable. Now, this entire 10 lakh is taxable. That's why I am adding 10 lakh to it. So, 10 lakh plus 8 lakhs comes to 18 lakhs. Pakka? If Mrs. Sarika comes to India in previous year 23-24 for how many days? instead of 145 days. So in original question, it is 145 days. And now you are changing. She would not be a resident in India for previous year 24-25 as per 6.1. Since her stay in India in 4 immediately preceding previous year would be less than. However, since she is an Indian citizen having total income excluding income from other source of 18 lakh exceeds the threshold limit of 15 lakh during the previous year and not liable to tax in UAE, she would be a deemed resident of India by virtue of 6 subsection 1A. The deemed resident is always a resident but not. In this case also, our income would be taxable will be 18 lakhs. Are you able to apply? Beautiful question, man. Already from 21 to 27 we have completed. Now I just have to go back to question number 1, 2, 3. I just have to read the scope of total income. You have to tell me whether it is taxable or not. By that we are 100% complete with the residential status and the scope of total income. Can I read question number 1? Already residential status we have derived. In that residential status, answer is, look here. The answer is here. The total stay of Thomas during is less than 180 days during the 4 immediately preceding previous year. Therefore, due to non-fulfillment of any of the 2 conditions for resident, he would be treated as what resident? Now keep that as a he's a non-resident. With that, you say these 3 things are taxable or not. Interest received from Michael, a non-resident outside India. The borrowed fund is used by Michael for investing in India's debt fund for earning interest. My first question, sir, this non-resident is getting interest from another non-resident, and that non-resident has not been used that money for conducting business or profession in India. Whether this interest is Indian interest or foreign interest, foreign interest will not be taxable in the hands of non-resident. Easy. Sir, not taxable since interest payable to a non-resident to another non-resident would be deemed to accrue or rise in India only if the borrowed fund is used for the purpose of business or profession carried on by him in India. In this case, it is used for investing in India's company's debt fund for earning interest, not for the purpose of business or profession. Hence, it is not taxable in India. Already discussed one. Second one. He is also engaged in business of running news agency and earned income of 5 lakh from collection of news and views in India for transmission outside India. Sir, 5 activity will not be treated as income accrued or risen in India. Sir, in that one of the activities collecting newses. That's what we have discussed in exception to section 9 subsection 1 class 1. Am I right, sir? After 7 we have discussed. I'm just highlighting what are the 5 things for your, sir, understanding. Business with operation where partly outside India. Sir, if business with operation partly outside India, for that part, it will not be treated as accrued or risen in India. Purchase of goods in India for export. Just now we have done one part. Collection of news and views in India. This point. Shooting of film in India and display of rough diamond in special notified zones. All this I have highlighted, man. Since this activity will not amount to accrued or risen in India, sir, this will not be taxable in India. No income shall be deemed to accrue or risen in India to Mr. Thomas. Through or from activity which are confined to the collection of news and views in India for transmission outside India. Hence, rupees 10 lakh are not taxable in India in the hands of Mr. Thomas. Third income. He entered into an agreement with ABC & Co., a partnership for transfer of technical document and design for providing service relating thereto to set up a steel manufacturing plant in India. That means this guy is a non-resident. This guy provided technical services to a company called as ABC & Co. This ABC & Co. don't know how to set up a steel manufacturing plant. He said that don't worry, I will make setup for you. So he got royalty for technical services. My dear lovable students, that royalty has been received for set up a business or profession in India. That means it will become an Indian royalty. Sir, he charged 15 lakh for this service from ABC & Co. You tell me whether that will be taxable in India. Now go and read, man. Rupees 10 lakh are deemed to accrue or rise in India to Mr. Thomas, a what resident? Since it represents either royalty or fees for paid for service utilized in India. In this case, for set up a steel manufacturing plant in India. Hence, the same would be taxable in India in the hands of Mr. Thomas. Question number 1 clear? Question number 2, my dear lovable students. Yes, this question we are supposed to discuss. Question number 2. Mrs. Sunida question. First, I will be coming and checking what is the final status of a residential status. Sir, therefore, due to non-fulfillment of any of the two conditions of resident, she would be treated as non-resident. Now you have to say the answer with a mindset that assessee is a, she received the following gift from a relative and friends from 1/4/2024 to 30/3/2025. So the assessee status is a non-resident. From parents of husband. Is parents of husband relative? Yes, sir. That means IFIS will not be applicable because this is from relative. From married sister of husband. Sir, married sister of husband. This guy is Miss Sunida. Sunida is having one husband now. That husband is having married sister. Sir, brothers and sisters of the individual. Brothers and sisters of the spouse are relatives. That means this is also relative. Otherwise also that is 21,000 rupees only from this. It should exceed 50,000 in aggregate. From very two close friends, that's it, gone. John, you are gone. Of her husband. Husband is relative. Husband friends are never relative. Of rupees how much? 1,41,000 and 1,21,000. So 2,62,000 is taxable. Come on, man. Residential status and scope of total income. This is nil, nil, and 2,62,000. Total income is 2,62,000. Are you able to appreciate? Illustration number 3. This question we got a big hit. Period of stay we learned from this question. That question only. During the previous year, he earned the following income. First, I will be finalizing what was the status. Yes. For the previous year, Mr. Raghu would be resident, but not ordinarily resident. Okay, sir. So you have to think from the angle of resident, but not ordinarily resident. Salary of rupees 15,80,000. Entire salary is paid by Indian company in his Indian bank account. 15,80,000 will be taxable, but you have to reduce the standard deduction. 15,80,000 minus 50 or 75,000 as the, that's what they are saying. 15 lakh minus 50. 15,80,000, yeah? Okay, we will make into 15 lakh. Easy. All right. Dividend amounting to 48,000 received from Treat Limited, a Singapore-based company which has transferred to bank account in Singapore. Income accrued or raised outside India and income received outside India. Is this PGBP income? No, sir. Hence, it will not be taxable in the hands of resident. That's why it is nil. Are you all really with me? Interest on FD with Punjab National Bank, Delhi. Income is accrued in India, amounting to 10,500, was credited to his savings account. What is his age? 62, sir. That means he is a sir. He's a senior citizen. He's an individual. And he should be a resident. No question. He's a resident, but not ordinarily resident. Resident and ordinarily resident are resident. Resident but not ordinary resident are also resident. Only non-resident are not resident. Yes, sir. That means he can enjoy Chapter 6A deduction under 80 TTB, my dear lovable students. Sir, 80 TTB up to 10,000 he can enjoy. Maximum will be 10,000, 10,500. 10, that is for 80 TTA. 80 TTV, it is 50,000. Hence, because of that, entire 10,500 can be enjoyed. You will claim, but your hand will go for 10,000. That is for 80 TTA. For 80 TTB, maximum, either the interest income or 50,000 will be allowed. That's it, man. Balance total income you will be getting. Are you all really with me? That question also knock off. Sir, illustration number 4. That's it. That is simply with regard to the total income. Sushant question also I think we have done. This type of question we have already done. Question number 6, Mr. Krishna. We have done. Yes, sir. Yes, sir. Here only we got big hit. Mrs. Sai question we have done. Am I right? Any question, anything to be discussed pending in these 27 questions? Avladhan, sir. That means we can officially declare that we are through with the first slot of the discussion, which is residential status and scope of total income. My dear lovable students, if you are thorough with 5 slots, your brain be ready for this. Slot number 1, residential status and scope of total income. This will come for 8 mark in exam. sorry, 6 mark in exam. Sure shot, 6 mark in exam. And slot number 2, sir, clubbing, set off and carry forward and chapter 6A deduction. Chapter 6A deduction. This will be 6 plus 4 mark, a 10 mark area for exam. In the coming slot, we are going to step in to that 10 mark. We are going to grab that 10 mark out of 50 mark. You know, 10 by 50 is something 20%. Am I right? Very important. Important. Very important. Very, very important. Come on, man. Slot number 3 is TDS, TCS and advanced tax. You know, this is a minimum 6 mark area for exam. 6 mark area for exam. TDS, TCS and advanced tax. And slot number 4 is filing the return of income. Filing return of income. And here we can add AMT also. Filing return of income and AMT. Alternate minimum tax. Sir, this is a 4 mark area for examination. And slot number 5, which is head of income, which is salary, house property and IFOS, which is a 10 mark area for examination. From yesterday I show you. It's a 10 mark area. That means minimum if you are thorough. In that already you have scored 6 mark out of 50 mark. We are going to add another 10 mark. That means 6 plus, sir, 6, 12 plus 6, 18 plus 4, 22 plus 10. This itself you can surely score 32 mark in exam. And first computation of total income, another 15 mark. That means 32 plus 15 comes to more than enough out of 50 mark in examination. Sir, my life will be rest in peace, sir. That's it. Sir, I'm with you, sir, from your heart. Anybody is there? Where is a grand clap? In the coming slot, we'll be start with slot number 2, which is clubbing, set off carry forward and chapter 6A deductions.